All right, guys, let's jump in. I am Marina, the trader chick, and this is me. So I have an interesting question for you guys. And funny enough, I'm about to be going back to Cirque du Soleil with my son. Who here likes Cirque du Soleil? Let me know in the chat box. I would love to know. Yeah, Michael, it's -38. And Mark, there's no ice in Tampa. Very, very true. So I live in Barcelona, and right now Cirque du Soleil has come to town. So me and my youngest son, we have this tradition that we go together because my husband is Papa, and our oldest son doesn't really like it. So it's a thing that me and him do. It's kind of become our tradition. So we are super into it because I'll be honest, I am a humongous lover of Cirque du Soleil. There is something incredibly special and different about them. So why am I talking about Cirque du Soleil at a traders summit? Because here's the thing, right? The performers of Cirque du Soleil are ordinary humans who are doing extraordinary things. And this kind of hit me one time when I was watching and just completely mesmerized with what they were doing, that at the end of the day, they're truly just ordinary people who have become extraordinary. And it's very similar for how a successful day trader can do it as well. Everybody is an ordinary person that can do extraordinary things, right? So how does one become extraordinary at anything that they do? So a really good example is with the Cirque du Soleil, because we can obviously see how extraordinary what they are actually achieving, right? And it starts with their commitment. Right? Like, we have no doubt in our heads whatsoever the amount of training and perfecting they are doing of their mastery, right? It is like a given, because if they don't train, they're never going to be able to get up on a high wire that's 60 feet off the ground on a bicycle, right? Chances are they will fall to their death. Their intense focus and being completely in the moment. Back to the same, example. When you're on a high wire with your bicycle, even if you have years of training, you still have to be so in the moment. You can't be on Facebook, right? You can't whip out your cell phone and start being on Facebook or Instagram and TikTok, right? You're going to fall to your death. Bam. It's that focus, their discipline. They show up regardless of what is going on day in and day out. They show up, they are there, they are so present, and they are committed. And the other thing is they have total trust, right? They have total trust of their equipment, of their partners, of themselves, of their routine. That trust, that confidence, that comes with years of training, of practice, of constantly being committed to what they are doing, right? They have full trust completely in everything that they're doing, and confidence, right? They are oozing confidence. And why is that? They're not born with confidence. That's because when you are training, when you are perfecting over and over again, honing your craft, you build that confidence through practice, through years of dedication, right? So that's what makes anybody extraordinary. Right here is a perfect example. These three, first of all, have complete and total confidence in their equipment, but they also have complete and total trust in each other. Look at their confidence. Look at their focus, their understanding of what is happening. They have been doing this routine for years and years and years, and they understand every intricate part of it, right? That's how they are able to do it. So what do the Cirque du Soleil performers, directors, and the choreographers and day traders have in common? It's way, way more than a lot of people think, right? Because at the end of the day, we hear that only about 5%, and I would say 5% is even a lot, between 1 to 5% of day traders are successful. So why aren't the other 95 not? So basically, at the end of the day, is they lack what the Cirque du Soleil people do, right? And what successful traders do. And what is that? What is it that makes them different from the other 95%? Since I can't go into all of it, I am going to be focusing on a couple of really specific things that, if just today alone in this presentation, will definitely take you to that next level, and that is a for sure. We're going to get super specific, and this alone will completely take you to that next level. What is the one thing that I really want to focus on today? And that is trends. Everything in day trading, it's all about trends. I look at trends like a tightrope, right? Once you learn how to walk that tightrope, you could add in all those other really cool acrobatics with 2 people, 3 people on bikes. But if you don't know how to just walk the tightrope, if you don't understand just the basic trend, you're not going to be able to understand and implement all that other stuff to make it really good. Now, I have created a worksheet with this entire presentation that you could get completely free. Just go here, makingofadaytrader.com. Go to makingofadaytrader.com right now, makingofadaytrader.com. You will get the entire presentation that you could watch as we go along, and also when you get the replay. All right, but before we jump in, I want to do a really quick, fun intro, because a lot of times we forget that we are people who are sitting in front of our charts, right? Cirque du Soleil performers are people before they step foot on that tightrope. And we bring our humanness, our personality to whatever we are doing. So I am Marina, the Trader Chick. I am an expat. I'm living right now in Barcelona. Me and my family have been expats for over 20 years. We first lived in Costa Rica, then Guatemala for 14 years. And we moved to Barcelona a little bit less than 1 year ago. And I always get people during my presentations asking me about how to become an expat, because I've been an expat for so long. I'm super happy to talk to you all about that, but I recommend that we do that kind of privately, because it is different than the conversation so about trading. And the other thing is that, yes, you could trade from anywhere in the world. There is absolutely no excuse today. So you can, if you have it in you to be an expat, you could definitely become an expat and trade professionally. Okay, before I became a day trader, I was actually a fitness instructor and a travel writer. Why am I telling you guys this? Because a lot of times people get caught up in the idea that you have to have a engineering background, economic background, a financial background. None of that is true. None of that is true. Anyone can become a day trader. And that's why I even show it that I was a fitness instructor before. I'm still a travel writer, because to us, travel is not a luxury. It is a necessity. And I've had my travel site for over 18 years at this point, and I'm still doing it, right? So I'm also trilingual. And the main reason why I bring up being trilingual is, I'll explain to you why. First of all, I am a Soviet Union refugee, meaning that I was born in the Soviet Union. Russian is my mother language, but we moved to the United States when I was really tiny. And instead of learning English, I had to just continue learning how to speak, and English just came to me. So English is my main language. However, I learned Spanish when I was in my late 20s. And when you learn a brand new language, there's a whole process, right? Like you have to practice it, translate, dedicate, all of this that goes with it. And I'm now fluent pretty much in Spanish, but when I realized that the market has its own language when we are trading, and I started to look at it as learning a new language, everything changed for me. Everything changed for me. And when I bring this up, a lot of times people start to be like, oh my goodness, you're right. If I start to look at it as another language, I could also learn what the market is saying to us. Because once we really understand what the market is speaking to us and reading how the market talks to us via charts, everything will change, and you will be able to completely take your trading to that next level. And we will be focused on that today, because trends is literally like reading sentences, right? And the coolest thing about day trading, you could do this from anywhere in the world, guys. Anywhere. There's no excuse. Internet works absolutely everywhere. And before COVID, I used to do a lot of in-person presentations. Today, I mainly do online because I prefer it so much more. Now, remember, makingofadaytrader.com, makingofadaytrader.com. You can get the entire presentation. All right, guys, let's get back to the essentials. Every performer starts with learning the basics. This is how every single person grows, and that's how we earn our confidence and our trust, right? You start from the basics, you master the basics, and then you start to build on to that by adding new routines and moves. But if you don't understand the basics, everything will fall apart. Another good analogy that I usually give is we cannot put in windows without our walls, right? The windows will keep on coming and crashing down. Our walls is that foundation. That is literally what gives us that structure. That's how we're going to be building on it, right? A performer begins on the floor. They are not going to be getting on a tightrope on 60 feet off the ground when they can't even walk it 1 inch off the ground, right? So they start with the basics, with the beginning. And that's what I want to focus on with day trading, because a lot of times we overlook these really important parts, and then we end up constantly falling, or like I said, windows constantly keep on crashing. So we can start by learning 4 basic strategies that are all increments of the trends. And this is how you are going to be able to truly grow as a trader. So if you ever think of a tightrope walker, they start one small, tiny little step at a time before they can get up to 60 feet off the ground onto bikes holding an acrobat in the middle, right? You don't do this by not first learning how to walk the tightrope, by not first learning how to ride your bike about 1 or 2 inches off the ground on a tightrope, right? Because otherwise you completely fall to your death, and they understand that. So let's get ready to jump on our tightrope and to truly dominate it. Now, trends. We all know that there are 3 trends, right? Like we all understand logically, logistically that there are 3 trends. We have the upward trend, we have the downward trend, and then we have the sideways trend. The sideways trend is probably going to be the most important trend of all. Why? Because this is literally where all of our money gets lost, because this is a place where we end up doing or making, I should say, wrong decisions. However, once you're able to spot the sideways trends, once you're able to understand those sideways trends, everything becomes better. You not only are going to be able to profit more, but you also be able to hold on to money by staying out of bad trends, bad trades. And that is what we are going to be talking about today. All right, so let's begin with the upward trend, right? It's pretty understandable, right? What is an upward trend? It's when each pivot is higher than the next, right? Each pivot is moving up, up, and moving higher and higher. This is where we enter a buy. This is where we go long. What does that mean? It means pure and simple, enter low, exit high, take your money in between. That's all there is, right? You're entering a buy, you're going long, you're entering at a lower price point, exiting at a higher price point, boom, taking the profit in between. Downward trend, literally the exact opposite. When each pivot is going further, each pivot is going lower than the pivot from before, right? It's a downward trend. Pretty easy to understand. This is where you enter a short. This is where you are selling. What does that mean? Literally means you're entering high, exiting low, and you're taking the profit in between. This is when you are shorting the market. You are entering at a higher price point, exiting at a lower price point, and you're taking the money in between. All right, guys, it's super simple to understand. This is shorting the market. Don't overthink it. Don't do anything else about it. That's what it's all about. All right, so let's work on understanding what these consolidation areas are all about, because I literally call these a trader's worst enemy. And learning how to spot them and how to avoid them is going to completely change your game in trading. So what is a consolidation area? It's a channel, right? It's when there's absolutely no momentum. It's indecision zone. It's the exhaustion pattern. It's the chop. It's where there is no real momentum, where there's no real movement. It's just bouncing between 2 areas, right? There's no real area, no trend there. Consolidation area is where you would call like that sideways market, right? That channel where there's absolutely no decision, like there's no real trends. Do you really want to be putting your money into a place where there's complete indecision? The market is not really sure what it's going to be doing? No, you don't. You want to be putting your money in where there is a very significant, very confirmed, strong trend, right? So here is the consolidation area. This is what a consolidation area looks like. What exactly, why is this a place where the majority of people end up losing their money? I can guarantee you, if you go into your, I guess, like a back testing area, like your journal, where you keep records of all your trades, and you look exactly where you end up losing the majority of the money, it's usually in a sideways area. Why is that? So the reason is, a lot of times it's just psychological, it's emotional. We think that we can outsmart the market, we could beat the market, or we could predict what the market is doing. For instance, when there are two types of traders out there in the world. There's only two types, right? There is the trend is your friend trader, and when they see this kind of a movement, when they see this sideways market and they see that it's been an upward trend, they're going to say to themselves, you know what, the market's been trending up all day, it's going to continue, I'm going long. Then you have the other category of traders, which is the contrarian trader. They are seeing that this market is going up, and they're saying to themselves, you know what, the market's been going up all day, it's got to correct, I'm going to short the market. But the reality is, and this is what I want to really, really talk about, is reading what the market is telling us right there in front of us. The market is literally telling us, I'm not sure what I'm doing. I don't know what I'm doing. And if you are a pro trader, you're going to sit and you're going to wait until I give you confirmation of either breaking out and continuing in that direction, or completely transitioning and changing the direction altogether. That is what the market is telling us. So yes, it's understandable that you're going to get to a market when it's just starting to go into a sideways market and you're not really sure about it, right? But you have to also understand, you got to stop, because now it is in that sideways market, right? And you need to stay out entirely. This is what consolidation markets look like. Okay, there are flat areas, you break out and you continue on. Now, how can we spot these areas before they take all of our money? The reality is that we have to understand how to spot these areas. And the thing is with market is that the market respects areas, right? It revisits areas. And we, as the pro trader, as the individual retail trader, we need to respect that market. We need to understand what the market is doing, what the market is telling us. Okay, and that is understanding areas. What are areas? The areas are support and resistance, right? They are support and resistance. Are you guys able to hear me okay? Can you guys let me know if you could hear me? Is my voice still interrupting? I don't know what that means. Is that, you mean breaking up? Oh, okay, sorry about that. Okay, so, okay, am I okay now, or am I still in and out? Can you guys hear me? Is it still in and out? Okay,
Marina,
it's better now. Yeah.
you've been fine on my end. I think it might be the individual's connection.
Okay, cool. Okay, thanks. Okay, so let's talk about areas, support and resistance areas, because to me, these are the most important areas. I like to think of support and resistance areas as our safety nets, as our security blankets, as our seat belts. What do I mean by that? Here's the thing. I'm going to go back to that 5% of successful traders. That means 95% aren't. Think of this. If you guys could think of Formula One, we all know what Formula One racing is. I don't care if you guys like it or don't like it, but you all know what it is, right? It's crazy racing that they go at 225 kilometers per hour around bends, around turns. And it is a well-known fact that during Formula One, racing season, 25% of the drivers have either a massive accident or a fatality, right? That's pretty crazy. So whenever they're going to get into their car, do you think they're just going to hop in and go? No, they're going to have a helmet. They're going to have a fireproof uniform. They're going to have several seatbelts on to protect them, right? This is their seatbelts. Traders, we need to protect ourselves. Support and resistance areas is our seatbelts. So when you draw in these areas, you're showing yourself that this is an area that the market is revisiting and that you need to stay out of it. What is a support area? I call the support area, it is the floor of the market, meaning it is going down, right? It is from a downward trend, and all of a sudden, boom, it's hitting this wall, this floor over and over and over again. Whenever it's, excuse me, 3 times or more hits, that's the floor, right? That is showing us that the market is respecting this area, and we need to wait it out to see what it's going to do, because it could completely transition out. It could continue going down, or it could also give you a FOBO, which is what we're looking at right here, a fake out breakout. But we can avoid all of that by understanding the way support or resistance areas work. Support area, the floor of the market. Okay, it is an area where it is keeping the choppiness, the channel restrained, contained, I should say. Resistance area, right? This is a ceiling, the ceiling of the market. It is the ceiling. Okay, what does that mean? It means that the market is hitting an area over and over and over again, right? It is an area that is revisited by the market. And we as the traders have to respect that, because a lot of times it could revisit that area a lot of times. And what does that mean? It means that if you are in a trade and if you decided not to put in a resistance area or ignore it, or you think that you're going to be able to predict what the market is going to do, guess what's going to happen? You're going to be stopped out. Okay, so if you understand that, you can protect yourself from entering those trades. Okay, and how do we do this? So yeah, we see that this was a resistance area, support area, but you have to draw it in. All right, so one thing that we do have to invest in with as far as trading, it would be a charting software. And today there's actually quite a lot of really great charting softwares that are at any price range. However, one thing they all do have is drawing tools. It doesn't matter if it's just one line or if you could actually draw in rectangles, whatever, but you have to draw in these areas, because mental resistance and support areas are as stupid as mental stops, right? Because what is a mental stop, guys? Mental stop is, imagine you are getting into a car and you decide to put on a mental seatbelt on your baby, thinking that you're going to be able to save them during a car crash, right? So when you guys are in the live market and you're looking to the left and you haven't drawn in your resistance or support areas, you are in high adrenaline mode, almost pretty much as a Formula One racer, because your live money is on the line. Guess what? You are not going to know why you are being stopped out. You need to draw these in. This is crucial. Now, a lot of times people say to me, well, how do you spot these areas before they really become areas? And this is my personal favorite. And actually, I live by this. This is my personal holy grail. Reversal areas and divergences. This is how I could recognize what is happening, and I live by these. So what are reversal areas? Double tops, triple tops, double bottoms, triple bottoms, head and shoulders. Okay, this is what a double bottom looks like. And on top of that, I personally live for divergence. What is divergence? Okay, I personally use only 2 indicators. I use EMA lines and the MACDs. The MACDs, for me, I love them the most because to me it is the least lagging indicator out there. But there's many other indicators that you guys might enjoy. I know that RSIs are also a really big one. So how do I use divergence? As you can see here, I have a perfect double bottom, right? But look at the divergence between my price action pivots versus my MACDs. Okay, so if you actually go back a little bit more, you will start to see that even though my price action is going down, My chart, my MACD is already giving me a really flat area. That is showing me that there is massive slowdown and that there is weakness in the trend. Whenever I see any weakness, I'm out. I'm out. Why? Because I'm a conservative trader. I want to hold on to my money. I don't want to put in money where there is weakness. I want to be in where there is massive strength with the market. Now, when I am recognizing there's triple tops, double tops, triple bottoms, double bottoms, even head and shoulders, and then divergence on top of that, I am completely out of the market. Does that mean that it's going to reverse? No, not at all. Very high potential of reversals, but it's not guaranteed. But what it is guaranteeing is that I need to stay out until the market is giving me massive confirmation, because my money is hard earned, right? I work hard for my money. I don't want to just be putting in on something that I think maybe will work out. No way. It needs to be at least 80% chance that it is going to work out. Now, putting all of this together, I want to talk about the breakout areas, right? Because we all know that breakouts are probably one of the highest probability trades out there. So how we can't possibly spot a breakout trade if we don't have a resistance or a support area drawn in, because we won't know when it is breaking out, right? So what is a breakout area? I'm going to explain to you again. I want you guys to have this presentation, because that you could go back to it. The entire presentation has everything that I'm talking about, everything. And you could also ask me, you could write to me and share your charts with me. So please go to makingofadaytrader.com. You could get the whole presentation for free. Now, let's really focus on breakout areas. Like I said, you cannot have a mental resistance or a mental support, right? You need to be able to draw this in. So what exactly is a breakout? Look, it's pretty simple. Imagine you are driving north. You're driving to go, just straight north. You've been on this highway for ages. You know this highway really well, but all of a sudden there's a construction zone. And they're telling you to get off the highway because they have to fix that area of the highway. And you're freaking out because, you have no idea if there's going to be more detours, if there's going to be construction zones, if there's going to be a place for you to get back on the highway. So what happens during that construction area? You're in complete uncertainty. You're in complete doubt. At least I am. I'm totally freaking out. I don't know where I'm going. I don't know this area. I don't know if they're going to send me back on the highway. Do I want to put money on the fact that I will be getting back on the highway? Do I want to put money on the fact that I'm going to go home? No, because I'm completely uncertain, right? That is that area of consolidation. But then all of a sudden, the construction worker's like, you know what? If we fix the highway, get back on that highway and continue in the same direction. That's a breakout. That means that I have broken through and have continued. That is the breakout, guys. Okay. Again, you have to understand how it is, and we have to focus on when that happens. And that is through the support and resistance areas. And like I said before, I use my MACDs. They are my holy grail. So you could see below here where the MACDs are, there is this dashed line. The dashed line is actually the zero line. The zero line is where there's absolutely no strength in the market. But all of a sudden, you can see my resistance area is broken, and boom, it flies up completely far away, and then it retraces back to my EMAs. That's where I enter the trades. That is how I enter trades. Okay, that is how I know that the market has moved forward. Did you mention how much is required per trade? No, we're not talking about how much is required per trade, because everybody can do different trades of the different amount, right? It's kind of like saying, will I buy one Apple stock or will I buy 100 Apple stocks? That all depends on the person who has the money, right? So it's up to you what you're going to do. The goal is to know when to buy that Apple stock. The goal is to know when to not enter until it is showing you the process of it. That is the most important thing. A lot of people forget you cannot put in your windows if you don't even have your walls built in, right? It's impossible. Your window, it doesn't matter if it's a tiny window or if it's a humongous window, it will collapse because your walls are not there, because you don't know how to put it in properly. Okay, and that's something super important. Now, another really important bonus tip, another super important bonus tip, and you can learn this from Cirque du Soleil, is that they dominate one market. They dominate one market. This woman is not going to get in the next act of motorcycles running, driving around in a cylinder, right? Because that's not her thing. I cannot even tell you the amount of people who quote unquote want to trade and they're like, I want to trade futures, Forex, I want to do stocks, I want to do options. Guys, you need to pick one. Be the master of the one. When you dominate that one month, one instrument, one financial market, that's when you can start to make real money and move on to other markets. But until you dominate that one, you will never dominate any. And as a matter of fact, you will continue losing. That is the most important thing of all. Think of the Cirque du Soleil performers. They dominate one. There's a reason, because they know once they dominate and master that one, that's where they can excel. Dominate one. Is it stocks? Is it futures? Is it Forex? It doesn't matter. Just make sure you are doing well on that particular one. Okay, so why do traders do that so many times? Who knows? All right, so look, guys, here is the reality. We have absolutely everything we need to take action. We have everything we need to take action. But we have these live presentations, we have YouTubers, we have different gurus, we have different books, podcasts. But at the end of the day, how do you know that you're doing it right? All of this is great, but the real question is, how do you truly get started? And this is not from beginners. I get this question asked by seasoned traders all the time. What can I do to turn this around? How can I become more profitable consistently? And like I mentioned earlier, lacking the understanding of the basics really is what it's about. A lot of times we overlook those basics, and once we master those basics and fully understand what the market is saying, the sky is the limit. Look, imagine you, okay, like we right now, me and my husband just had this experience. Our oldest son just learned how to drive a car. When he first sat in the car, we're like, okay, in the driver's seat, we're like, okay, you gotta put your gear into first, make sure that the clutch is on, the brake is on. Now you're gonna release by putting it into first. He's like, clutch, gear, what are you talking about? Because we have entered that car thousands of times. To us, it's just second nature. But if you don't know how to even turn on the car, how to hold on to the steering wheel, you're not going to be able to take off, right? Now imagine, completely get your mind open. Imagine somebody enters your car who has never been in a car, and you're like, okay, buckle up your seatbelt, it's going to save your life. And they're like, seatbelt, buckle up my seatbelt. Oh my God, this is going to save my life. But what is a seatbelt? Because you never explained to them what a seatbelt is. Then how are they going to know, right? The reality is that we're not born with this information. And this was my own personal sad truth when I spent over $20,000 of my own money. And yet I struggled for years because every time I was asking these questions, can you please explain divergence? Can you please show me how to draw a support area? I was either ignored or treated as if I was born with this information. And you're not born with this information. And I ended up losing almost $4,000 in 5 minutes because of that, overlooking the basics. And after that, you know what? I just quit. I quit. But the reality is, all of us are here for one reason only. It's because we are all bit by that trading bug. We are all bit, and we never stops itching. And do you know why that is? Because deep down inside, we know that we can do this. We know. I quit. I ended up I totally left for like 4 months, but I still kept on coming back. And I was watching others do it successfully. And I was like, if they could do it, I know that I can. And that's when I came back. But this time I came back, I stripped my charts of 10 indicators. I had 3 monitors. I literally donated 2 high definition monitors to my garbage men, and I went bare naked charts, price action, until I slowly put in my 2 indicators. And that's when I decided to focus only on the basics. And then a couple of years back, one of my students goes to me, he's like, you know, Marina, your philosophy, your teaching is very similar to Coach John Wooden. I was like, who the heck is this guy? Who's Coach John Wooden? I never heard of him before. Of course, I went to look him up, and he was this legendary coach. Legendary, right? I mean, he's top of the line. And his entire coaching philosophy was, when in doubt, get back to the basics. I mean, this guy had accolades that to this day I don't think anybody could compare. 88 national championships, 10 NCAAs. He trained superstars, A-list basketball players. Yet every season, he would start with the basics, regardless of how many national championships they have under their belts. He would start with the basics: how to tie your shoe, how to dribble the ball, how to roll up your sock. Why? Because it doesn't matter what you know in your ego, and a lot of times your ego is going to get in the way. If you're on that court and you didn't tie your shoelace properly and your shoe falls off and you sprain your ankle, guess what? You're sitting out on that bench. You're going nowhere because you need to be on top of the basics. And today, for you guys, I have a very special offer for participants only. It's my introductory course, Bootcamp for Day Trading. You could do this on any apparatus: desktop, laptop, tablets, phones, Androids, iPhones, it doesn't matter. And all of this for $97. Now, I want you guys to come right now, right here, get in the moment, go to your navigator, go into your browser and put in bootcampfordaytrading.com. Bootcampfordaytrading.com. Bootcampfordaytrading.com, so you guys could follow along, because all of this, the entire course that I'm offering only for you guys right now, is $97 one time. One time, $97 fee. There's no recurring fees, $97. So here's what you guys will get for that $97. But first, what do you normally get for $97 today? Do you guys play golf? Is there any golf course right now that allows you to play for $97? Chances are not so much, right? We like to play golf once in a while, and it's never been less than $125 per person. You want to take your family or your friends out to lunch? Good luck. Me and my husband go out to lunch sometimes with one glass of wine, and it's about $90 for the both of us, right? You cannot invite a whole family out today in this day and age. $97. So let me break this down for you. Again, you can go here, bootcampfordaytrading.com, and follow along. It's all written out for you right there. You will get the whole simplifying trading package. As I mentioned before, you need to have a platform. I will help you with that setup. 30-minute tutorial, because the whole point is learning quickly so that we can move on to the fun stuff, the trading, right? We will go into the market breakdowns, the anatomy, the uptrend, sideways trend, downward trend, understanding those reversals, those divergences, so that you guys are on top of it. And this is all free indicators. You do not need to pay for anything at all with that. Understanding those telltale signs, those reversal patterns, the support and resistance areas, how to spot them, how to draw them in, and divergence. Like I said, my holy grail. I love divergence, and they have kept me out of so many bad trades and allowed me to enter so many good trades because of that. And we will be mastering the breakout. The breakout, the power of that breakout is incredible. Okay, understanding when it happens and to avoid those fake out breakouts, and you can avoid them. Okay, so important. And you'll have unlimited access to the curriculum. All this is valued at $1,600. You will get all of this in that course. But first, before I go in and tell you the bonuses, here's what some of my students, which I have students all over the world, are telling me. I just finished this bootcamp, best money I ever spent. You are the only mentor that truly, truly checks the work. Thank you so much for all you do. I'm so enjoying your bootcamp. I'm learning every day. But let me share something really, really important with you. Remember, I asked you, how do you know you're doing it right? How do you know you're doing it right? So I have taken out the questioning, and I am giving you, with that $97 one time, one entire month, one-on-one live coaching mentorship with me. That is included in the $97, unlimited one-on-one. Just this alone is priceless. And on top of that, having a mentor is really what is going to help you get to that top. And on top of that, I also have a live trade chat room where it's me, not any moderator, not any administrator, where we sit in the live market taking live trades together. This is on top of the mentorship and the curriculum. So this is what you guys will get. Whole thing is valued at $2,600. For you guys, $97. Bootcamp for daytrading.com. All right, here's what you guys will get. Everything in the course. 30 days one-on-one coaching, mentorship with me, and 30 days live chat room. Bootcamp for daytrading.com. So here's the reality. And I'm going to be very blunt with you. I know for a fact that this is less than one trade that we take per day. How do I know? Because I know that the average trade is between $200 to $400, $97, and you will get 10x return on your investment to take your friends out to 100 of these types of dinners. But here's the reality as well. Here's the thing. I can only take 25 people. Why? Because I'm doing the mentorship, right? I can only really help at most 25 people, so I can give you my full attention. And my goal is for you to have my attention so that we work together. Now, put in right here into your browser, bootcamp for daytrading.com. And this is what you guys will see. This is the order form, and you will see right here, $97 one time. You get everything at once. If you do want to do a payment plan, I have for 2 times, $59. But even so, the first time you will immediately get all of the everything that is included, and you can start working with me immediately. So let's go here right now. Bootcamp for daytrading.com. Bootcamp for daytrading.com. Okay, guys, bootcamp for daytrading.com. Let me know if you guys have any questions at all and anything at all. And I just wanted to say thank you for being here. Thank you so much for being here. The fact that you guys have taken the time to be here, that's a big, big deal, right? Because a lot of times we don't even think that we need the education or to really learn. So for $97, you guys can work with me one entire month. You'll get the entire curriculum. You'll be up and running with your charts and everything. And again, thank you so much. And thanks, Rob, again for having me. Happy New Year. And I'm super excited to have you guys in the course. Looking forward to working with all of you. Thank you.
Thank you twice, Marina. I just love how you simplify everything so anyone can understand and succeed at the art of trading. Very powerful. Your market analysis is always great to listen to. Great stuff. Thank you so much for taking the time out of your day to join us today on Traders Corner. Ladies and gentlemen, that was Marina, the Trader Chick Villatoro. I've put her links in the chat box, and you can find her at www.thetraderchick.com. Marina, happy everything to you. We can't wait to have you back.
Thanks, Rob. Bye, everybody.
Very
Thank you.
welcome. That brings us to our next presenter, who's been a trader and training educator for over 4 decades. He has over 4 million views of his 4-minute drills for traders found on YouTube. He's a former commodity specialist for Payne Weber and has managed extremely large trading accounts as a commodity trading advisor. Here to present the one thing that turbo boosted my prop trading qualifying is Mr. Norman Hallett of The Disciplined Trader. Welcome back to Traders Corner, Norman. Check your mute button, Norm.
Oh, there you go. Was that the same Marina that was on The Sopranos? I don't think so.
No, a little bit of a different one, but we love both of them.
She's great. That whole that whole support resistance thing that she does. She really kind of mentioned it here, but she's very, very good at what she does. Really glad to be following her. I trade a little bit differently, and you know, trading is all about style. So, shall I begin, Rob?
Please do.
Okay, here we go. Well, let's talk about the one thing today.
I gotta say, I'm excited to see the one new thing. So
yeah, this is a brand new presentation. I made it to my in-house people. They really loved it, and I really want to try to slow down my presentation a little bit and make a couple of really valuable points. The idea of limiting your losses is really, it helps you in so many different ways. Not only the bottom line, but as you know, Robin, I'm hell bent on the psychology of trading, and I build that into all of my trading plans that I build. And the idea of limiting your losses when you trade is part and parcel to staying confident, what I call having a positive expectation. But I want to talk about the one thing, the one concept today that really turbocharged my personal investing and trading in prop trading, of which I'll talk about at the very end of the presentation. What I'll be covering today is who the heck am I? Why should you maybe listen to a few of the things that I suggest and perhaps join me in trading and let me help you to do the thing you want to do, and that's make a profit. What is the one thing? I'm going to get into the one concept that has a few different tentacles to it, but I think if you grab just the one thing concept, all of those tentacles will pop into your head, and you'll realize that there's a lot of things that you could be doing that you don't do because of a particular acceptance that you've made prior to every trade. So I'm going to discuss that in detail in a moment. And the last thing I want to do is bring you current to the prop trading landscape, the prop trading where you're trading somebody else's money and receiving 90% of the profit. And I want you to understand what that means in today's market and what it means, of course, to risk management. Okay, let's get into it. Who am I? I graduated from the University of Cincinnati. I have a math degree. I started actually as an engineer. My brother is a world traveler, as a civil engineer, followed in his footsteps, but really wasn't for me. I couldn't get through mechanics the first time, and I was a straight A student in high school. I wasn't a straight A student in college. Somehow I never really learned to study. I had a photographic memory, and that really got me through high school pretty well. But you got to learn how to study in college. It took me a couple of years to learn how to do that. Anyway, I added up all of my degrees or all of my course math and decided the quickest way out the door was a math degree. So that's what I got. That's what I own. But then getting into college, I paid for my own college, and Cincinnati was a work-study school where I went to school for a quarter and then worked for a quarter. It was a 5-year degree. I was in the restaurant business. Being a waiter was the way to make some cash and work at night while I was studying during the day. Worked at a restaurant called the Prime and Wine. If you're in Cincinnati, you knew that restaurant. Kind of burned down a couple of decades ago. But if you own one of these cars, for instance, I think you may be able to retire from trading and just sell that car. It's in good shape. This was actually in the 70s, and the Prime and Wine restaurant was one of those salad bar restaurants with the sneeze shield. It was very popular at the time, and this was one of the most popular restaurants in Cincinnati. But I realized at some point that, and I wound up being a waiter and then a manager, and I realized that the real money was in the drinks, was in the alcohol. So I skipped over I was hired by a company called American Events Corporation, and they were putting together clubs around the country to challenge Studio 54. And because I had some qualities that they liked in that area, they hired me, and I knew the restaurant and nightclub business, and I opened the first club for them in, if you're from Milwaukee, Wisconsin, 500 North Water Street. You probably remember the club if you were back there in the late 70s, early 80s. We never quite got to the level of Studio 54, but it was $1,000 a year membership, which was a lot of money back then. We had the dancing girls and the dancing guys, and we had the lit up dance floor. It was a heck of an experience for me. Taught me a lot. I would go in there, hire everybody, train everybody, work there for make sure everything was going well for 3 months, and moved over to the next club. But that is you talk about a trying business. You're up late at night. It's tough. You can't do it forever. So I decided this isn't for me. What could I do? Where could I use my math degree? Maybe I could be a trader. Maybe I could. My brother was big on gold at the time, and he was influencing me on that. So I jumped in my car. I dug my car out of the snow. I quit my job, and I drove to Cincinnati, and I had my first trading experience there. I looked in the paper, and there was a firm selling gold and silver options on the telephone. and looked great, and a lot of sharp guys and gals in there. So I went in there and I worked there for a couple of weeks. I walked in one day, and here's what the office looked like. Everything was gone. I said, what did I get myself into? The guy owes me a commission. I made a sale, owes me. So I took that plant and I put it in the back of my car. And and I remember because the landlord was following me. You can't take that. They owe me rent. I said they owe me money too, and that was my commission the first time around. But that got me the taste of what it's like to be in the commodity business and the futures business. It took me about a year and a half to join one of the largest option firms in the country, and within a year and a half, I was running a large trading room I had 60 traders under me, and I was a very fast learner in this. We had screens, we had, and this isn't exactly the picture, but this looked a lot like the trading room that I had. I couldn't find any old pictures of it. I don't know if any were even taken. But my job was to make sure that these traders were trading responsibly for their clients. They were trading other clients' money. And I noticed one thing that I learned in this arena was that the brokers that were on the top of the list as far as doing well for their clients had the simplest and clearest trading plans. Those that had so many indicators and there was so much it looked good in one sense, but it didn't have this indicator. If everything didn't fall into place, sometimes they'd have no trades. Well, if you're not in the market, you have no trades. Not that you should go in irresponsibly, but there's a happy medium, and the medium is to recognize certain things that are important, like momentum. So have RSI or MACD, but not both. Why do you need both? I mean, there are some arguments why one does a little bit, but they're both momentum indicators. Choose one that makes sense to you, that you've tested, use that one, etc. So all indicators, they tend to overlap. It's your job to make a simple trading plan. And I got so good at it that I started writing books on how to design and construct effective trading plans. I think this one is it was written a good 20 years ago, 15, 20 years ago, but I've also been quoted on stage for some of the things that I believe in trading. And so I've been around for a while, and I'm really dead set on getting traders out of that 90% of struggle and into that 10% of winning. And that involves mostly risk management. When you start to lose, your confidence unwinds. If you can if you can stop the large losses that you even prescribe when you take a trade, you're going to be better off. Let's get into now what the one thing is. I want to first talk about the importance of placing stops. There are some arguments with some very, very experienced traders. I still don't buy it. You can't get much more experience than I am, and I always put my stop in. Whenever I put on a trade, I want to, and it's different for everybody. Some say 1%, 2%. I think those numbers can be kind of big, unless you're trading with small money, and it's hard to get away from not risking 3 or 4% on every trade if you're only trading $5,000. It's very hard in the market. I mean, there are micro contracts that can help you do that, but in general, micro contracts don't get you where you want to go fast enough most of the time. You're always looking to go after the full contracts, but that is one area of risk management, taking on smaller contracts. I always say you should think big, but trade small and let the leverage work for you. But I always, mental stops, I don't know. I don't think so. Mental stops, there's too many times where traders were in that room and they got up for a cup of coffee, they came back and the market took them out. Mental stops are not good enough. It doesn't take a lot of effort to put your stop in to make sure that if the market does turn against you, then you have a number of bullets left in your chamber. Okay, so stops are important, and here is the concept here: all or nothing. Okay, when you put in a stop, most of the time, or all of the time, for struggling traders, that stop says I'm either going to make money or I'm going to get stopped out. It's an all or nothing concept that traders seem to adapt. Well, all or nothing concept is not what you want. When you put in a stop, it is only the initial stop from the current environment that makes sense in the current environment. As the markets trade and you move away from your trigger, the environment changes. Okay, I'm going to get into that, but in a nutshell, this is the heart of the concept. In other words, start with protecting yourself with a stop, and then adjust the stop or exit the trade when the environment changes, as opposed to putting in the stop and watching a market go sideways and saying, hey, this is okay, I'm still in it, I'm still in it, I'm still in it, and it still looks like a good trade, and you're moving further and further from your trigger, and that trigger has less and less effect as time goes on. You've got to adjust your stop as the market matures. And I'm going to show you a couple of ways to do that. There's a lot of different ways. You probably know most of them, but I'm going to stress them here because I think this is the important concept. This is the one thing, not to commit yourself to the proposition that either you're going to get stopped out or you're going to win. All of that middle ground is workable, and I'm going to show you what I mean by that. The one thing solves the difficulty of taking a partial loss. Okay, in other words, the things that you can do in that environment between the trigger and the time spent trying to develop the trade that's not happening, there's a difficulty in taking a partial loss because you've committed to the idea that it's all or nothing, that you're going to either get stopped out or you're going to make money. Okay, and no middle ground. Just because you set a stop loss, it doesn't mean you have to stay in the trade if it's not developing. Psychologically, you wrongly accept a full loss. I'm going to stop right there and just go on to say, the further you move away from your entry trigger, the less influence it has on price, and the more you should be looking to exit and preserve equity. Just took a drink of water. Why don't you take one yourself? The number is 6. It's been a magic number for me. It used to be 5, but now I'm seeing it's more 6. Don't know why, but I'm going to show you what that means. This is the important concept of what happens when you move away from your trigger and you're still accepting a full loss. Let's look at the one thing in an example. This right here, these two candles represent one of our basic loaded gun trading plan trigger. I'm going to offer you the loaded gun trading plan at the end of this. But I wanted to show you, this is one of the triggers. You can see that it looks like a barrel of a gun pointing higher, and this is the trigger area. But my wife doesn't like the name of the. I shouldn't have called it something like loaded gun, but I thought it looked like a gun, so I put it up there. In any event, when it crosses, this is the 8-bar exponential moving average, which I believe is, and many traders with experience think it's kind of the golden mean, the golden moving average, the 8-bar exponential moving average. I used a couple of them, and you can see how simple my chart is. I often trade off this chart that you're looking at with maybe an RSI at the bottom, but that's it. And right here is a buy signal. This is a buy signal in my system. So if one were to buy here, I would be looking for a move higher as we broke through this. But look what happened. The market went sideways. 1, 2, 3, 4, 5. Well, of course, I put my stop in here, so that's important. The trigger's here, and the stop goes underneath whichever the lowest price met. You're going under that. If this happened to be a lower, we would have. So whatever, down here is your stop, okay? The market continues to trade in a sideways fashion. And here's the 6th candle. By the 6th candle, we are far enough from my initial trigger to say, hey, this is not working out. You know, I mean, my system is a 68% jump off the trigger system. And when it doesn't happen, when I'm in the midst of one of those, 31 percenters, I'm looking to get out. I'm looking to limit my loss. Why wait for the market to come all the way down and take me out? 1, 2, 3, 4, 5, 6. By the sixth candle, my rule is that I'm out. I'm out by the sixth candle. I'll spend time in the sixth candle, whatever. There is one exception, and that is if I decide to stay in, I'm going to recognize that we've got a sideways pattern. I'm going to move my stop at least up to the bottom of that. And if we break down, most of the time I am out at the sixth candle. But those that I teach this, sometimes they still want to stay in. Hey, it's a green candle, means it may be coming up again. I want to stay in it. So raise your stop from here to here, maybe even a little bit closer. This is not the perfect line. Maybe you want to put it in here, just a tick under here. And if the market starts to fail, what you've done is you've saved this money. You've saved about 35% of what you were willing to get stopped out when you made the trade. This is an important concept because these 30 and 40% add up. Okay, they add up and they add up quickly. This particular concept, when I've showed it to some of the students that I help one-on-one, one of the bonuses I'm going to give you is that we can work one-on-one with this, and is that these savings that you make when you're preserving capital like this, because the market has moved away from your trigger and is no longer maturing in the right direction, it becomes a 50-50 game. We're not here to go 50-50. If you're wrong, you're wrong. You got to admit it. You got to admit it. And in this particular case, that's exactly what happened. Okay. You can see another trigger right here. This is very similar to here. It's not as strong a trigger, but I put my stop again under here. By the sixth candle, I'm not going anyplace. Now, in our system, you actually would have taken a quick scalp here, and the second position would have been here. But the idea here, what I'm trying to say to you is that as we move away, although the market gave us a nice move higher, it's not maturing more than that. So by the sixth candle, if you're not moving in the right direction, get out. And in this particular case, look at the money you're saving here. Why limit yourself? You're taking a very small loss. You got in here. The market matured a little bit, but somehow because you won, you want to win more. Some put in a break-even stop. That can work too. But my point here is that if it's not working for you, find a process to get out of your trade before somehow you've conditioned yourself to say, hey, the market's nowhere down here. It's still way up. It still looks good. It's still holding this bottom here. Whatever you're convincing yourself, by the time you move 6 candles from your entry point, you really should start thinking about getting out. You should be getting out. I get out at the 6th candle probably 80-90% of the time. The only time I won't is when I see something like this where all the bottoms seem to be lined up. I'll risk from here to here a little bit more risk, but I'm not accepting my original stop. And that is the point. That is the one thing. The fact that you put in your original stop doesn't mean that's where you're going to take your loss. You've got to understand the market as it develops. Okay. One other thing that I want to point out, another example is when the market moves. This is another moving average we use to keep us out of trades. I noticed that Marina was talking about not getting faked out or getting faked out of breakouts. I use another moving average here to leave us out of fakeouts, but that's for another discussion. In this particular case, if a market moves too far from the moving average, when you see a candle like this, you start saying, this is the answer to my dream. This thing is going, okay? But when it moves so far from the moving average, you're going to get a snapback. So rather than allow the market to come all the way back down, look for a reason to take your profit after here. Now, this right here is a very decisive combination of candles. It's an engulfing pattern. where one candle engulfs the other in the opposite direction. All of the trades here in the body are covered by all of the trades here in the body in the opposite direction. This is a very strong reversal pattern. I'd be out here, and you should be out too. Okay, I mean, yes, you want to dream, but all you're going to start to do is to spend time. This market, after a move like this, it more likely goes sideways and accumulates. There's another factor I want to just mention, and that's time. Getting out of this trade allows you to move into another trade and maybe in another market and stop your concentration on here, going to a new trigger that you know works almost 70% of the time, and take advantage of a new trigger and a new potential, as opposed to trying to squeeze more out of what you got. It's a dream. Your dream of it's from dream to reality. We always think this is the big one. Now, sometimes it can be. That's why we're in it. But don't believe yourself most of the time. When you see a reversal, obvious reversal, take your profit here. Don't let it come all the way down. Why lose this money? Why risk the profit? Why give back what you did? So again, the one thing talks about not allowing your initial, certainly here was initial, but when you, this now is a profit, why give it away? Okay. We're looking at a similar situation here. This first example was in a couple of days ago, well, actually last week, in the ES contract, the S&P contract, and this is copper, which I like to trade. Here's another entry signal. So it's similar to what we saw before. Look at this, but look right here. We've extended. Now right here, I'm thinking, oh my God, this thing's going, right? I'm not thinking, but somebody with maybe less experience or high need will say, hey, this is the one. But look what happened. We're 1, 2, 3. We're already, the sixth candle, 1, 2, 3, 4, 5, 6. We're already challenging the golden line. Why not take your profit here? But if you stayed in this long. But here is again, that engulfing pattern happens often, more often than you think, after a big move like this, as the market decides where it wants to go. But this is deciding it wants to accumulate. So you've got that going. And here is again, we're back to that original example, and look what happened. It just continued to go sideways after that, after our engulfing pattern, and just continued to go sideways until it finally broke down. Okay, so my point here is that do not accept the fact that you have your stop down here doesn't mean eventually you would have gotten stopped out here. Incidentally, why? 1, 2, 3, 4, 5, 6. 6 is the number that I use. So I wanted to. I wanted to express one other thing, one important thing, now that I've really gone into what the one thing is, and that is not accepting the fact that you put in your stop, and that's exactly what you're going to lose unless you win. It's not the way you should be thinking. A lot of new traders think like that. They test like that. Trading plans are talked about as being profitable, even though even though it's hard to be tested the way that most trading plans need to be tested. In any event, again, another discussion. But in today's trading environment, the best approach to risk management is trading someone else's money and being paid 90% of the profit. In fact, the firm that I use, that I trade through, paid me 100% of the first $25,000, and then 90% after that. Now, you could be a CTA. Rob mentioned the fact that I was a commodity trading advisor. I was managing several million dollars, several million dollars, and I would earn 20% of the profit that I made. 20%, not 90%. Now, I was trading much bigger money, but the idea of risking someone else's money, if you're a responsible person, that's a lot of pressure. It's even more pressure than your own money, especially when you have a reputation, so on and so forth. It's your business, a lot of pressure. And so I got out of that and started to, again, trade my own money, and it worked out much better. Commodities, but I wanted to bring out that you can trade somebody else's money if you're willing to be a commodity trading advisor, take all the tests, pass all the tests, background checks, and all the testing that it takes. But why, when you could be a prop trader, proprietary trader? And that's what I'd like you to consider. You talk about risk management. Imagine trading and not even risking your money, but being paid the vast majority of the profit that you make. I mean, how can they do that? I'm going to tell you how they can do that. And the prop trading firms, they're going to fund you for $50,000, $100,000. I now have $350,000 accounts that I'm trading, plus plus 5 other $50,000 accounts, and I can trade them really all at once with something called a trade copier. Won't get into that, but if you're new to this, I want you to consider starting with a $50,000 testing. I want you to test and get funded for $50,000 because that's the quickest way to see money into your account. I'm going to show you that in a second. I trade through a company called Apex. They're the biggest and they've been around the longest. I've run a study. I'm going to show you that study in a second. And I'm actually, this is 7 accounts. I think I've got, there it is right there. That's the last 150. Let's see, 1, 2, 3, 4. I think I've got one more 50 that's not here. But I'm trading $700,000 right now of their money and earning 90% of the profit. I wanted to show you, this is another company, Top Step, that I started with, but I moved over to Apex. Both of these companies are very good. Right here is my first $1,000 that they sent me back in May. I think that was back in May. And what happened was, it's kind of like, remember I showed you the restaurant business and like the first dollar that we earn in the business, we put up on the wall. And so that's what this was about. Okay. I put that up on my wall. But there are prop firms. There are 7 top prop firms. I hired somebody to take a look and measure these prop firms and to determine which was the best one. This is a study of the 7 top prop firms. And if you'd like a copy of this study, just write this down. Admin at the not you, Rob, but this is just for those that are interested here. Admin at thedisciplinetrader.com. If you write me, I'll get this today. And if you write me, I'll send you this study, and you can take a look at these numbers of each company. But here's a blow up of the winner, which is a company called Apex. Their average monthly, they paid out to people like me and maybe you upcoming $6.5 million a month on the average last year. This is way more than others have paid out. They've got a high rating on Trustpilot. Even though I have my issues with Trustpilot, it's nice to see a firm that is asking you to pay them every month to test and know that they're legitimate and so on. Well, 4.8 out of 5 is a pretty good rating. And they have traders from 150 different countries that they pay out to and who test. You've got to qualify first, and then you get funded. I'm going to show you a little bit of that. But here's a blow up of part of that, what I just showed you. This is the 50,000, and you can analyze this on your own, but I just want you to focus on this line right here, the $50,000 account. Now, this is the monthly charge. $167, but that's never what they run specials all the time. In fact, sometimes they have 90% off where you're only paying $16. Right now it's 70% off. You're paying $45 a month to test to be funded for $50,000. So if you think about the money that you've lost in the last year or whatever, a couple of months or monthly, if you've been a struggling trader, $16 to $30 or $45 that it is right now for almost $50 a month is nothing to be testing for being funded for $50,000 account where you then start making 90% of the profit. In the $50,000 to test, you've got to make $3,000 before you lose $2,500. Okay, from your open trade high. I won't explain exactly what that is, but simply put, you've got to make $3,000 in that 50,000. If this 50,000 becomes 53,000, you're funded. You're funded, and you start. And I can't give you all the details, but that's as simple. It's pretty much as simple as it is. But I want you to, get into it on your own. But understand that it's very simple. I've shown you really, but 90% of traders fail. I don't care if you're doing this or you're trading on your own. If you don't have a good trading plan, and you're not a good trader, you're just going to keep paying these fees. And they know that 85, 90% of the people that come to them looking to trade their money are going to fail. They live on this money. They live on this. And when if you blow out the account, if you do hit this $2,500 limit, you can start again by paying them $80 or $40 if they have a special to reset the account. So these two fees, the monthly fees and the reset fees, they're just 90% of the people are just paying those with this dream because they're not risking money. They think that they're going to win anyway. Now there is a lot of anxiety that goes away when you're not trading your own money. And so you can, it makes it easier to follow your trading plan. You start to get into a rhythm. But the idea is that don't worry about I mean, they're paying me 90% of the prop. Again, they paid me 100% of the first 25,000 I make in each one of those accounts, and then 90% after that. They can do that because what they want out of me is to brag about them, is to say, hey, this, and so they can suck in the next 10 people. I can help them suck in the next 10 people in order for them to collect fees from 90% of them. They want us 10%. They want to be paying the good traders 90% so that we can brag about it and tell our friends. So because I have built trading plans for years and written books on it, I've developed a trading plan that is really customized for passing the finities of some of these rules that they have, and they're not complicated. Won't get into them today because they're not really they're not really worth talking about here because they're very simple rules that are easy to adhere to. The idea is that if you have a trading plan that can help you do that, it just goes much smoother. Okay. If you, I wanted to give you this link, everybody. This is the disciplinetrader.com/apex. This is a constant link that will always drive you to their best deal. I mentioned that they always have deals going on, 60%, 70, 80, 90% off. Whatever best deal they have, this is what I've asked them to do because I'll be talking about them, that this link will always lead to their best deal. Now you won't usually see it until the final page. It'll look like the deal that they presently have, but when you get to the final page, you'll see the difference. You'll see this best deal that they have, and you'll always get the best deal using this link. So the disciplinetrader.com/apex. If I'm moving too fast, email me at the other email I gave you before, and I will. I'll make sure that you get this link if you've missed it. Okay. So for passing the prop trading, this is what I'm offering today. It's called the Loaded Gun Simple Trading Plan, and it's got the core Loaded Gun Trading Plan. It's only a couple of videos, about 45 minutes long. That's how easy this trading plan is. It's how simple. Remember, I showed you that big room where I learned that simple is good when it comes to trading plans. This videos gives you all the rooms. The whole trading plan fits on one sheet of paper. You get all the nuances. Nuances are optional things. You notice, remember when I was lifting the stop and I said sometimes I won't get out at the sixth candle, but I'll find a way where the accumulation happened. I put a line under there. That's a nuance to me. It's not breaking any rules, but depending on who you are as an individual, I'm willing to take a little bit more of a risk to stay in a trade sometimes if I think the environment is well, rather than get out at the sixth bar, which is a rule. I can nuance that rule without exposing myself to a lot more risk. That's what the nuance is about. There are 7 of them currently and 2 in the testing stage. Again, these nuances are part of what helps you breeze through passing the prop trading exam. It's not an exam, it's a testing. They give you the platform, they give you the data feed. You're not paying for any of that. You're only paying that monthly fee and any reset fees. We have a private Facebook group. If you hate Facebook, I can show you how to go incognito. But really where we all get together is the monthly get-togethers. Every last Wednesday of the month, we all meet, and there's recordings if you can't make it. And we talk about our experiences with the Loaded Gun Simple Trading Plan and some of the new triggers that we have and so on. We talk about our experiences. In fact, there are a lot of really experienced traders using this because they do understand simplicity. And the suggestions that we have, I've engaged into the trading plan to even improve it more. So it's, trading plans are ever evolving things. You've got to have the basics, and then depending on market personalities and the market you're trading, there are certain things that you may want to do. We talk about that in the monthly get-togethers, but the core stuff is really where the money is going to be made. Okay, and in those monthly get-togethers, we share experiences. Again, we have the recording if you can't make it. I want to give you a bonus one, unlimited one-on-one coaching with me for 90 days. As soon as you invest in the Loaded Gun Simple Trading Plan, you're going to get an email with a calendar link. We'll be able to schedule a personalized one-on-one walkthrough with me, and I'll proceed to learn about your trading background and advise you how to get a quick start with your new purchase. And as you perfect running the plan, I'm going to be there if you need me as many times as you want. Some people like to talk to me weekly, every other week for that 90 days. Whatever it is, I want to be there to make sure that you understand the simple trading plan and what you need to pass your evaluation. I want to hold your hand. I want to work together with you to pass the evaluation phase so you can get funded, because then you'll be on your way, okay? And again, you'll come to the meetings and we'll talk about your successes, but I want to be with you in the beginning every step of the way, okay? So it's a 90, and the 90-day clock starts when you say, if you've got something to do this week, or you want to learn, want to go through the material first, the videos and nuances, and then you want to start your one-on-one with me, that's when your 90-day clock starts. So I don't want to get, into the minutia of counting days. Listen, I want to get you going, but some people say, well, I want to, does the 90 days start when it'll start whenever you want it. Whenever you want to start, look at the material first, but that 90-day clock will start. When you're ready to go, I want to help you pass the evaluation, okay? And the magic of one-on-one coaching, it's personalized, it gives you immediate feedback, confidentiality and trust. You get to know me, I get to know you, both our weaknesses and strengths. It's a tailored learning style. I'm going to understand your experience level. If you're a detailed person or right to the point, I can show you how to adjust the way you trade. Rather than fixing you from an impatient person to a patient person, let me show you how to find more triggers and get in and stay in the market and stay the way you want it in the market, and as opposed to somebody who would rather stay out of the market and look for what they consider the perfect. Traders are different, but it's easier to change your trading plan to fit you than it is to have you try to fit your trading plan. I'll show you how to do that with some of our nuances. Flexibility of scheduling. You're going to choose the time. I'm going to give you my calendar, and you choose the time. And the depth of exploration. You can't do it with emails and texting. You got to talk to somebody, okay? And we're going to go face to face so I can get you through the funding stage, okay? When you're accountable, you get things done. Accountability is really the key to one-on-one. When we meet, I may say, hey, look at this, work on this, and let's meet again in 2 weeks. Let's meet again next week. Don't waste any time. You can do it in a week. Let's meet again. I want to check your understanding of it if it's something that I notice about you personally. So one-on-one is really a magic in the coaching. Your processes are usable by every trader for every trading style. Tools have helped me increase my profit ratio, etc., and job satisfaction. Alan, a real estate investor and almost now full-time trader, now the real estate is tough. It's all become real with the first deposit. When the first deposit came through my checking account, I can't thank you enough. That's from Brian in Kansas City, who's a part-time trader. And I wanted to show you this, somebody who purchased on 12/10, that's on a Saturday. The Thursday following, he was already using the system and making profits. So this is a quick thing. In fact, let me show you how quick. Oh, let me give you the second bonus. I'm going to set it all up for you. It's done for you. It can be a little bit complicated with the data feed and setting it all up for you. I've got a guy. Apex and Top Steps have the more advanced setups, can be confusing to some tech challenge traders like me. So I'll connect you with my young genius. His name is Brady, and he'll jump into your computer and he'll set it all up for you, okay? And Roger used it. We charge $150 for the service, but I'm going to give it to you here as a part of this package. All in all, really went well. His cursor darted back and forth without it. He gets into your computer and sets it all up for you. Just watch him do it. Anyway, I'm going to make sure that all you have to do is start trading, okay? So the entire offer is Loaded Gun Simple Trading Plan, the core, the nuances, Facebook group if you're into that, the monthly get-togethers, which you really want to try to make, or at least look at the recordings, unlimited one-on-one coaching with me for 90 days. Clock starts when you want, hands-on setup. of the data feed and trading platform, where all you have to do is start trading and start qualifying. And my personal guarantee, I'm so confident that you're following the Loaded Gun Simple trading plan will result in you getting funded by your prop firm so that you can risk their money and not yours, and yet still receive 90% of the profit you generate. Just share your trading experience with me that you met and followed the simple rules and it didn't work for you, and I will refund your purchase price plus $500 for your trouble. That's a pretty good guarantee. And I just want to show you real fast. This is January. Today is the 13th. Today, if you purchased Loaded Gun today and you looked at it over the weekend, and on Monday you set up your prop evaluation, it won't take you long to learn. These videos, the whole thing is about 3 hours worth of videos, even if you look at the 15-minute nuance videos. Here is the prop trading evaluation. So you set it up, you apply for it, and you get your prop trading, the evaluation set up, and you start evaluating. It takes you, I'm going to give you 2 weeks, and right here, you've passed your evaluation. You work with me on one-on-one a couple of times. You pass your evaluation, you get funded, you start trading, and the 15th to the 20th of every month, you can request a payout. Okay, if actually there's two, from the 1st to the 5th of every month, and from the 15th to the 20th of every month, there's 2 periods where you can, when you have profit, you say, I want 1,000, I want 2,000, I want 5,000, and they'll pay you. In this particular case, I'm going to give you I'm going to give you a couple of weeks here to make a profit on your $50,000, and then you'll request it one of these 5 days, and then or is it 6 days here? One of the 5 days, 6 days, and then you'll be paid the next week. I'm usually paid right about this area, about 5 days after the 20th, 5 or 6 days. And so you've got a 5-day request period. Payday is here. Okay, so I want to show you by the end of February, the 3rd week of February, you can actually start getting money paid directly into your checking account. Okay, so it happens quickly. My offer: Loaded Gun Simple Trading Plan, the unlimited one-on-one coaching, done for you setup, a total of $5,200 in value. We sell it on our site right now. We offer it for $24.97, and people are very, very happy with the quality of what they're getting for this price. But today, 50% off, $1,247 for those. Now, it's a limited number of people that I can take because of the one-on-one coaching. All you got to do is go to theirmoneyyourprofit.com and use the passcode PASSNOW. Okay, PASSNOW, and I'll be on the site on the lower right-hand side of this page. You're going to see a chat button, of which I'll be on the other end right after I finish here. So let's work together and get you funded. It's the best risk management that you can have, risking somebody else's money. But you got to do it right. It's happening for people. It can happen for you. A limit of 7 traders. That's how much I've made room for. We've said we've graduated a number even this month, so I've made room for some others. I want to help you if you'd let me help you. So there is my offer. Thank you. I think I'm a minute over, and I'm sorry for the next presenter. So please stick around. There's my offer. Love to help you to pass and start getting funded, trading somebody else's money and earning 90% of the profit. Thank you, Rob, for your help in helping me to present today.
No problem, Norman, and you're forgiven for a whole 1 minute. I'd like to thank you for being here. And for one thing, I must give credit where credit's due. And for 2 things, congrats on passing, your exams and your success as a prop trader. Great information. I see you've done your due diligence as usual. And another thing is, it's always great to have you on Trader's Corner. Over 1 million views on YouTube is a heck of an accomplishment. Ladies and gentlemen, Mr. Norman Hallett. The one place you can find Norman is at thedisciplinedtrader.com. If you're interested in being mentored by a true professional trader with 40 plus years of experience who can pass a prop churn evaluation, and you've seen there's multiple certificates with ease, look no further. You can learn by clicking one of the links I put in the chat box. I did put them all in the coupon code, the everything. Thanks again for being here, Norman. Have a great 2024.
Thank you again, and hi to the missus.
I will do so. Thank you, and say hi to yours as well.
Will do.
Today's Investor Summit on Traders Corner has had over 1,000 registered participating from all over the world, and we want to thank you all for joining us today. Stick around because we've got more great presentations to come, and I just want to take the opportunity to throw in real quick. We're working out a sponsorship deal with a new brokerage called Mumu. If you will put $100 in an account there, they'll give you 5 free stocks. If you'll put 1,000, they'll give you 15, and they'll give you something extra for using our link. I did tell you at the top of the show that we had a great lineup, and our next presenter's no exception. He was with the fire service for 40 plus years, and he started trading futures on his off days 40 years ago. He has a great presentation full of brand new cutting edge material. Ladies and gentlemen, here to present the discipline manager is Mr. Stephen Tremper of Tremper.com. Welcome back to Traders Corner, Steve, and a happy new year to you too, sir.
Hey, Rob, how are you? Can you hear
I'm
me?
always great.
You see my
I
mouse?
actually just passed my first FINRA exam this week, so that's my news.
Oh, good. I haven't been in the futures trading for 40 years. I was in the fire service 40 years, but I just started trading probably 10 years ago or something. Maybe a little
I'm
longer.
so sorry.
It's no big deal. Makes me sound too old though. I don't know.
Hey, if you were in the fire service 40 years ago,
I
it
was in
makes
the
you the
fire
same
service.
age as if you started trading 40 years ago.
Started in 76. So anyway, but yeah, we'll just keep the discipline theme going. It seems between Norman and here, just to keep the discipline going. This is a little, the discipline manager is a little different tool. As far as the trading, it was something that I had problems with many years ago at the beginning, and so this was designed for that, and that's how it all came to be. But needless to say, what I'm going to do today is just go through it, and what is it, and if you even need it, and how to establish your rules within the tool, and then give you some examples of what happens when they are breached in either direction, and I'll go through some costs, and then I'll show you how to download it and play with it, and any questions and answers, I'll be more than happy to take those. So who am I? He kind of gave me a little brief introduction. Like as I said, I was in the fire service, but started playing options and everything else, years ago, and failed at those. And somehow I ended up in futures, and it just seemed to be a much better fit. And I haven't looked back since. So I still have an options account, but I don't do anything with it. I don't even know why I have it anymore, but I do. In any event, so as far as disclaimers are concerned, I know Rob has mentioned all these, and everybody has all these. I really don't even need to show it on here, because the discipline manager, if anything, is going to prevent trades. It's not telling you when to take them or handle them. It just basically will stop you, if anything. So I don't really need this, but needless to say, there it is for disclaimer purposes. So money management, as I think everybody in the business will tell you, there's a lot of statistics out there, and 90% of the traders fail. And there was a point in my career early on that I had to just wipe everything off, took every instrument off my computer, wiped it out fresh, and I started like on day one. I had to start all over again. But discipline was always an issue there with me, because that's why I like NASDAQ. I'm impatient. The board trade, and you're missing a rule or two, but yeah, it's close enough, so let's go. And I always had that problem. So there was that is how the discipline manager really kind of came to be. And you can Google it as far as the percentage. That's all I did, is to get all these numbers. They're out there, very easy to find. So money management statistics is, why do traders fail? It's the loss limits, over leveraging, over trading. That was my problem too. Fear of missing out, or fear of being left behind kind of situation, and waiting. You really got to overcome that waiting business. My worst 4-letter word is wait. You've got to be able to master the ability to wait and self-control until your particular trade and all your rules come together. And then you just, again, we're not traders, we're waiters. So, and I hated that. That's what I did not like doing. So there was my problem, psychology. So psychology, and we've had some rooms on psychology. Had a doctor in a couple times and gave little psychology classes, and trying to do all that, like the Mark Douglas kind of did. So getting out too easy, holding on to positions, over trading. I mean, all those, psychology is so big into the trading. And the discipline manager cannot help you with your psychology, but it will help you with your discipline. And then that in turn will lead to a healthier psychology. So control the losses. That's, the number one thing is we've got to be able to control our losses and the winnings and whatnot. And down the bottom, there's you got the big win, the small win, you got the small loss and the big loss. And it's that big loss is the one that you could overcome all the others. And you can win a lot of baseball games with singles. So you could handle all those. But those big losses, by moving that stop further and further away, or whatever it might be, because it's going to turn and it's going to find you, it's going to take you out, and then it's going to go without you, and then that'll really make you mad. So the stop losses are really important. But the ATMs, they're automatic. You could make them. They're really easy to put together. There's some tutorials and trading videos on how to make them for depending on how you want to trade and what you want to do, but they're pretty powerful out there. So you really got to be able to have that and then control that. You really can't. You could control the risk part of it, but the reward part of it is so hard because no one knows where the market's going to go, and it could just keep going and going. And the risk part is the easy part. You just put your stop wherever you feel is necessary, and whether it goes or it doesn't, and that's pretty much it. But you never know where it's going to go. But the most important thing is don't give up. You make it so close, and that's basically what happened to me. I just had to start from scratch and start all over again. And I'm going to get this. I'm going to get it. I'm going to get it. And then, finally, but if you give up and you never know how close you're going to get. So, and obviously as time goes on, you start out looking like fun, and then this is hard, and then you're losing some money. You try to go live because you're doing it on sim, and now you kind of get it, you're up and down. And then finally, as time goes on, some people need longer time than others, but finally you can get to it. And my thing now is algos, and that's where I'm really kind of going right now, because I'm just trying to mimic my, I've always been a computer guy, so I'm trying to mimic my trading, so I don't have to stare at a screen. And I'm not there yet, but I'm every day get closer and closer, so I'm not going to give up. But that's a story for another time. So anyway, you got to protect yourself from with the personal trading manager, and that's where the discipline manager comes in. So picture yourself as your trading business. You're the CEO of your trading business, and you delegate your rules to the manager, and the manager then allows and monitors your employees, which just happens to be you also, because remember, you're a small trading company, you're everything. So if your trading employee gets a little out of line from over trading or whatever it might be, then the discipline manager's job is to come over and tap you on the shoulder and say, hey, go take a break, or you're done for the day. And they want to control the CEO's funds. Then at the following meeting, that typically a weekend after market, when you review your things and your trades and setups and et cetera, you can evaluate your rules, and if tweaking needs to be done, that's the time to do it. Maybe you make them a little bigger, shorter, whatever the case may be. That's the time you want to do it, and not during the heat of the moment on right at the open and trying to change your rules just because one trade didn't go as well as you'd liked it to be. So that's the proper way to do it. And the discipline manager is designed to allow you to set your own hard daily and weekly drawdown limits along with your goals. And your hard drawdown limits, if they're hit and breached, then you're done for the day or the week, depending on what it is, but you're done for the day. It's not going to allow you to take any more trades. And once your daily goal is hit, you can continue to trade. Again, there's options. You can continue to trade, but never giving back more than a set amount or percentage. Or you could just be done, period. That's it. You hit your goal, you're done. And if you try to finish the move to get a little bit more, it's not going to, you're done. It's not going to allow you to take a trade. And this is called your dynamic drawdown limit based on your account high. So it goes by your high. And as I say, depending on if you don't want to give, once you've made your goal, you could put in there 0%. I don't want any percent given back. I mean, I'm done. Or you could say, you know, I'll trade 50% of my winnings, or 33%, 25%, whatever. It might give yourself a little room maybe to kind of maybe take 1 or 2 more trades if you feel, you know, that it's possible. But, you know, that's it. You're not going to get back too much of that. And then there's warning boxes too. So there's warning boxes, kind of like the theme of the circuit breakers. And that is if they're breached, then you're going to get a pop-up saying, hey, you're on a 15-minute timeout. I call it timeout. But you're on a 15-minute timeout, and it'll even show you what time it started. So you might as well go get some coffee, you know, go walk, shake it off, you know, take a walk, whatever the case may be. It's going to prevent any future trades. And the whole purpose of that is it just gives the market a little time to kind of get away from this area, give yourself a, you know, a reset, if you will, a mindset, you know. Now, if there's a reset, now people have asked in the past, you know, do I have to? Could I have it locked down? I don't want it. I don't trust myself. Or could I get a password I can give to my spouse, and then they can police? You know, it's like, well, you know, you're still the CEO of the company, but after you know a lot of discussion, we can't really tell you that we can't override your own system. So you do have to have some responsibility in there. So there is a reset button, but we make it a little harder. This is not, you know, the easiest thing to do. So if you get popped out, you can't just hit the reset button and keep going. You do need to go through the steps and then come back in and, you know, and then reset them and things like that. So by that time, in essence, your 15-minute timer is, you know, kind of passed by also. So here's some of the this is like just one page. This is the bottom page. There's that reset. So there's multiple pages on here, and I have the next slide or a couple slides that'll show them to you. But here's that reset button. So before you have set your rules, it's going to say apply. But once you apply them, then it has the reset. And so this is not an indicator. It does not go on your chart. This runs in the background as a separate window. Now, if you want to see the window, you could certainly open it up, because you know the settings in order to get your you don't need to have them on is basically what I'm saying. But if you do like to see like your peaks and things like that, you can run this and put it somewhere on your screen just to see it, but it's not really necessary. We have the status box for that. The status box came out just late last year. And that's because of all these prop firms and everybody was having problems with, you know, not knowing and where they're at. And so the status box came to be. Well, the status box been out for a while, but just late last year, we added the prop firm ability in there. So we can test and check your realized and unrealized. Getting sidetracked on that, that's the status box that you can find on the web page. It's not has anything to do with Discipline Manager. But needless to say, so here's the reset button. And so let's say, example, you've got your drawdown warning at $350, and your hard halt is going to be set for 500. Now, once you breach the 350, you know, negative, the Discipline Manager is going to create this warning 15-minute. If you have it set, it's going to create this 15-minute mindset, you know, to time out. And the warning pops up like this, as Aaron says, it's, you know, your warning's hit, there's the time, and you can't trade, you're done, because you've breached your allowed limit. Now, if you then 15 minutes goes by, you come back, you take another trade or two, and you've lost it, and now you've breached the $500, which was your set allowance. Well, you're done. You're done for the day. That's it. You got to wait until the next trading day, and it'll, you know, you fire it back up. You fire Ninja Trader back up, because Discipline Manager runs in the background. You don't have to turn that on. It's just there. And then you can start on the next day. So, and that warning pops up like this. It'll say your halt hit, and you're halted for on this. This was a SIM account right here, because you have to set your account, but this happens to be a SIM that I took the picture on. And so this account is done. If you have other accounts, you can trade other accounts, because each account has their own rules. But needless to say, this one is halted on that account. So the goal. So let's talk on a brighter side. You know, so you hit your goal. So you're coming up, and you've hit your goal. You're going to get a congratulations. You've hit your goal. And so now you originally had your initial drawdown limit and your initial stop. This Now, it takes away from those initial parameters, and now your drawdown limits apply for that. And that's where, you know, if you hit your goal, you know, you're done for the day, or if you select to continue with a certain percentage, as we talked about, you can continue to trade, but only a percentage of the daily allowance are you allowed to trade with. Now, you could certainly quit on your own, but you know, regardless, if you keep trading and then lose a percentage, it's going to stop you at that point, and that will just keep going higher and higher and higher and higher. And if you want to change your percentage, let's say $1,000, and you want to change your percentage from 50 to, you know, you don't want to give back 50%. Now you're up to a couple $1,000s. You might want to change it to the second rule, and that would be, you know, maybe 25% or something. You don't want to give too much back. So whatever your numbers are, that's all doable in there. And I'll go through the settings here in a little bit. So once your goal is hit, then, you know, you could set it to 0, as I talked about, or you could set it to 100, you know, after the, so basically you're playing with house money, plus or minus some commissions or whatnot. But if you're willing to give back 100% of your winnings, so if your goal is $1,000 and you make $1,000 and you're willing to give 100% of that back, that means you're playing with house money. So the worst case scenario is you lose $1,000. Well, then you really haven't lost anything. Now, on a side note, because, you know, this was all put together long before these prop firms came out to be, some prop firms have calculations based on unrealized and some are based on realized. And on the web page, I show them all listed what they are. And because it's important that you know that, on my one page, I have a little paragraph that explains what that is and how it comes to be. And it's very important that you know that. And you need to know, you know, whatever firm you're going to be using, how they calculate it. So as discussed earlier, the dynamic drawdown rule also incorporates the circuit breaker if you want that. The timeout after the 15 minutes is breached. So let's say, a little sample here, I talked, you know, you got $1,000 is your balance. Your dynamic drawdown is 700, which is 30%, and then you're willing to give back 500, and your realized account balance goes up to 1,500, and then now your balance, again, 30%, goes up to 1,050 before you get a warning. And if you drop down to 750, which is 50% of the 1,500, it goes from there. So it's all a percentage basis. So as of 2020, I guess going back a ways, so going back a couple of years now, we added a few features, max trades, losses, and the weekly and the daily and weekly drawdowns 1 and 2. We just originally had just one drawdown, but now we've changed it because, as I mentioned before, you know, if you hit your goal, well, you don't want to keep it at 50 or 75% when you get way up there high, because it's gonna keep trailing higher. So you might want to drop that down. So here now you've reached 25% or $1,500, and you drop it down to 15 or 25% of that. So that's what we were talking about as far as the percentages goes. So as of the 21, we added the naked positions, because that's when I started getting into all these bots. And a couple times I had naked positions, naked orders on, and I needed to get protection on that. So if you check that, and if it finds a naked order, now some bots, if you're trading bots, but some bots don't have stop orders. They just do it internally automatically. So you want to make sure that's off, because then obviously that would take you out all the time. And so there's your default. So once you put your rules in there, then you could hit it as a default. If you want to send me a copy of your rules, you could just hit this export button, send them to me, and I'll send it back to you what your rules are going to do, and then you can compare to see if that's really what you wanted or not, and tweak accordingly. The settings here is 2 pages. It's just one long one, but I broke it down. So you have your account up here. So each account has to be calculated. So if you're going to play it on, do it on playback, you have to set the playback account and apply those rules. And see down here in the bottom right, on the bottom of the screen, you've got apply. Once you hit apply, you'll get the red box there saying, and then it changes to reset. So, but you have to have all these rules, and you can set them as default, so you don't have to set them all for everything. Now, if you're trading one micro account and one mini account, then you are going to have to go adjust accordingly. But regardless, you select your account, and here you put you know, the start time if you want to do it based on the market like I do, or if you want to do it at midnight when your broker statement applies. So most people, I think, are doing it the market order, but again, this is going on your computer clock, so you have to make sure your computer clock is whatever time zone you're in. Here's we talked about this. If you don't want any kind of like the warning, like for instance here, if you don't want a warning, just 999 because it'll never be reached. That's more or less an easy way to just turn it off, if you will, because it's never going to reach 999. And so here's all your settings. Going to the next, and there's your weekly. It's the same thing with the weekly. It'll keep track of the days. Obviously, these are going to be bigger because if you have a daily drawdown, and then you lose it, and then the next day you'll lose it again. The next day, you know, by Wednesday or something, these are going to kick in. This was another one that added the unrealized, because a lot of these prop firms deal with unrealized, and so you can check that if you want to calculate intra-trade, but there's some cautions on that because you don't really see it. You wonder why, and you're like, well, yeah, I'm dealing with unrealized. If market goes up there, then that counts against you. And there's your stats. I was mentioning that if you want to take this window and shrink it down, if you want to see, if anything, I would probably just want to see these three here, just this, but you don't even need that with status box anymore. So if you have status box, but anyway, so one of the drawbacks that we have found with the discipline manager is it cannot suppress market orders. Now, market orders is if you wanted to put on an order quickly, there's no tool in Ninja to suppress that and turn it off. We've got this ticket open and it's been there for years, but apparently it's not a big deal for them to address it. But if you ever want to look the status up, you would just do that number right there and you would see what its status is, but I can pretty much tell you it's probably in limbo. But needless to say, so if you have, if you're trading along and you get breached and your drawdown, it says you're done for the day, and you put on a limit order, it's going to take it right off within a millisecond. And if you want to try to put a buy stop on, it's gonna take you off in a millisecond. It's just not gonna let you do it. But you're gonna overcome it and you're gonna say, I'm smarter than it, I'm gonna put on a market order. Well, you're gonna put on a market order and you're gonna get hit with the commission, and in about 1 or 2 milliseconds later, it's gonna come off, and all you're gonna be left with was a commission, possibly slippage, and then you're gonna go, okay, I'll do it faster, and you click the button faster, and again, it comes off a millisecond later, and you finally realize, okay, then it's not gonna work. So if you have a bot that uses market orders after this, you definitely want to, you have to know what your tools are. So how to get started? So currently it's offered at a subscription. I'm big for subscriptions only because people are coming and going all the time. If they're going on vacation or whatever the case is, I think they've managed it. They've had it for a few months. They feel comfortable and they don't need it anymore, and that's fine. And so they discontinue it. I mean, there's no reason to pay anything if you're not going to be using it. And I can't tell you how many thousands of dollars of indicators I have that are just sitting on my computer somewhere that aren't even used anymore. So that's the whole premise behind the subscription. So it's just planned to be used for a short period of time until you kind of understand it. It helps you and guides you along. Now, I do have a couple, a prop firm that uses it, has multiple licenses. They get the annual because they have it on their algos, and they use that as kind of like a policing, if you will, for overnight and things like that. So the download is set for a free trial, so you can download the trial. There's nothing required. You don't have to pay for anything. You just download it right off the web page, turn it on, follow the video, and shows you how to make your settings. You can kind of figure it out and play with it. Again, if you're going to do it on playback, you have to set those rules on that playback account, but use it. And after it's basically a month of trade days, and then some market replay, and you'll get an idea of if the tool is how it's going to work. And if you want to go ahead and continue it, then you would just go ahead and click that PayPal button on the page. I'll show you how to get there. And then you cancel it anytime you want. You got control of your account, and that's you turn it on and off, and you don't have to pretty much do anything other than turn it on and turn it off. And I have had people, many people, quite a few people that have, turned it off, and then a few months later they come back, and that's fine. So, for whatever that is. So how do you get it? So you go to tools, go to the webpage, of course, the main Tremper.com, and you go to tools, and it's the first, I think it might not be the first one. I think I put them in alphabetical order now. So, but anyway, it's Discipline Manager. Status Box is the one I was telling you about, that there's a video in there you can watch and check it out. I think anybody who's trading these prop firms really should look into that, because I think I have it on every day on my charts. So anyway, so that's where you go to Discipline Manager, and from in there, there's a video. You can watch the video. You could read all this business, and then you could click on this download button right here. Will give you the latest version, and you install it on your machine like pretty much all the others. There's a video on that, and that's it. Now, after the trial period, and you want to continue this because you feel it's valuable for you, then you would just come into this box here and just click it, and it'll open up and give you some options, because we do have an annual option there for people who want, and there's a few people that do that. So in today's special offer, as we always do, we're going to do the 30% off of that. So for the next couple days, it's going to until Wednesday. This sale is going to go to Wednesday, 30% off. It comes to $34. So the only drawback to that, though, is that the sale price and that link is going to go away on Wednesday, but you're not going to get your 20-day trial. So if you do want to take advantage of this, you're going to have to, make a decision before Wednesday, because that's going to expire, and that 30% coupon is going to go away. So I would recommend, playing around with some playback over the weekend, and Monday and Tuesday and Wednesday, you're going to have to make some decisions, because if you want to continue with your trial, it'll keep going for the 20 days. But then on the 18th or 19th day, when you want to continue this, you're going to go look for this link where I'll tell you where to find it, and it's not going to be there. And then it'll just be back to the regular prices. So there's the drawback to that. But needless to say, if you go under the web page, again, back to the home page, and go under referrals. Now here, as I was telling you about, all these, I can't scroll down on here because this is a picture, but all the way down here, all these prop firms, and there might even be a few more that have been missed, but it'll tell you there how they're calculated, and you can click on them and go to any of their particulars to find out what they're doing. But under the discount code page, the website has been changed. It's got its own unique code, link right there. You just click on that one itself. But you're going to get into discounts. Now this changes. Obviously, this is all old stuff here, but these change constantly, because I'm always putting the sales on there. So it's like basically a one-stop shop, because I'm always getting hit up with these emails, and I just unsubscribe to them because there's too many of them. So I always put these in here as far as what's going on, and this is always rotates. And if you want to get on the list, you could actually just click this button and put in your email address, and you'll be on the list. So every time there's a change to any of these, or things get added, as things get added, I'll send out a notice, and if you're on that list, you'll get that. So if you could set up that, and it's all free. Here's that information I was talking about with the unrealized and realized P&Ls. You need to understand your P&L calculations. But here is where I was talking about the discount code. So here's the discount code button for PayPal, and you would click on that one, which takes you then to PayPal, and this would be the rate. It's $34.95, and that's 30% off the regular price. But this is going to start right away, so this won't be not 20. It's not going to be 20 days after. It's going to start instantly. So I would recommend not doing this until you've made your decision to go forward. And if that's before the sale ends, then you could use this coupon. But if you want to wait until the full 20 days to use up the trial to feel totally confident on what you're doing, that's fine. But this sale will be off, and you can just it'll just go back to the $49. So that's how you would do that. The only other thing that I do need is the contract form filled out, because we go by third-party IDs. And on the Discipline Manager page down at the bottom, there is a link that shows you how to get a third-party ID right through Ninja on the Control Center. Go to Help, third-party ID, and you can create one that shows you how to do that. It takes literally just seconds. But on the contact page, you have your name and email address, because we do it that way. And then you would go ahead and put that third-party ID on there, and that's how we could find you, and then we could let you go and go from there. That's pretty much about it. So that is the gist of the Discipline Manager, and I can go through any particular questions, or I can go back to some slides if you have any other questions. But other than that, that's the orientation on the Discipline Manager. I kind of made it a little shorter, just because I think a lot of people have already seen it before, and there may be some new ones, I don't know, but here's our COVID, our year of COVID. All right, let me look at let's see, what is the cost besides Apex cost? I think that would be a question to the last presenter for Apex. If you go into the yeah.
If you scroll down and look at the time received, the questions from 12:45 to present are the ones directed at you.
12:45. So what is the cost besides Apex cost? So, okay, so let me go back there. So we did, the regular cost is $49.95 a month, or the annual for $397. So it's obviously choices. The special that we're doing today is 30% off that, which brings it to $34.95. So that, but then yes, if you have other prop firm, brokerage and market fees and commissions and FTC fees and all these other fees that are associated with it, then you're going to have that. But Apex, I don't think they have a sale going on. Yes, there is. If you go to the discount code page, you'll see whoever has a sale going on, it should be updated. How much does this? Okay, it talks about that, the monthly, annual, and then lifetime. There is no lifetime, just only because whose life? My life, your life, the company's life. I mean, who knows? It's like Netflix. Like everything nowadays is a subscription. You can't even talk on your phone without having a monthly subscription. So that's kind of where the premise. I know Microsoft kind of went to that over 20 years ago, and many other companies are doing that. And I think it's fair, because why pay? Because to do a lifetime cost, it would be a lot more money. And then what do you get? What's the typical 5-10 day trial? And then if you don't like it, then you're out. So this way, you got 20 days. And if you haven't made a decision in 20 days, if you feel that this tool is good, then, no hard feelings here. I built this tool for me. It was never intended to, broadcast out to everybody else. Ninja called me up and said they wanted to do this, and they turned me into a licensed vendor. And this was actually the second tool I had, but this was, pretty much a main tool that everybody was, kind of wanted. And but again, this was for me, and with no intent of actually even going on. So my theory is just keep it low, and if you like it, you keep paying for it. If you don't like it, it's like anything, if you want electricity, pay your monthly bill. It's kind of simple. So I can't ever see changing to a lifetime. I never say never, but I don't ever see that, happening. So other than that, that's all the questions I have. So we have a few minutes if anybody wants to see.
Hey, I'd like to ask a question.
Sure.
What was your first tool?
Reversal bars. The reversal bars were, and it's still available on the webpage. That was done on 7. And then when 8 came about, I held off as long as I could, and I had to go to 8, just because that's what you got to do. So I went to 8, and so we had to convert all this, and so it was like, well, can we just tweak it? Well, the way that from Ninja 7 to Ninja 8 was it was basically had to be built from the ground up. So, I mean, it had obviously all the logic was there, but it had to be rebuilt. So when reversal bars came out, I added tools to it, things that I kind of wanted. And so I added those things to it. And so that's available right now, wherever that page is. Here, like all these here I've made for, I'll just go through these real quick. So the reversal bars are the first one. 7 is free, and 8 was not. It's a small. They're all minor charges. This is ATR projections. I believe that one's a free one too. This was an indicator, or down here you notice the strategy also. That was my first strategy. The entry signals, that is a tool that just automatically places the, this is that we took off, we changed it to signal plotter now. It's a tool that will automatically place trades. The management isn't there as far as the stop management, so that does have to be controlled. But as far as when things go on, it just automatically takes the trade. Price extensions was me, because I'm one of those guys that likes statistics. and I needed to know, like with if anybody knows like the MAE and MFE business, or ETD, all that kind of stuff. Anyway, when Ninja gets out of a trade, it measures how far that trade went and how much you got, but that doesn't do me any good. What I really want to know is what happened after I got out. Was I getting out at the proper spot, or was it continuing to go 100 more ticks without me? So by having price extensions, it continually, even though you're out of a trade, it continually is monitoring the market, and I'll tell you, how many ticks it truly went past your exit. Support and resistance lines, that's a pretty neat tool. One thing good about this one is, I mean, support and resistance tools are there are a lot of them out there. So this is pretty accurate, but the key on this one is I'm all for what I call synthetic data series, because I like to look at the smaller chart, because I can see the movement and the ebbs and flows of the market. But I don't trade on that. It's just, especially like NASDAQ, you can't trade. It's just too fast, too whippy. So, but if you look at a bigger chart, you can't see the ebbs and flows. So you really need to see the smaller chart. So that's where I like the synthetic data series. So on this support resistance, you could be looking at a 1-minute chart, but you could say, give me support and resistance of a 15-minute chart, or a range, give me a 21 range chart, support and resistance levels, but I want to look at them on my small 1-minute chart. So that's what I like about that. The status box that's the latest one, and that was pretty much with the development of, it's been around a while, but we've added this whole new concept in there about the peak and how much drawdown you have left, because it's very important, especially with these unrealized. If you don't take your profit and it goes up and then comes down to break even and gets you out of break even, well, you might be at break even, as far as your P&L is concerned, but as far as their calculations concerned, that thing went up 100 ticks and you didn't take it. That's your bad. We're counting that 100 ticks against your account. And so with the status box, it'll show you, and there's a little video in there. You could, I think it's like a 1, 2, maybe 5-minute video on what it does. There's videos on all those of what they do. But and so that's what that one I think is, anybody using prop firms really should look into that one. And then the target zone was one that I put together because I got so tired of getting 1 or 2 ticks away from my target. When you have a target up there, it has to hit it exactly. I mean, you could tweak it as far as when it gets out, but when you hit your target, you price hacks actually have to get there. Well, that's, I just have a zone. I'm like, look, this is my zone. Here's my area, give or take a little bit. So this target zone just attaches to your target. And depending on how big the zone you want to have, that's fine. And once you hit that zone, as far as it's concerned, you're good. And if it comes back and retraces X amount, depending on how much you have it set for, obviously different markets are going to need a little bit more room. But let's say you have a retracement of 10 ticks, and now it gets to your zone. Well, it'll keep going until your actual, true target gets hit, and it'll just keep chasing it up. But if it comes down 10 ticks, anywhere in that, boom, it'll say target's hit and you're done. So basically you're turning your target into a whole area. And you set the time and the size of that depending on the market. And obviously Some zones, like your first target, you might have very narrow because it's like you need to get that because it's your first one. It's the fastest, the quickest, and you'll be out sooner. Maybe on your second or third target, you might want to have a bigger zone because now we're starting to really get far away. So that's that one. Then the volume sliver, that one works. That just takes the daily volume and just breaks it down to whatever you want. You want a 5 minute, you want a 15 minute, you want a range, however much time you want out of it, you could police that. And basically it's like your speedometer in a car. It just takes the last 15 minutes and shows you, what we are right now with the bar. And then you have your minimum and max where it just changes colors if it gets too far over your number or under your number. So let me really quickly go over these last few things. Hi, I'm late into this webinar for 4X. The webinar for 4X. Oh, that's Rob. Can we sign up?
That one for you.
Yeah, that was kind of. Can we sign up for the trial and then use the discount code with the same email? Oh yeah, the email address is just a way to find you. That's all. Because when you download the trial, I don't know who you are. I mean, anybody can download it. But if you're going to actually subscribe, then we need your email because PayPal uses the email address, and that's how we have to find you. So yes, you can. You don't need a second one, and you don't need a second computer. A lot of times people think they need it on 2 computers or they need it on for multiple versions. No, you don't, because this will do all the accounts that you have. Matter of fact, I have a multi-user subscription to sign on, so I could have Discipline Manager on one computer, and I could trade on my other computer, and it will police it as long as it has access to that account. It has to have access to the account so it can police. But if it does, you don't need to have it. And you could set up, like if you're doing like trade copiers or any of those trade copying platforms, you just have to have your rules set up on each of those accounts because each one is individual. And that's the whole purpose of just making it a default. And then you can go in there and just go boom, 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 apply to all your accounts. And then assuming they're all the same, if they're micro and minis, then obviously they're not going to be the same. So anyway, hopefully that helps that. So that answers the questions and that answers the tools. And I think I'm right on time.
Stephen, you are exactly on time, but we are in a situation where the next presenter is not in attendance yet. So if you would like to keep going on, you are very welcome to, and I'll politely interrupt you if and when he shows up. And if not, I'm just kind of going to do a Q&A session with the audience.
Oh, all right. Kill some time.
Oh. Actually, I see that our next presenter is here, but he does not have organizer or presenter rights. So I'm going to go find him in the audience.
All right. Well, I'll just stay here if anybody does write sorry. Okay, it's fine. You just cut me off whenever you want, then.
No, that's him.
Oh, all right. Well, then I'll talk to you later.
Hey, hold on a second. I gotta, read your outro. Thank you, Steve.
Hello.
We always. Case, is that you?
It's me.
All right. Let me just read Steve's outro and introduce you properly.
Okay. Yeah, I didn't. I think I grabbed the wrong link.
Yeah. No, you came in as an attendee, not as a presenter.
Okay.
But ladies and gentlemen, if your emotions are getting in the way of your trading, Mr. Tremper of Tremper.com does have the solution. It's called the Discipline Manager, and you can learn more by clicking in the chat box or going to www.tremper.com. His tools have been a game changer for so many traders struggling with overtrading, many other emotional issues that traders commonly face. Thanks again, Steve, for being here, making such an offer to our audience, and taking the time out of your schedule to join us today. And a Happy New Year, Setter.
Thanks for having me.
Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our shows. And our next presenter is no exception. He's a 9.5-year United States Army veteran and married father of 9. He's a leader in his local church and is a successful business owner and trader. That, however, wasn't always the case. His compelling broke dad to 7-figure trading success story will captivate and inspire you. He's dedicated to helping people from all walks of life fulfill their financial dreams while also achieving financial freedom. Helping others is at the heart of all that drives him on a daily basis. Ladies and gentlemen, here to present 25 years of trading, and I'm sharing the best strategy I've ever used. It's my pleasure to introduce Mr. Casey Stubbs of Trading Strategy Guides. Well, officially welcome to Traders Corner as a presenter, Casey.
Thank you, Rob. How does everything sound?
You sound loud and clear, and we see your. Actually, did I make you a presenter?
I did. I clicked share, so I just want to make sure that you guys can see it. Wait.
I'm looking at a chart with somewhat of a cup and handle looking at Foreman.
Okay. Yes. All right. It sounds like you're ready to teach this class today.
I conveniently passed my first FINRA licensing exam Friday, so
Congratulations.
thank you so much.
Wow, that's
Yeah.
really awesome. We'd have to talk about that sometime. I'd love to hear more.
No, outside of Traders Corner, I'm very happy to anything with any of our presenters, and I'll send you a private, my private email in the admin chat.
All right. Well, I'm going to jump right in. So I got about when 2:15, right? Or 2:10?
45 minutes if you run one or two over because we have technical difficulties, the trials of a live show. We always ask, 5-minute leeway.
Okay, great. Well, thanks a lot, and really glad to be here. And so I'm going to share my strategy today, and the way that I'm going to do it is I'm just going to go through the steps that I look for, and I'm going to share these steps on several different charts. I like to go through a lot of different charts and identify setups and some setups that I've taken recently, and how I find those setups, and the filters that I use to identify the setups. So we're going to go ahead and jump right in. And the very first thing step number one for me, and can you guys see my doodle tool? Step number one. Step number one, I don't know if you guys can see it or not, but that's okay.
Absolutely.
Oh, you can see it. Okay. Well, step number one is to find the trend, right? Find the trend. And doesn't necessarily mean that I'm always looking at a super strong trend, but I'm looking for the beginning of a trend. And once that trend is going, I want to make sure that I'm trading in the direction of the trend. So it's just really helpful to me and has generated a lot of success if I start out with finding the trend first. So I'm going to show you how that works for me, how I find the trends. So this is a daily chart here, and this is Solana, okay? And I'm going to zoom out a little bit. And so right here, you can see, and let's see if I can go out a little bit further to a weekly chart. And that's kind of messed up, so I'm going to go back to daily. Okay, so right now you can see that price really went up recently. We had just a huge move to the upside, but for a while it was very much sideways, right? And so the way that I do this is I draw trend lines and support and resistance levels. Okay, so right here is a channel that this pair was in. Okay, Solana USD, and that's a crypto for those of you that might not know what that is. It's a crypto, and it's been one of the best performing cryptos of the year so far. Well, not 2024, but of 2023, one of the best performers of 2023. And but before that, there was a very long sideways period, right? And so the way to actually identify trends is to look at key levels, right? Key breakout levels. So in this case, we had a breakout here, but that didn't actually trigger anything. You can see because it went out, it was only a 1 day, and it closed below the previous level, which was over here, okay? And that was a head fake. And those head fakes happen quite a bit. You got to be aware of them. But if you get head faked, it's not a big deal because we're using proper risk management. The previous speaker, he was talking about controlling your emotions, right? Well, that's one of the hardest things in trading, and I didn't include that in one of the steps today. of my strategy, but it's got to be one of the steps is controlling your emotions. It's so important. But even if you make a bad trade and you get faked out, it's okay because the market likes to fake people out. But I had this I had this channel on for a long time and I was waiting for it to break. And when it did, it's just pretty straightforward. When you get a key break, you enter in, because why? What happens is the trend changes, right? Because let's take a look at what a trend looks like. So if we're going to start with a downtrend, the trend is moving like this, and just like that, right? And what is one of the key factors of that is that we're getting lower lows in a downtrend and higher highs in an uptrend. So we're getting lower lows on a downtrend, so we'll put an LL here, and we're getting lower highs. Okay, so you can see the trend is very strong, but you can get these levels, and as you draw support and resistance levels here, usually they coincide with each other just like that. And it's not going to be perfect, just like my drawing here isn't perfect. It's not going to be perfect, but that gives you the general idea. Okay, now when a trend reverses, it doesn't happen right away. So a lot of times people might be buying in down here hoping for the trend to reverse, and it will keep going lower and they keep buying in, etc. It doesn't happen right away, but you got a lot of time to decide, right? And actually that's why a lot of what I really like to trade also is weekly charts. I like to trade weekly charts because these things don't turn on a dime. You know, a strong trend doesn't turn instantly. It doesn't turn on a dime. We have plenty of time. And that's one of the reasons why we don't need to worry about our emotions getting the best of us, because we got time. We don't need to be so afraid of missing a trade, because look, this trade changed directions, the trend moved, and how much time did we have? Well, this happened here, right here in October, and then you had plenty of opportunity to get in along the way. And once you identify the trend, so step one is to identify the trend, but once you do that, then you've got a lot of time to get in, so you don't ever have to be worried. As long as you're still following the criteria for your trend, you know what to do, right? So the criteria for the trend, let me actually define it now. Let me clear all this out. The criteria is that you're maintaining your level structure. Okay, so as long as you're moving down like this, you know what to do. There's no questions, right? And yeah, you could try to buy reversals. You can do that, but I just don't like to. There's a lot of guys that buy the bottom. They're great. They call, these are like peak points, right? When there's a peak, you want to take the trade. Go for it. That's great. But not me. My strategy is to trade in the direction of the trend. So as long as these levels are holding, I know what to do and I don't have to think, right? As long as these levels are holding, I'm good. And then you can draw a trend line down here like this. So at this point, I am going to short and only take short positions until the trend changes. And when it does, you might short here and then it doesn't work and you lose because it breaks. That's okay. That's actually just fine, because this is a very small loss, right? This is a very, very small loss. And the winner that you're going to take, because as soon as it breaks back up and you take a winner, it could be a big winner like this. I mean, this here is like $28 and it went all the way up to 120. Okay, now I cannot guarantee, and I do not know how far this trade will go, but I will say that if you get in at 28 and you hold it to 120, that's a good trade. And so if you take a $3 loser and you make $100 on the winner, that's what you call a good risk to reward ratio. So I'm not worried about missing a trade or getting it wrong, because there's 1, 2, 3, 4, 5, 6, 7, 8 opportunities to get it right along the way. And once I get towards the bottom, if I get it wrong, that's okay. Now I want to look at and I want to evaluate here and just kind of identify what it looks like here with the trend turn. And this one particularly really took a long time as well. And we're going to go over some other examples too. But you can see this was down for quite some time. And that's one of the things and it's so small. I wish I could get a little bigger, but you can see as soon as I make it bigger, there we go. Let's get it a little bigger. Boop, 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 boop. Okay, so we had a lot of time here on the downward move as well. Okay, a lot of time. And in this position, in this situation, it followed the rules pretty nicely. Okay, so let's take a look at this high. It was all the way up here. Okay, very nice. That's $258. And then we begin our downtrend. Okay, so on the way up, what are we doing? On the way up, we're buying here, buying, buying, buying. But then we get a nice little pattern. It tries to get back up and it fails. We get a nice failure pattern and did not work. It failed. So we are now looking for shorts. But how do we know when to start looking? Well, we want to draw some of these levels, okay? This first level right here, that one broke. Okay, now we got a trend line. The trend line broke. And then now once we break that horizontal level and we break the trend line, now we know for sure that we're going the other direction. And did I know that that was going to break like that? No, I didn't know. I had no idea. But once it does, then I'm going to start trading it. So step one again is finding a trend, and I'm still kind of on step one. That's really important that it's just important to know what your trend is at all times. So as soon as I jump onto a chart, that's the very first thing I identify, right? And so for me, because I'm doing it all the time, it's like, okay, what's the trend? I know what it is. Now I know what I want to look for. So in this case, and yes, it's very easy in hindsight, but in this case, once we get that, I'm just looking for short trades, right? I'm looking for great price action, candlestick, short trades. And in this particular case, there was a lot of great signals. Okay, let's just take a look. I mean, this is like textbook chart pattern. So step number one is identify the trend. And then step number two, what I like to see is pullbacks into support and resistance areas. So in this particular case, when I say area, I mean that it's not necessarily to the dot. It is a zone, and we want to see how price action responds in that zone. So I like to draw trend lines, so right here was a trend or a horizontal line. And, you can see that price was bouncing around in this area. So there's a lot of different area in here. And there's also consolidation and chop. And that's another part that we want to look at. So let's take a look here. Draw this out. There we go. Okay, so the next thing, so step one, we want to look for the trend. Step two is we want to look for pullback, right? Once the trend is going, and we also want to watch for consolidation. Okay, consolidation is very important. And consolidation is when the market is just going sideways, because what happens is even in the middle of a trend, these things get very tired. Okay, they get very tired and it's not moving. And so if you buy a trade in the middle of a consolidation zone, you will get stuck, right? So you can see here, we have a rectangle right here. And inside of this, the market's just going sideways, right? Sideways, sideways, sideways. So when you find one of these congestion areas or consolidation, and I like to actually call this the wind up, right? Because the market is moving and it's helping you get prepared for a breakout, right? And so when you think about a wind up, sometimes you'll think of like a watch, right? You're winding that watch like the old watches that you wind them up. You keep turning it, turning it, turning it, turning it, and then you release it, right? Or like a child's wind up toy. You wind that little truck up, you wind it, wind it, wind it, wind it up, and then it'll release. And that's what the market's doing when it's going sideways like this, right? So whenever you see these consolidation patterns, sometimes they can go a long time. And really what's happening is the market is winding up. It's getting prepared for a move. So your buyers are getting in, sellers are getting in, and orders are getting, buy orders are getting put in, and it's just a loading up, right? And then what happens is all of that money is just sitting there, and then finally it gets released, right? It finally gets released, and then we get the move. And so in this case, I was thinking a downtrend, but it still was not really totally settled yet, because their traders were trying to go long, they're trying to go short. But right here we had the break up, and even though this was probably a counter trend trade, a break out of the consolidation zone still enters, this still got some success, right? Because this would have been a buy trade right here at 187, maybe 185, and it went all the way to 202. So almost like just about a $20 move. So you could have easily bought that, but I wouldn't have, right? I wouldn't have, because I'm trading in the direction of the trend. Now, once it breaks up here and then we get that key candlestick pattern, then I'm really, really considering, I'm really not considering, I'm really looking for the short trade, okay? So in this case, we got a pin bar right there. Okay, that is a great price action signal. And then what happened? We get that nice, strong down candle, and this candle just ignited the move, right? So that move that was ignited down, breaking back into this zone, breaking that key level, would have been the ideal entry. So if I was trading this, which this particular entry I didn't trade, I probably would have taken one small position here, and then once I got this nice candle, I would have taken a second position. Okay, and so I'm trying to always just take little bits and pieces of the market. I'm not trying to hit a home run and to win it all, but I'm trying to consistently make high probability trades, and by doing so, it gives me a much greater chance of success by just timing the market, being very patient, waiting, staying in the direction of the trend. So the trend is the first thing I'm looking for. The second thing I'm looking for is consolidation. Okay. And then the third thing I'm looking for is a pullback. And then the fourth step is the fourth step is the price action, right? Price action. And that there's just so many different patterns that you can see. But in this case right here, this particular pattern is called the evening star, right? It's a peak point. You got the pin bar up. And the thing you want to notice about this is look how many candles this engulfed, right? Because this broke the high, but then this candle didn't engulf anything, but this one engulfed this. Between these two candles, they engulfed all of these, right? They took out all of these candles just in such a fast period. And that is a signal of momentum, right? Momentum is what we want to see, right? So when we see these candles, what it's actually showing us is momentum, and we want to see the momentum formulate in the direction of the trend. And when we have the consolidation period going, there is no momentum. The momentum has stalled. It's just buyers and sellers consolidating, getting ready for the momentum to develop. And when that starts, when the momentum happens, that's when we want to jump in the trade. And we do that by knowing our trend, knowing our key support and resistance levels, and then finding the pullback. And so let's go ahead. I want to just follow this logic here on this trade a little bit more. Okay. So now we come down and we have a very long trend. And so that's why we don't have to be in a hurry, but let's just kind of follow this trend down and kind of see what we've got here. And it breaks structure a couple times, but it still holds pretty solid, right? So here's what I mean by that. And so you can get tricked out and you can change your mind a little bit, but right here, it broke structure. You see that? But then it didn't break this structure here. Okay, it went right back up into that. So there was a fake out into this next level of structure. So, you know, you got to wait for the trend to reverse. You have to see it break structure, retest, and then break again. So in this case, you could still, just like I said on the last one, if you want to go counter trend, you get in here, you break that level, right? Maybe you believe the people that were buying right here were believing that the uptrend was continuing, you know, and you know, they might have had a good trade. Why? Because it was $20, 120 up to 140. So that is a $20 trade. So even though counter trend, you could still make $20 on that move. Nothing wrong with that. But again, for me, I'm not going to do that. I'm going to wait for the actual trend to change, which here it did not. So for me, we got that pin bar right there. We've got the engulfing candle. We've got a great, what you call evening star pattern. And then what had happened is we got that momentum, which took it to the downside, right? And in the between that, what did we have? We had consolidation. Remember, we talked about consolidation. There's some consolidation right here. It popped right back up, pullback, another signal, and then it kept moving down, right? So take a look at, let me just zoom this up. So we have a nice consolidation. Remember, we talked, we're looking for consolidation. We got it. It stalled 1, 2, 3, 4 days, and then finally down. And then once you get the move going, there's more consolidation, right? That's what we're looking for. We're looking for consolidation because it means that it's waiting for the move to continue. So right here, we're going to draw our highlight. What do we have inside this zone? We get a nice evening star pattern. The price pops right back up, and then again it breaks down and it gets that momentum. Okay, so then it just kept on going, and then just kept on going down, and then all of a sudden we get down to $26. Okay, and we get more sideways action. People are saying it's over. We're going to go back up. We're finally going to reverse, and then all of a sudden, boom, it does it again, right? Keeps going. So in the middle of this trend, there was just so many opportunities along the way to short. Anytime we get the consolidation, we get these candlestick patterns, and then it comes down, right? And so again, right here, same thing, broke down to the new level. And then finally, once we get down there, we were just consolidating, okay? And so this is where the actual trend changed. And so we want to kind of see here that it doesn't happen right away. And sometimes it does. You know, sometimes you'll see, and you just have to be studying charts and trading for a long time to see all this. But sometimes you'll see a move like this. They call that a V pattern. But these are more rare. They don't happen as often. a lot of times it does take some time, like you see here, for the trends to change. And I've got so many charts that have given me that example of taking a long time. But in this case, we had a very long move to the downside, and you know, you can draw a trend line in here, and the trend line broke right there. And so that's really a great first clue. So once that lower trend line broke, then you're like, okay, we're still inside this box, but maybe we're interested in reversing. So this is really the first step here. Remember, we got to, when we look at a breakout and then we're trying to find a trend and we're looking for new direction, we can go and we're looking for, the first thing we're looking for is the break of some of these levels, right? But it has to not just break. So we've got a downtrend that's moving down, and when we want it to break, it sometimes will break and then come right back down, right? A lot of times it will do that. It'll break the key level and come back down. But to know that the trend is really legitimately changed, we need it to break the level, retest, and then make a move, right? And so that's what we had right here. We had that happen when that trend line broke, right? So it broke, it retested right in that same zone. Look, right where the trend line broke, it retested, okay? So when I see a trend line break, one of the very first things I do is I draw a level, okay? So I will consider taking this trade, because this again isn't a bad trade. It goes from $18 up to 32. It's almost double your money. So that's a pretty solid break. That's a pretty solid move. But whenever it does happen, I always draw the level where the break happens, because it takes time. You got to be patient. The market doesn't go in a straight line. You don't let your emotions get the best of you, but I'm going to draw that, and I'm just going to be waiting to see if it comes back. And I don't mind taking the trade on the break, especially because we had what I like to see. You know, when I'm looking at my trades, I always want to see some consolidation. So we broke, it consolidated 1, 2, 3, 4, 5 days, and then finally we had a nice strong move. We got the momentum. After you get the build up, the wind up, you get the break and the momentum, and then we had a really big move, right? And so then once you get that, I would be watching for this. So again, here we go. We broke back up, and at this point, I'm just looking for key levels again, right? So we get up here, you got a pullback, and it comes down, you get a nice move, a pullback, breaks the top again, and then what happened? Consolidation. We talk about that. So here in November, you know, the move really happened in October, but here again in November for the 11th all the way into December, you know, most of November was just sideways movement, right? And so when you see that, you're just looking for the pullback into the levels and then looking for a breakout, right? And so again, it happened. You got to move, consolidation, and then the big move right here, this big one. And so right now we're still in an uptrend, right? This is Solana USD. We're still in an uptrend. So anytime that we're in the uptrend, I'm not looking at shorting until we get a very serious change of direction. And what I need to happen is I need for this to break, okay? And not just that though, not just that to happen, but for it to break and then retest the break, right? To make sure that it really is. And a strong trend like this is probably going to take some time. You know, we're probably going to come back up here again. We might go sideways. We might do all that. And I personally, and I don't try to make predictions or anything like that. I just try to say, okay, what's happening, and then respond to what's happening. Now, when I say I don't make predictions, I make observations, and then I will try to forecast, right? So I do make predictions, but what I try to say is, okay, if my prediction happens, then that's a trade. So right now I'm making a prediction on this that we're probably going to get a bounce here and we're going to consolidate and we might break this trend line and then come back up and hit this and then come back, right? That's my prediction. That's what I'm looking to happen. So if it doesn't happen and it comes down, then I change my mind. I'm not going to trade this in because I'm stubborn. You have to be willing to admit that you're wrong. I feel like this uptrend is just getting started because it's only been 2 months. The downtrend lasted for 2 years. So I don't think that this uptrend, especially with the momentum that we see and all the amount of money and the buyers that have put into this, I don't think the buyers are done yet. I think that they've got, they want to get their money's worth and they're going to push this thing up probably to all-time highs. And so I'm trying to think a little bit of behind the scenes about what's happening, but at the same time, I'm just looking at the chart. So right now, in order for me to say that this is a downtrend, I need this to break below here, retest, and then I'm looking for the downtrend. So I'm probably not going to trade if this happens. I could, it might make a good trade because we might come down here, right? We got that. Very possible that that happens because if we looked at the other direction, it happened many times, right? We can just draw that little purple thing here. If I can, there we go. We draw that purple area. Price moves from zone to zone. So if it comes down here, if it breaks, it very possibly will come back down to this zone. You could make a short trade from 86 down to 70 if it breaks. Yeah, absolutely. But me personally, I'm not going to do that because why? Because I don't need to be in a hurry and I want to try to take the highest probability trade that I can possibly take. And so that means I'm going to pass on this move and then see if the downtrend is legit. But at this point, I'd be willing, because it's in the direction of the trend, I would be willing to take a small piece when it comes down and tests these levels. Just take a small trade, and then when we get the consolidation, which we're already starting to get consolidation. Why do I say that? Because we went up, down, up, down, up, down. So we're getting consolidation. We're getting the wind up, right? And so my forecast is that we're going to wind up here and that we're going to break out. And when we do, my target is this all-time high, or not all-time high, this most recent high up here of 130. And then, if that momentum really kicks high, we're going to go back to some of the other levels that we had hit before. And so what would I be looking at? Well, we go back over here and you can see we've got some of these zones that would be very important for us. And actually, this has already been important. Look at that. You see that? You look to the left and you're going to see some things. So we had already hit that zone. And so where could we go next? Well, I think we could get up to 153. And really my ultimate prediction here is that we're going to hit all-time highs. But do I know that if it's going to happen on this move? No, it might go sideways for another year. It might come down here and retest, and then we're going to get more momentum. We're going to get another break to the upside. The timing is the thing that I'm never good at, because if I believe that a trend is going to take it up, usually I'm right about that. But what I'm not right about a lot of times is the timing. Sometimes it happens way faster than what I think, and then sometimes it happens way slower than what I think. So that was the Sol USD chart. It's so easy to find things that are going up or to going in the direction of the trend and trade with them. It doesn't make sense for me to try to find something else. Here was one that I've been looking at, and I just really like to trade this chart. This is McDonald's, and if you look at it on a weekly time frame, you can see it's just been a really solid uptrend for a long period of time. Sometimes the levels will break, but it's just been very consistent. We can go back here and just keep going back, and you can just see over the course of time that this thing has just moved in one direction to the upside. And so it's really never a good idea to short this for very long. And this is McDonald's, symbol MCD. There's a lot of stocks like this, but it just never makes sense for me to try to invent something that's really complicated just because, why not go for the easy way? Why not try to find the simple trades that are going to work? You don't always have to find the next best thing all the time. You just find what's working and you just keep doing that over and over again. And a trade like this is one that just works over and over and over again. So you find stocks like this and you just wait for the pullbacks and you buy in. You wait for the pullback and you buy in. You wait for the pullback and you buy in. So when I was, in my marketing, I said that I found the strategy that works the best for me. And it's basically find something that has a very strong trend in one direction or another, and you just trade that over and over and over again, and you don't have to be really complicated. But again, step one is to find the trend. So step one is trend. Step two is to identify levels, right? Step two is to identify key levels, support and resistance areas. And then step three is to look for consolidation, right? Consolidation is step number three. And, step four, and I added a step here because I wanted to, is trade on the pullbacks. And some of these are the same, right? The pullbacks. And then step five is candlestick patterns, right? Candlestick patterns like we see here. Let me show you this great candlestick pattern. These things work so well. But that's it. And let's go ahead and look at this one. This is just a really solid pattern. And this would be your engulfing pattern. Look, the price came down, hit a new low. This candle came out, took the high. That's what you call the morning star pattern. When you have a very strong trend, when you have this is one of those V ones that I talked about though. When you have a very strong trend and you get a move like you see right there, that is a perfect opportunity for a buy, right? It's a perfect opportunity for a buy because number one is we know that the trend is up. We know that this is a very strong trend. There's a great opportunity here. We follow the chart. We don't get complicated. We don't try to invent something new. We're not going to worry about emotions because we have seen that for the last 22 years that this pattern has worked on this chart. So if it's worked for the last 22 years, the chances are of it working again are perfectly high probability, right? And remember, in the markets, we're just going for probabilities. It's not something that we're going to win all the time, but when we lose, we want to lose small. When we win, we want to win big, and we want to go for the highest probabilities that we can possibly find. And if we use the filters that I talked about, which is your trend, your support and resistance levels, finding those consolidations and the windups and waiting for the pullbacks and then looking for the candlestick pattern to show you when to enter. If you do that and you're consistent with it and you combine that with following your plan, using good emotions, not getting caught up in the fear of missing out and all of those other things that you can get caught up in. If you do all of those things, you're guaranteed to be successful in trading. You're guaranteed to have a high probability trading system that you can rely on for a long time that's going to generate income and revenue for you. But as they always say, trading is risky and you don't want to ever trade more than you can afford to lose. Take the time to learn how to trade properly, do it right, do your planning, do your homework, learn how to manage your risk properly, learn how to run your personal finances right. A lot of times people will come into the markets and they don't have good financial base. And I can understand that. That's life. It's hard. But do your homework, start managing your own personal finances. Do the work on solving financial problems in your life. The market is not a get rich quick scenario. It's a way to add income and revenue to your life. But if you treat it like a casino, you're going to get crushed, right? It's a great opportunity, but you have to approach it with wisdom and a sound mind, and you have to be willing to do the work, right? So many people are lazy, and I'm not bashing anyone, but they're lazy with their own personal finances, and they're in a financial crunch and they're in pain, and they want to go into the market and have it solve all their problems, but it's just not going to work that way. The only way to get your problem solved is to stop being lazy and to start doing your homework and to take it seriously and hold yourself accountable and be consistent. Take consistent action and you will see a change in your results. And so that's the strategy. I hope that's been helpful. I think I'm running out of time. But Rob, thanks a lot for having me. I really appreciate it.
Case, I have to say, I appreciated your little, just the way you went on the end about good risk management, good technique, good strategy. I was getting moved over here. No
Good,
truer
good.
words have ever been spoken, ladies and gentlemen, when it
Thank
comes to
you.
trading the markets. But Case, thank you for being here. Great stuff. Not only is your story incredibly inspirational, father of 9, military vet, blue collar worker, perseveres and succeeds, but your topic, 25 years of trading, and I'm sharing the best strategy I've ever used. I was looking at the big V thinking, oh my God, there's the COVID crash.
Oh yeah, that was it right there. That was
Yeah.
COVID. Yeah.
No,
Yeah.
and I mean your analysis spot on. I was looking at, the higher highs, the higher lows, the break of support, the break of trend, you know, uh, every pattern that we know, the downtrend starting and then changing lanes and a downward pitchfork. You're brilliant, man. Incredible stuff. Ladies and gentlemen, if you want to consistently find accurate entries and even with a small account, and have the ability to consistently make 10,000 a month trading the markets or more, you can contact Mr. Casey Stubbs of Trading Strategy Guides at tradingstrategyguides.com. I'll put his link in the chat box. I haven't done so yet, but thanks again for being here, Casey. Great topic, great speech. We hope to
Thank you,
have you
sir.
back. Happy New Year to you, friend.
You too.
Ladies and gentlemen, I mentioned at the top of the show we had a great lineup, and our next presenter has a very impressive resume. He's widely recognized as the world's most disciplined options trader. He's been actively trading options for more than 21 years and has published daily insights for his trading trainer program participants every single night. 5 days a week since 2002. Ladies and gentlemen, here to present Options Mastery Unleashed, building a 7-figure income strategies for success in 2024 is Mr. AJ Brown of Trading Trainer. Welcome to Trader's Corner, AJ.
Hey, how have you been?
I'm good, and I know this is going to be the 5th time the audience heard it, but I passed my first FINRA exam Friday.
Oh, that's simply amazingly wonderful.
So
That's
I'm going to be an
awesome.
SIE shortly.
Wow, that's fantastic. Congratulations.
Thank you so much.
And then also, did you notice when Casey was showing us a consolidation that in his little chicken scratch on the screen, he wrote the word mom? I thought that was the cutest thing ever. He was like showing a consolidation pattern, and I looked back, I'm like, he just wrote mom on the screen. That was very
I didn't
cool.
pick that up, but I wonder if she was watching and he promised to sneak in like a hi mom or something somewhere in the presentation. If you
Absolutely.
do
Now
it,
I've got 45 minutes, right, Rob?
you do. And if you run a
And
minute or two over, live show is acceptable. But
that's
please don't abuse it. If you go more than 5, I'm going to politely interrupt you and ask you
that's
to work to
fine.
a wrap up.
And I'm not going to be talking too much about any products of mine, right? I'm just doing a straight lesson just to make sure.
All right, awesome. Go right ahead. And I mean, usually somebody makes an offer or something a little bit discounted, on our show for being the live thing and our
Very
attendees.
cool. Very cool. I'll make it happen.
All right, take it away. I'm here watching.
All right, fantastic. Hey guys, I think I might even just turn on my camera. Now, I warn you, I'm on weekend duty here with my toddler, and so I might look a little bit funny here. But in your let me make sure I'm showing the right camera here. Give me 1 second. In your preferences, if my face is really bumming you out, then you could definitely squeeze me. You could just move your cursor around and get more of my screen. I've got a little bit of a presentation. I've got some live trades. I'm going to skip through some of my slides just because you've probably seen it a bunch of times already. And in addition to that, I want to make sure I put this hour presentation into 45 minutes. So let's get right into it. So here's a couple of facts I want to throw your way. First of all, a lot of uncertainty going on, whether it's, what's happening here in the States or whether what's happening abroad. These things all affect the markets, whether the government's going to shut down, who's going to be the next president, what the Fed is going to do next. A lot of uncertainty in what is going on, but what's happening in the markets, and I want you to kind of compartmentalize what's happening in the markets. If you play it right, it can set you up for months, if not years to come. And what I like to do, and you're going to see this in a little bit, is I like to find the most boring, sideways, choppy, ugly symbols to trade with options, right? Because a lot of symbols find their home in that sideways, choppy pattern that otherwise directional traders can't make heads or tails of. So the scoop is remember that money is not created or destroyed. No matter what the big talking heads are yelling on the TV about or on the YouTube about saying, this many $1 trillion evaporated from the markets today. In reality, the markets are just a place where money changes hands, right? And so the key is making sure we put you on the correct side of the transaction where the returns are flowing to, not flowing from, if that makes sense. So I always like to ask everybody this question up front so I can kind of tailor my presentation. What would be ideal for you, right? And just kind of think about this a little bit. And if you want, you can put some messages. I think there's a chat box open and we'll take a look at those. But are you here because you want to learn how to invest for low risk and low return? In other words, I like to call that learning how to fish and be 100% self-reliant. Or are you here because you want to invest and have seasoned investors reviewing what you're doing and making sure, so that you can build some confidence, making sure that you're doing the right thing? Learn how to fish, but have expert fishermen right there next to you. Or are you is your big goal to find some really seasoned investors, seasoned traders, and basically copy, do what's in their, do in your portfolio what they're doing? Fish alongside expert fishermen, or are you here for some other reason? So if you just kind of think that through, if there's a place to type that in, go ahead and type that in. I'm very curious, and we'll keep that in mind as you calibrate yourself through my presentation and even other presentations today. I'm going to skip these right here because this is that tried and true, you've seen it a million times about what happens to a penny if you double it every day. And as you know, it compounds, right? Because if you double it every day for a month, you wind up with $21 million plus. And I'm not sure if this quote was actually attributed to Albert Einstein, but it often, I mean, if he actually said it, but it often is attributed to him. It's compound interest is the most powerful force in the universe. Now, I'm not talking about trades today that are going to double every day, but let's keep that thought in the back of our mind while I put this chart up here. Now, this is a chart I'm going to come back and revisit, but I kind of wanted to kind of wet your palate with it right now. I want you to notice a couple of things. First of all, right here, this is a zero line. It's not well labeled, but it's a zero line. I want you to notice that very quickly on, there's a 1, there's a 2, there's a 3, very quickly on both of these lines, which if you're tuning in, these actually happen to be P&L lines. Both of them go above the zero line pretty quickly on. Think about what that means. And the other thing I want to point out about this graph is that the gains are indeed exponential. You know, they're parabolic, they're not linear. And so I want to keep that in your mind as well. And we're going to revisit this chart and put some meat on it in a little bit, but I just wanted to kind of ingrain that in your mind right now. So coming back to that whole idea that I started about, you know, not really looking to focus to double, you know, there are folks out there who do trades that double in a day, but more than likely, if you look at their track record, they'll tell you about those trades, but they've got a bunch of other losers, and it winds up balancing out in the wash. And I don't know if you've had the same experience as I have, but some of those folks that kind of ring their own bell about those type of trades, when you dig deeper, it's kind of a little bit, you know, I get a little bit of skepticism. So what I focus on is doubling my portfolio every year, right? And so if you reverse engineer that, that gives a more doable goal, right? Because if you earn, I want you to really think about this number, and maybe if you got a pad and paper, write that number down. If you earn 6% on your money every month, your investment is going to more than double every year, right? So if you got $1,000, $1,000 that you're starting with, after 1 year, you'll have a little over 2,000. Focusing on that 6% number, and in 2 years, you'd have a little over 4,000. In 5 years, you'd have close to 33,000, and in 10 years, you'd be a bona fide millionaire. Now, by the way, when I was a kid, being a millionaire was the end all to be all. Nowadays, you really have to be a 10 millionaire to really be ahead of the pack. You know, the Fed's raising interest rates, there's inflation, right? So keep that in mind. But in 10 years, you could be a millionaire. In fact, this is actually the recipe that I followed starting in the late 90s. And at this point, I'm managing an 8-figure portfolio for myself, my wife, and my toddler. So, you know, you just stick with it and you focus on something. And it's very difficult because we get attracted by shiny objects and we change course. But if you just stick with what you know and what you've got experience at, and you keep going with it, over time, it works for you, right? And that's a key thing. Another thing I like about focusing on 6% a month is once you grow to your portfolio to about $100,000, you can then start pulling some dollars out. In fact, you could start pulling dollars out earlier, but I like growing it because the mean salaried income here in the United States right now is $87,000. Now, I know if you live on the left or the right coast, you know, you're earning a lot more because those cities have a lot more, but the mean salary is $87,000, and that's working close to a 50 to 60 hour job a week. But if you let your money work for you and you're just focusing on how can I get that 6% per month, a $100,000 portfolio is going to generate way more than the mean salaried income, and you're going to be able to put a lot of less effort into it. You're going to be just exercising your trading strategies, right? Letting your money work for you. So I don't know if you guys have read that whole Rich Dad, Poor Dad, but he really makes an emphasis on the difference between being an investor and being an employee. One is trading your time for money, and one is having your money make money for you, right? And so it's two different mindsets. So what is it I'm talking about? We're talking about selling theta decay optimized option premium. Now that's a lot of word salad. I'm not trying to impress you, so let me break that down. What we're talking about is profiting on time passing by. Now, a lot of people think when we're talking about equity options, they think immediately towards like, hey, let's leverage a stock move, right? So options by all means, they are influenced by the underlying symbol that trades, right? But they're also influenced by a lot more. They're called expiring assets for a reason. They have an expiration date, and their value changes as they get closer to expiration. In addition, their value goes up and down depending on fear and confidence in the market. There's a couple of other influence in the options picture. And so the scoop is We're focusing on profiting on that component of an option that changes price as time passes by, because time is very reliable, right? Predicting what an individual symbol, whether it be a stock, an ETF, or an index, is going to do is quite an art, and there's always a lot of uncertainty, and there's always a lot of miscalculations, right? You predict something and it doesn't go the way you want to. But I'll tell you, time is quite reliable, right? If all of a sudden 60 seconds wasn't a minute and 60 minutes wasn't an hour and 24 hours wasn't a day and there wasn't 52 weeks in the year, I think we'd have a lot more to worry about than even, you know, seeing how our portfolio and nest eggs grow, right? Because time, we can count on it, right? So with that said, let me just do a quick refresher here just to make sure you are paying attention. What is that focus for a monthly return on our portfolio? If we're focusing on doubling our portfolio annually, is it 0.5%, 1.5%, 5%, 6%, 10%? Write your answer down if you can on a piece of paper, or at least think about it hard. 6%. So if you didn't write down 6%, or if that's not the number that came to your head, let's cement that in your head. Now, a lot of the folks in my program are doing much better than 6%. They're doing closer to double-digit returns on their portfolio every month, and that means they're doubling their money much quicker than a year, more around 5 or 6 months. But we aim for that 6% every month, knowing that that would result in a doubling of our portfolio every year. Which means another thing, a lot of us have a mindset of being a trader, where we trade, you know, one symbol here, one symbol there, see what we can do. But if you think about what a hedge fund or a pension fund or a mutual fund manager does, they're looking to take all of their invested dollars and get it working for them, not to just take a portion and see how it works out. So you might want to also think about, hey, what can I do? You know, I love to play these little trading games with a little bit, you know, just for fun. But what am I going to put my big, you know, portfolio chunk into that's reliable, that's going to make it grow consistently, right? Because, you know, I was talking to a trader, and he said, yeah, I do a little trading. I'm like, well, what did your portfolio grow by the end of the year? He's like, well, I did these trades that, you know, one made 30%. I'm like, yeah, good. I'm glad you had some winning trades over the year. What did your portfolio grow? He's like, well, I didn't really trade the whole portfolio, and so my portfolio overall only grew by 7%. I'm like, hey, you could have put your money into a T-bill, right? So the scoop is I like to think as a portfolio manager, and I try to get my whole portfolio invested into these reliable type of investments and have it growing consistently, rather than just doing little trades here and there. So portfolio mindset, portfolio manager mindset versus trader mindset, something to keep in mind. Now, a lot of people, when I say options, they're like immediately going to, aren't those things risky? Well, the scoop is it depends how you use them. But in my mind, right, when you have a stock or a commodity or a future, you're pretty much trying to buy at a low price and have it go up, right? You've got one strategy: buy low, sell high. If you're elegant, especially in the equities market, and you know how to short things, well, then you know how to sell to open and buy back to close at a lower price and make the spread that way. So you have two strategies. One of the things that attracted me to options in the late 90s was there's like 27 different strategies on how you can combine the options, and also options have different personalities depending on what their expiration date is and what their strike price is. So combining these different personalities of options together, you get 27 different ways to profit on pretty much every pattern in the market. So you can make money when the market goes sideways. You could make money on time passing by, which I really like. You can make money on if all of a sudden there's a whole bunch of fear in the market. You can make money if there's a lot of confidence in the market, right? So by buying and selling options of different flavors, different expiration dates, different strike prices, and combining those type of transactions, you take your tool chest from 1 or 2 tools to a whole plethora of tools. Now, a lot of people are saying, now, what are these options? And I know some of you know these things, but I'm going to cover all my bases here, so humor me. Tech speak, it's a financial instrument called a derivative. They're typically bought and sold to hedge against risks in the stocks, indexes, ETFs. What we're doing is we're selling their premium to generate ongoing income. Just really quick, and I'm going to skip this slide because I'm not going to spend much time telling you about me. I've got all these assets on the socials that you're welcome to check me out. YouTube, I've got a podcast that goes on weekly, Facebook, X, Twitter. I've written a whole bunch of articles. You can check that out on my website. I've published a lot of white papers on trading. You can get a hold of me. That's my phone number if you want to get a hold of me directly. And by the way, if you do visit any of my socials, will you please give me a like and a subscribe? That always helps that algorithm and gets my message out even further. But the home study course that I did about 15 years ago, you always find that on shelves of really successful traders. I've got all these degrees, but what's most important is when I started in the late 90s, and back then you didn't really go to a website and go to an event like we're at today. You had to go and drive to a hotel. You went usually on a Saturday for a half day, and the next thing you know, you paid a chunk of money and you're there for all day Sunday, and then the next thing you know, you're on a plane and you're spending 3 or 4 days with somebody. You guys might remember that depending on how old you are, but I did that a lot, right? Because I had a pretty good job in Silicon Valley working for Hewlett Packard, so I had a lot of income. I didn't yet have a family. I didn't yet have a mortgage payment, so I had a lot of expendable income. So this is what I did with it, right? And that first year, not only did I spend $27,000 on seminars, which pretty much would have covered what my first engineering degree at University of Virginia cost me, but I wound up giving $85,000 back to the market, making really stupid trades, trying to follow these folks, right? So I've been in a lot of your shoes where, you're just trying to figure out which of these strategies. First of all, is the person who's teaching me, are they actually on the up and up? Because I found throughout the years that there's quite a few folks that call themselves teachers, but really they make more money not doing the trading, but from having me sit in their audience. But then the other thing is making it work like they did, right? So here I want to give you 4 shortcuts. Please write these down. These are the ones that I finally materialized, and it took me about 7 or 8 years. So if you take these to heart, you just save 7 or 8 years in your investor and trading journey. First of all, stop chasing shiny objects. In other words, settle on one type of investing and learn it well. And don't just talk about, the rewards of that type of investing, because that's always exciting, but think about what fits your lifestyle, right? When I left my last job, right, which is an acronym for just over broke, when I left HP in 2005, the last thing I wanted to do was work another 50 hours a week, right? I wanted to start to do the stuff on my bucket list, right? And so the scoop is I looked at my personal lifestyle and I picked trading strategies that, for instance, you didn't have to be in front of the computer when the signal come. You could be sloppy, you could be a day or two late and still act on the trade and have it perform wonderfully, right? I looked at that kind of stuff, at what my lifestyle was at the moment in 2005, not on what my dream lifestyle would be. I was like, what sort of trading? I tried being a day trader, burned out of that in about 18 months. Look inside and be clear with yourself, right? And I've had people come to me and they're like, I'm going to give you this big chunk of money, train me to be a full-time options trader. And then I train them and then I check up with them like a year or two later. I'm like, why didn't you stick with it? And the answer was, well, it took too much of my time, right? It turned out to be too much enveloped, right? And I'm like, well, why didn't you ask me to teach you just like, for instance, premium selling strategies, which are oftentimes quite mellow. You could be sloppy. In fact, I'm not even here during the day. I let my bots do my trading for me. I come in the evening and I spend a few minutes. I think that's why people call me the disciplined options trader. I think my peers behind my back call me a lazy options trader. I like to think of myself as an efficient option trader because I like to keep the cash flow coming in with as minimal, right? As minimal. I like to spend my time with my toddler, right? I'm 50 years old and I have a 2-year-old, and I'm at a point in my life where I'd rather spend the whole day playing, puzzles with her than sitting in front of the market. So take inventory of what's going on in your life and pick something to focus on and then stick with it, because it's usually on the back nine, right? It's usually doing the strategy consistently over time that's going to pay you. So if you keep getting distracted, you're never going to let something work. So that's number one. That was a big aha for me. That just saved you years. Number two, make sure you hire a mentor who's currently doing what you want to be doing, and most importantly, knows how to teach. You don't know how many thousands, even tens of thousands of dollars I've given to folks who are obviously amazing traders, amazing investors, amazing option traders. They couldn't teach me diddly, right? Because they don't know how to teach, right? They know how to trade, but they don't know how to teach. So make sure when you're going to find a mentor that they actually know how to convey information, especially if you're like me. I'm a thick-headed older dude who's got Italian roots who doesn't like to listen, right? So make sure you've got somebody who can actually teach. That's something it's called, if you get into the jargon, the psychology of it, it's called learning by guided discovery instead of trial by error, right? Trial and error. Finally, this is number 3. Join an investment group. Don't do this Lone Ranger. Get other people, right? Look over each other's shoulders, and if they're doing something cool, if they find a candidate that's cool, do it, right? It's called leveraging with pride. It's something I learned at Hewlett Packard. You know what Hewlett Packard used to do? They used to go and buy the Epson printer and have the engineers take it all apart, figure out one thing they can incrementally improve on, and then call that their own printer, right? It's called leveraging with pride. And in schools, sadly, we teach kids don't cheat. But in the real world, that's how we improve and keep moving forward as a society. We leverage with pride. And that's what I need you to do. I need you to join an investment group. Don't sit there and bang your head against your desk all by yourself. Do this in a group. And finally, surround yourself with like-minded investors, especially in the options world. There's a lot of naysayers who've never even touched options, who will tell you if you have one losing position that options are risky and you don't know what you're doing, right? So be around people who will celebrate your wins, but will also hold you accountable when you need to keep going, even if you have a loss, okay? Those are the 4 things that changed my life. It took me 7, 8 years to figure that out, right? And now you've got a cheat sheet. All right. Last thing I want to tell you about myself, and then we'll get back to the lesson on premium selling, is I do this all for a foundation that I started back in 2003, where I take historically underserved inner city kids off the street and I teach them how to invest. I started in 2003 with just 9 kids. I put them through the same 6-month program that I'm teaching now. And I'll tell you, one of them's a professor at Denver University. All of them went off to be very successful and in their personal lives as well as in their trading lives. And we've been running this foundation. We've moved it from the Denver area to the Chicago area. You've probably heard or you have experienced the south side of Chicago. There's a lot of underserved folks there. Last year we took about 130 of those kids off the street, taught them how to do some option trading, premium selling, how to take care of their own money. And so all the gains from my company, Trading Trainer, actually gets put into this foundation. My family and I live on our portfolio gains from the actual investing I do, because we like this legacy. We like to know that this is what we're contributing. So Just something to know about me. All right, back to the story. How do we sell premium? Well, I'm going to ask you to focus on 4 simple transactions. Writing a covered call, a lot of folks know about that. But do you know about covered puts? And I'm going to tell you, in 2024, I feel like you better know about writing covered puts. That's flipping the covered call upside down. Covered calls do well when the stock goes sideways or up. Covered puts do well when the stock goes sideways or down. So if you don't have a familiarity with covered puts, I'm not talking about selling cash secured or naked puts. I'm talking about covered puts. If you don't have a familiarity with that, put that on your to-do list for 2024 to become a master of. And then you can also include a little bit of leverage, right? Writing a covered call against a leap, that's like supercharging that covered call writing. And if you're an academic out there, you know that's a variation of a bull call diagonal debit spread. And then the 4th one is doing the same thing, but with the covered put. So writing a covered put against a leap, supercharging that covered put, that's called a bear put diagonal debit spread. And please put some notations next to these. The covered call, this guy right here, it's a cash trade. So is the bull call diagonal debit spread. So is the bear put diagonal debit spread. Those are cash trades, which are perfect for doing in retirement accounts, right? I have a lot of folks who are building up their retirement, and some of them are of retiring age and never thought about it and was hoping that the government would be there for them and their pension programs would be there for them, and now they're having to do some catch up. These can be done in a retirement account for the tax benefits. This guy over here, the covered put itself, needs you to have a margin account. So that's something to keep in mind. What's nice is its twin sister down here is a cash trade. So if you don't have a margin account, if you don't have the ability to short underlying symbols, then you can still get the same effect by becoming familiar with bear put diagonal debit spreads. Okay. So I keep mentioning this word option premium. It's the option price. Know that there's an in the money component and a premium component. Some people call that the time component. I don't like that name because there's a lot more that goes into the extrinsic value than just time. So we call it the premium value. So take, for instance, I looked up Lyft, right? The symbol Lyft, the car sharing, the ride sharing company. They closed yesterday at $12.88. Now, if you bought shares of Lyft and then immediately sold the February 16th $13 call, right? The next January option that actually expires next Friday. So you only got about 5 days of time to run out. So when you start to get less than about 5 to 10 days of expiration date, it's nice to go out to the next monthly. If you're doing weekly, you want to go about 3 to 5 weeks out. So if we sold the $13 call, we would get an instant dividend, right? So options are sold in lots of 100 option shares. They're called option contracts. So for every option contract we sell, we get $119. That acts almost like a dividend. Now, it's not an official dividend, but it's like you're getting this cash check back. And now this option is acting like an expiring coupon, right? Because as we get closer to February 16th, its value is going to get down to the point where it can expire worthless, which is exactly, if we made $1.19 now, we'd like this to expire worthless, right? This is also, this $1.19 is going to reduce our break-even price on the Lyft shares, right? So it gives us a discount on the stock. So let's run through the scenarios. What happens if Lyft closes above $13 on February 16th? Well, we spent $12.88 on the Lyft stock. We get 13 for getting exercised out. That's the strike price. So we make 12 cents of profit. But don't forget, we made $1.19 by selling that February call option up front for a total profit of $1.31. That's 11.2% ROI. Remember, I was telling you to focus on 6% a month. Now, what happens if lift is flat? Now, this is, again, you might have remembered I said I like the stocks that go sideways, that go flat, that maybe have a little bit of chop to them. So I paid $12.88. I get the $1.19. That $1.19 is my profit to date. And here's the cool thing. I've made 10.1% ROI, and I get to do it again. I get to sell the premium ongoing. This is actually the ideal state, because if I could just have this one stock that I keep selling premium again, month in and month out, on average, my program participants can do this about 5 months before they get exercised out. If you could do that, that's the key to creating this reliable, consistent income and only having to do one trade a month. Starting to get it? Now, what about if lift drops? Now, I'm going to show you a strategy on how we can reduce our risk on reward even further, but built into this covered call strategy is a profit buffer, right? Because we took that discount on the stock, reduced our break-even price, the stock would have to go all the way down below $11.70 in this case for us to even be in the red. Now, remember, I will show you in a little bit how we reduce our risk even further, but keep that in mind. So here is that was a theoretical trade. I just looked up those end of day prices yesterday, but here is one on SLV. This is actually from our trade log. On November 15th, we got our signal to buy some SLV. I bought 500 shares at $21.40. And you can see with my commission, it actually is $21.41. Came out to about a little under $11,000 trade. The first time I sold premium was on December 5th, 46 cents per share. That expired worthless. I got to do it again, 37 cents per share. Now, this next option is expiring next Friday. It could expire worthless, and I'll just do it again. Or if I get exercised out, I'll get exercised out at the strike price of $22. And so that's going to wind up being a 6.5% ROI for that amount of time. Not the best of my trades, but it was like so straightforward. If you take a look at the chart on SLV, here, I'll pull it up for you right now. This is one of those stocks that's just, it's an ETF it's just sideways choppy, freaking ugly. You wouldn't trade this directionally, but hey, I'm reliably with just a couple trades. Let's look at it. I did a trade on November 15th, and then I did a trade on December 5. The December 15th was just when expiration happened. No trading happened on that day. And so then I did a trade on January 2nd. I did 3 trades over the last 3 months or 2 months. And, you know, I'm just locking in this income. So not bad. I bet you I could do better. And maybe we can talk about that now. In fact, I'm going to pass these quizzes. I'm looking at the clock, and I want to make sure I stick to my time limit. So how can we lower our investment in these trades, increase our returns, and even if necessary, convert any of the margin trades into cash trades? And the answer is we're going to replace that stock with an option that is trading at parity. So we're going to introduce a little bit of leverage. You might be saying, now what is that option trading at parity? Option premium is the most when options are at the money. When we go very deep in the money, the option loses its premium, and we target less than 5%, and it's almost completely in the money or intrinsic value. Lot of word salad there. Let's break it down. Deep in the money options behave just like the underlying security. In other words, if the underlying security moves $1 up, so does that option trading at parity. If it moves down, so does the option trading at parity. They both move in lockstep, but the underlying security, the substitute option is a cheaper price. Now, don't forget these options that you're substituting, they do have expiration dates. How far out should we go? Well, we want to make sure that we go so far out in time that the trade doesn't end prematurely. If we're collecting income every month, the last thing we want to do is have the covering position that's allowing us to collect that income to just disappear because it expires. So I told you that most of our trades, they last about 5 months. On the really extreme levels, they could go 8 months. So we want to target 8 months, right? Let's go at least 8 months out in time. And we typically go for leaps, not always, but leaps, those ones that expire in January, they have a lot more liquidity because they've been around and they've been traded for longer. So maybe we stick with leaps just for that added liquidity. You want to make sure that there's buyers and sellers out there for you to play with. So remember that example on Lyft? Well, instead of doing the Lyft stock, we could instead use, for instance, the Lyft July 19th $7 call. It's about half the price of Lyft. So let's run through our scenarios. Buy that substitute option for $6.38. We're still going to sell that February option for $1.19, create that instant dividend, create that discount on that substitute option, all of the benefits of selling the premium. If Lyft closes above $13, first of all, we bought that back month option for $6.38. We get $6 back when we get exercised. That's why it's called a spread. It's the difference between the two strike prices, right? So we get the $6 back. So you might say, well, now you just suffered a 38-cent loss. Okay, but don't forget, I collected $1.19 up front and my initial investment was much less. So I made 81 cents of profit on that much smaller initial investment. That actually calculates out to 15.6% ROI. Remember, I'm targeting 6%. But now let's talk about the ideal case. What if Lyft is flat? So I pay the $6.38, I get the $1.19 back. That $1.19 that option expires worthless. I get to keep all that money. I've made 22.8% ROI so far on the trade, and I'm going to do it again and again. That's the ideal case. And of course, what if it drops? And it can, but there's still that profit buffer. In other words, this back month option would need to drop all the way to $5.19 in order for us to be in trouble, right? And before I do that, I want to show you a real trade. This is AT&T. We did exactly that. So you can see we bought the June, back in November 20th, I bought the June 2024 call. I paid $6.05. I bought actually 20 contracts or 2,000 shares, right? Because each contract is 100. And then a couple days later on December 10th, I sold the covered call. This is now covered by that substitute option. I made 13 cents. It expired worthless. I did it again on January 8th. I made 38 cents. And on January 19th, I could get exercised, or it could expire worthless, and I'll do it again for February and March and April. If I do get exercised in January, I'm going to wind up with a 23.6% ROI. Not bad. There you go. That's awesome. Now, what if you earn, no, I wanted to remind you that if you earn the 6% on your money every month, you double your money every year. If you're earning more like double-digit returns, it's going to be faster. So the last piece of the puzzle that I want to cover today is how we can reduce our risk even further. And what we're going to talk about is marrying a protective option. So let me just show you this trade. This is a trade, and this is one of my favorite. This is a trade that I actually started back in 2020, and I've been revisiting it ever since. But take a look here. I bought 600 shares of stock for $34.73. And then a few days later, I sold premium, but then I bought a protective option. I bought a protective put down at a strike price that was close to my break-even price, right? And I paid kind of royally for it. If you look here, I paid $4.75. But then look at what happened. My premium expired worthless, and when I no longer needed to have the protective option because my premium was gone, I was able to sell the protective option back because of my timing and selection at a higher price than I bought it for. So get that. It provided protection for me. Anything below $34 would have stopped the risk. But when I didn't need it anymore, because of how I selected the option and the timing of putting it on, only putting it on when I actually have premium sold, I turned something that usually is a loss into a gain. So now, not only am I making money on selling premium, but look, it looks like I made another $1.15 on rolling out the protective option. And then I did it again the next month. I sold premium, I bought protection, and then when I didn't need the protection again, I rolled it out to the next month. So I made another 61 cents. It's like adding icing on the cake of the premium trading. And I did that over and over. So now I've created two sources of income every time there's an expiration instead of one. And again, if you're using weekly options, you can, there's a potential you can accelerate that as well. I like using the monthlies because, like I said, I'm lazy. So that is what this graph is, right? So if I take a look at this graph, there's that break-even line. This gray line depicts what happens if the underlying stock goes against you and you get bailed out. And the orange line is what happens if you get exercised. So the average time that we hold these trades is about 5 months. And as you can see, if the stock goes against me, I still walk away with a gain, right? That's the cool part about this. Everybody's saying, well, what about your win-loss ratio? Well, even if the stock goes against me, I mean, my loss is a 50% gain. I don't know if you're getting that, but it doesn't matter. What has mattered is that my position, I held it long enough that it became a risk-free trade, right? Because even if the stock goes against your direction, you still make profit. I mean, this is just, the fact that people don't trade like this more often just blows my mind. How long before the position becomes risk-free? Usually within the first or second month. So yeah, take that in because that's how our positions are. It's more about having the position just be boring and becoming risk-free than it is about having to guess entries and exits. Does that make sense? I hope that makes sense. All right. So what do we have when our cost basis or our break-even price is less than our protected bailout price? You have what we call a risk-free investment, right? And so that's how we like to get these trades. So here are the 3 steps summarized. Number 1, buy or short an underlying security or supercharge it by buying a substitute option trading at parity. Number 2, sell a near-term at-the-money option for its premium value, get that instant dividend, that profit buffer, and collar it with a married option that is 3 to 6 months out in expiration to protect that investment, right? And so we talked about covered calls and we talked about the bull call diagonal debit spreads. And you noticed in my real trades, I was legging in on different dates. Basically, I look at a sideways choppy stock and at a bottom, right? And one of the things that I'm going to tell you today is, we've got with us some really cool indicators that we give our program participants that tell us when to do the trade at the bottom and the top. At a bottom, you'll go ahead and buy your stock or buy that substitute option. And then at the next reversal of the sideways choppy boring stock, you're going to sell the call, buy the protection. The call expires at the next expiration date. You roll out the protection, rinse and repeat. Now, we didn't spend any time covering what I told you in the beginning of the presentation you have to have under your belt, which is covered puts. But they're basically just the opposite. At tops is when you short your stock or buy your back month put option. Then you sell your near-term put option at a bottom. It's just reversed, topsy-turvy. You buy your protective call. The put premium expires worthless. You roll out your protective option. Rinse and repeat. Rinse and repeat. So last but not least, I'm going to just race through this in about 3 minutes. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, have support whenever you need it, because that's what it's all about, isn't it? It's about saving time, creating clarity, getting those results. And so I'm going to take a couple moments to tell you a little bit about my materials. This is for people who don't want to pay for a bunch of data subscription, want everything they need to do this premium selling in one resource place, don't want to miss opportunities, don't want to spend time doing other things, don't want to be alone, want step-by-step instructions. In other words, somebody who wants consistent and reliable results. So in our program, and I'm just going to summarize this, video tutorials, monthly live classes. This is kind of like a lecture series, and all their replays going all the way back from 2010 are present. Screeners, we've got screeners that run every evening that tell us what symbols to sell the premium against. We have planning tools that actually tell you when to do, what signal to look for. It spits out a trade plan for you, and it tells you, do this step on this date when you see this. Step 2, do this. The planning tools are all included, software planning tools. Weekly live workshops. There are folks who stay with my program even past when I want to kick them out, because they like coming every Thursday where we actually sit down as a group and plan out a trade. And I say, why haven't you gotten it by now? And their answer usually is, why would I leave when you give us a trade every week for us to just go and do in our portfolios? And I can't argue with that. And finally, the last piece is trade review. People send us their trade plans. We review it so that before they actually do it, we'll give you a write-up. Before you actually do it, you know if we have any gotchas. So we like to handhold you, right? So what is that all worth to you? I've got a couple of bonuses for being part of the Trader Corners event. Number one is the double your money back guarantee. So I want you to do this program for 6 months, not because I think that it's going to take you 6 months to learn it, but because I think you're actually going to learn it in 2 or 3 weeks. Most people do. But I want to be there. I want you coming to the Thursday workshops. I want you taking the trades that I come up with. And in addition, I want to review your trades for 6 months so that I get you kicking off on the right gear. And at the end of the 6 months, if you're not making profits, I'm going to give back your enrollment fee times 2. So that's my double your money back guarantee. The other thing I'm going to do is I'm going to give you a session with one of our one-on-one coaches. These are, and this is a real bonus. They're going to help you to, come to a path based on where you are right now and where you want to be. They've been there as well, and they'll help you navigate what are the steps you have to do during the 6 months to get to where you want to be. So what is all of that, including the double your money back guarantee, the bonus strategy worth for you? Well, if you go on my website, you know that the 6-month program is $597. It's a flat fee. I'm not going to ask you to re-up. It's a flat fee, and I actually want you to leave after 6 months, right? But for being part of the Traders Corner event, we're dropping it only through this weekend by $100. So the price is only $497 for you. All you have to do is go to optioninvesting.org/Traders Corner. And you want to put this promo code. If you go there, right, you'll see this. You'll see this. It's coming up. I'm bringing it over. And I hope it works, because sometimes my programmers, I leave them a message on Friday night. Let's click the get started now. Fingers crossed. Just a moment. And then you come to the order form. Oh, good. So there's the $597. And I'm going to put in the 100 DISC. Cross your fingers, folks. Yes. Put in that promo code. Don't put any other promo code. Even if you go back and you read that, that sales letter page that this sends you to, don't put in that promo. This one's going to get you all the free indicators. If you have any problems placing these orders, of course, you can call me. There's my phone number, and I am done. Whew.
AJ, thank you so much. Great presentation. I like your mathematical, everything in it and how to increase things. It's brilliant. I respect your commitment to your community of traders' success, and thank you for making the generous offer to our audience that you did. Ladies and
Excellent.
gentlemen, if you're interested in building a 7-figure income, this year trading options, then Mr. AJ Brown has a viable path to accomplish your goal. I've put his
Bye,
link
everybody.
and the promo code in the chat box. Thank you again, AJ, for taking your time to be here. I did find your community on Facebook. I found 2 and joined them both. So you'll see me in there. And
I love it.
I hope you have a great new year. Hope to see you back on Traders Corner. Have a good weekend.
Bye, everybody. Thank you.
Ladies and gentlemen, I'm going to again take the opportunity to plug one of our new sponsors. Moomoo, MOOMOO.com, and us are working out a sponsorship deal. I'll put their link in the chat box in a second. If you will put $100 into an account there, they'll give you 5 free stocks. If you'll do 1,000, they'll give you 15, and you get something extra for clicking our link and doing it through us as well. But at the top of our show, I said we had great presentations, and we're down to our last 2. And as usual, we saved the best 2 for last. Our next presenter is an extremely gifted trader and software developer who became interested in day trading as a college student. He started using NinjaTrader out of curiosity to test his ideas and now has over 14 years of experience with programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the N2, and he's most passionate about futures trading, but remains committed to building the best day trading tools possible. He enjoys connecting with his clients and bringing their ideas to life. Here to present Futures Trading Plan, Get Disciplined in 2024 is one of my favorites, Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel.
Thanks, Rob. Everybody,
You're very
Traders
welcome.
Corner. Happy New Year. I think it's almost too late to say that, but I'm still kind of in that mode, just feeling the energy of the new year, the new start.
The fact that it's our first broadcast of the year, you are absolutely entitled to say it. I make the rules.
That's right. We make the rule, right? Well, thank you, Rob. I'm going to get right into it. Again, the title of my talk today is going to be Futures Trading Plan, Get Disciplined in 2024. And I'm excited today because I think that I really have a lot to offer you guys from my own experience, right? I'm going to talk about my trades on Friday, some mistakes I made, and how I'm managing my risk and how I'm staying in the game, and talk about my prop trading and show my charts, my tools, specific setups, and things like that. So again, last presenter talked about risk and options trading. I think we've had a lot of talk about prop firm trading. Norman Hallett, I believe, was a presenter earlier today. In fact, I know he was. We talked on Friday, actually. And so, yeah, if you guys are doing trading futures, or even if you're not trading futures, if you're using a firm like Apex or another prop firm, I hope you will pay attention because I've got some stuff for you guys. So I'm presenting today from Atlanta, Georgia. This is my office. Actually, I just bought the condo a couple years ago. I'm presenting from this desk right now in this moment, and we're in this together. So I'm going to show you first off the top my latest bank statements. I love to do this because I take a lot of pride in the work I put into trading and being completely transparent with you guys. And so this is a total of $28,000 in Apex payouts, with another $2,000 coming. I'm going to request on the 15th, so that will make a total of $30,000. I know not everyone chooses to show this, but I just like to do this because I know you guys, there's a lot of great presenters, a lot of great tools, but I really value just putting it out there right in front of you guys. And so in it with you. So let's take a look at some questions here. I like to start with these questions and I keep refining them, but just so we can all get on the same page. And again, there we go. Again, I do have the chat box open, so feel free to jump your questions in and participate with me here. Would your day trading results improve if you had strict management rules for each trade? All right, absolutely, yes. I can actually talk about Friday and some mistakes I made and how I'm continuing to refine my risk. Have you missed a trade entry because the signal bar closes and you hesitated to place your order? Yes, right? Have you missed a trade entry because price is moving too quickly to get the order placed? More than likely, yes. And I have, with my enhanced chart trader platform, I've got some great tools for entering the market in a semi-automated fashion. Do you struggle with trade exit decisions, like determining the best target and stop loss prices? Of course, right? We all fight these decisions. And speaking of decisions, have you ever second guessed yourself when making decisions about trade entries or exits? Oh, it's miserable, right? Second guessing. We can't be doing that, guys, right? And so again, I'm in this with you guys, and I want to start by looking at my trading plan. So I would suggest you take a screenshot of this and implement something similar for yourself. Trading hours, 8:30 to 11 o'clock, right? I'm added some pre-market hours to my trading plan. So I think there's been some good opportunities when the news comes out to capitalize on moves. Maximum trades, 5. I broke this rule on Friday and I paid dearly. Made 8 trades, took like 6 or 7 losing trades in a row, just kept revenge trading. And so again, guys, I would suggest a maximum number of trades. Markets allowed, NASDAQ, ES. For me, contracts allowed 1 mini or less than 10 micros. And this is for funded futures as well. I'm not messing around, whether it's an eval or a funded account. Okay, limit your number of contracts. You want to trade the evals just like you would trade the funded accounts, right? If you're gambling on an eval, do you think you're going to be able to pass the funded account when you get it? Absolutely not, right? So just some thoughts. Language and mindset, positive. How about you guys? My language can get out of hand. I'm taking losing trades. The market's not doing what I expected it to do. And so just want to continue to work on my language and my mindset. Any comments on that? Hit me in the chat. My customers, if you're here, let me know in the chat. Would love to say hi as well. So I'm going to
I was going to make
also
some
just
jokes,
talk
but I'll
about,
hold them.
what's that?
I was going to make some jokes, but I'll hold them. Just don't break your monitors.
Man, I'm going to show you guys some trades from Friday. I'm excited about this. And we've got also a great presenter after following me up as well. And so, yeah, just excited for the rest of this. The next 90 minutes, I think, is going to be so powerful. So let's go into risk management, guys. And I talked about this in December, but there's probably some new people here, and I just want to refresh you guys. I believe risk management is the most important part of our futures trading journey. More important, and why? 3 reasons. More important than trade setups. And with good risk management, I think we can eliminate or minimize our fear. Also, with good risk management, we can minimize our decision making and eliminate stress. Let's take a look at each of these real quick. So with trade setups, we have thousands of possibilities with indicators and logic, right? You guys know this. Hundreds, if not thousands of, hundreds of indicators combined, thousands of possibilities, right? Now, just listening to this book, you guys should check it out. If you haven't, it's called Biggest Loser Wins. And he talks about it. Technical analysis is conflicting, right? How many times you wanted to enter a trade, you say, well, I got one thing telling me I should be short. I've got another thing telling me I can be long. I might have 2 things or 3 things calling along, but 1 or 2 things saying, well, the market could consider a short. So always conflicting. Again, the market is random and always changing. And when we can define probabilities, which we can, right? We can write strategies and we can get it down to like a mechanized system. That's great, but guess what? Past performance of systems does not predict the future, right? The market's always changing. So I believe, again, back to the idea of risk management being the most important thing in our futures trading. It's more important than trade setups. You guys with me on that? Second point about risk management is fear. If we have a predefined risk and reward on every trade, and even on Friday, as bad as I trade, I had a predefined risk. And I was trading a small number of contracts. So you guys will see my accounts. I'm going to show you all my Apex accounts later in this presentation to where I didn't blow. I blew 1 account, right? And the rest of the accounts took smaller losses because I was managing my risk. 2 possible outcomes, win or loss, and we have nothing, or at least we have less fear, nothing to be afraid of or less fear. All we're doing is executing, right? And then the third point about risk management being the most important part of future trading is decision making. And you guys can Google this concept called decision fatigue, which has really blown my mind in the last couple months. Is a phenomenon where the more decisions we make as traders, at the end of the day, the more physically, mentally, and emotionally depleted we will become. So what do we want to do to avoid fatigue? We want to minimize our decisions, right? So we want to predefine our risk. One less decision we're having to make when we're in a trade. I believe predefining the stop loss, but allowing yourself to adjust the profit target is how we should trade. Having a maximum stop loss, and if you don't have a profit target, then go ahead and only reduce your risk once you're in a trade. Reduce your stop loss. Never increase your stop loss. All right, so just a few points about risk management. Trying to give you guys the best value from my own experience lately in trading. All right, so I'm going to talk about trading from a standpoint of a target. The idea is ready, aim, fire. So when we're trying to make a trade, and I'm sorry guys, I'm trying to get this PowerPoint. There we go. Most traders are disadvantaged. Day trading is different when you have the right execution tools. So stick with me. I'm going to show you some of my execution tools, including the chart trader, and then the dashboard, which is my trade copier risk manager product for accounts. But when we're trading, the idea is ready, aim, fire. So what do we do in the ready phase? We're identifying the trade. We're going to look at my charts. I'm going to identify trades with you guys, show you how I'm doing that. We're going to aim. So we're going to plan the entry. We're going to plan the stop loss. We're going to plan the profit target. Again, with my tools, you can do this directly in the chart window in NinjaTrader. And then lastly, we're going to fire. That's when we execute on what we planned. You guys cool with that? So I want to first offer you my enhanced chart trader as an upgraded solution for the NinjaTrader platform. So what is the enhanced chart trader? It's a suite of execution tools for both entries and exits, semi-automated, and it's going to allow you to build the perfect chart trader configuration based on your trading plan and your needs. And we'll start with the basic chart trader tools, which I'm going to show you right now. So let me get to the charts, and we're going to compare, and there's a gap here in the price action. I was trying to set up playback. This is Friday afternoon, no big deal here, but we're just going to compare this real fast. I don't want to spend a lot of time on this, but the click entry on the right is my chart trader. I believe everyone can benefit from this basic, low-priced solution as an improved chart trader, right? So everything has been simplified. You select your account at the top, your ATM below that, your quantity below that. You got an improved display where I can toggle between, so let's just like sell market and close the trade. We can toggle between showing the trade with or without commissions. We can show NASDAQ or all instruments up here. So very powerful. Be able to see, okay, on ES, no trades, no dollars, loss or win, versus on NASDAQ, $10. Okay, buy and sell click, click on the chart, versus Ninja, you're having to right click. You can also attach the indicator. So if I hit sell click and I click, it's placing the order. See it on the right compared to the left. If I sell click, and as I often do, I want to sell the 20 EMA on the 1 minute chart. You can see I hover my mouse, and then as I click on the EMA, the order is immediately attached to the 20 EMA. Very complicated to do this with Ninja. You can do it, but it's a whole right click routine. You have to go through the menus, select the right indicator. Here it's 2 clicks to start working an order at the 20 EMA. And so much more, the bar counter, the profit and loss display, the executions display. You can see here, I can see, and it's easy to see my trade, how long I was in the trade right here. This is not a great example, but if it was kind of a real trade, this display is very crisp and clean compared to Ninja. has a lot of unnecessary plotting on here. You can see all this. It gets really messy when you have more orders and things. So I want you guys to get this basic chart trader tools today. I think everyone, if you're in the Ninja Trader platform, can 100% benefit from this. All right. And I think I'm gonna look at, let's jump to the accounts dashboard. So if you're trading with prop firms, I'm gonna spend more time just kind of talking about that and how that works today. So again, basic chart trader tools. You'll have an offer at the end with a coupon to grab this chart trader and also the accounts dashboard. So I built this, if you guys are familiar with Apex, Lilu, Top Step, I'm trying to think of the others, Take Profit Trader. There's one that starts with a B, right? I built this accounts dashboard, and right here you can see it on the chart because my clients are reaching out to me and saying, hey, like my trade copier has issues and on and on. And as soon as I got started with Apex, I thought, well, I'm a programmer, I should just write my own dashboard. And so that's what I did. So here's my current status in my Apex accounts. This is a trade copier. You can see I have this PA here, number 57, selected as my master account. All these gray rows are selected as follower accounts. I passed all these evals on Friday. You can see it shows funded. When you're passed, it can also auto liquidates you when you hit funded, so you don't have to like figure out when that's going to be. You just check this box right here and it'll get you out of the account as soon as you hit that $53,000 funded level. So these are converted to PAs on Monday, which I'm excited about. And I want to show you guys because I'm the first trade of the day. Let's just walk through my trades. I want to show you I was $700 short or change of getting funded. I took one NASDAQ trade, 35 points, and all these accounts were funded. That was my first trade of the day. It was a winner. After that, I took something like 6 losers in a row, which then blew this account because it was configured to, actually, this is how it was on Friday. I had this account configured at a mini, and the rest of these are at 3 micros. So let's just look at that real quick. This is a workspace that I'm using for the presentation, so it wasn't exactly set up. But this is what it would look like on Friday, okay? It would be 3X micros, and then these were all trading minis. So you got minis on all the evals and 3 micros on the PAs. So with 3 micros, let's say 50 NASDAQ points is equal to $1,000 on a mini. So what do you do with a micro? You divide that out, right? So 50 NASDAQ points. I hope you guys are following me. This is more of an advanced sort of discussion here, but 50 NASDAQ points is going to be $300 on micros. So you're really limiting your risk. You see here, if you use Apex, this is the value. So this is the auto liquidate. So in these accounts, because they're showing orange, is because I'm within $1,000 of potentially blowing these accounts. This is the account I blew because it was trading as a mini. So obviously it goes forward, it moves up faster, but it also goes backward faster, right? These accounts are yellow because they're between $2,000 and $1,000 of the liquidate threshold. And then green, which I consider safe, is $2,000 or above the auto liquidate threshold. Why are these accounts so low? Because these accounts I actually drew money from in December, right? I drew 6,000 from, I think, 3 accounts and then 8,000 from another 4 accounts in December. And I just want to secure that money or secure those payouts, so I didn't work it, much further than 53,000 and change before I submitted the request for 2K. All right. So this is my current stats. This is where I'm going Monday. You can see 58. I've secured the 2K, right? And now that I'm trading 3 micros in this account, it really can't come back very fast, right? If I lose 100 points on Monday, that's a $600 loss on 3 micros, right? And so not trying to lose 100 points, especially if I follow my trading plan of 5 trades, it's hardly even possible. But anyways, so let's look at some trades. real quick. So yeah, what is the accounts dashboard? So again, let's just put some slides up. You just saw it. Okay, it's a trade copier and a risk manager combined. All right, one window for tracking all accounts. If you guys have questions, submit them. I'm watching my time. I'm going to try and wrap up by 3:50, I would say, or 3:55 at the latest. And I'll try and allocate 5 minutes or so to answer your questions. So the accounts dashboard is one window for tracking all accounts. I just showed you the window, right? Keep all accounts in sync with each other. That's the trade copier portion, duplicate account actions, and the risk manager portion for risk management. And you're also tracking that trailing threshold for prop firm accounts, right? So I just want to show that in a slide real quick. So back to here, yeah, let's just take a look at some of my trades. So I want to just have more of a practical conversation. So when the market opened, this is a NASDAQ 1 minute chart. So if you guys trade, I'm going to jump to this tab. If you guys trade the NASDAQ, or if you don't, I think these tools apply to any chart. So I can show you the ES too. A lot of these trades did this exact same thing. So when the news came out, it had pulled back to here. I didn't get to the office till 9. I was at the gym. As I do Monday, Wednesday, Friday at 6:30. So I got in and I saw what was happening, and really I was trying to buy right in here and just missed it. And so I was already a little bit frustrated by that. Had my order right below yesterday's close. And so what I want you guys to notice here is this tool that I think everyone could benefit from. This is my key levels confluence indicator. So you've got the pivot points, it's drawing the pivot points, high, low, open, close. Middle would be like the middle of the pink right here would be between the high and the low of yesterday. And then you also can look back. So you got the pivot point of 2 days ago and the low of 16 days ago. So you're getting some confluence in these areas. And when you have confluence, it draws a light gray zone. So my first trade of the day, guys, where I funded these accounts was right here. I got long right here because you can see the high, and I just literally had a limit order sitting at 83. And then I took profit somewhere up in here when it broke the high, actually right here, I think it was 83 to 18. Yeah, it was 18 right here, 35 points, and I was funded. And I should have just quit it because I'm going to show you, I'm trying to remember my trades, but I took a bunch of losers. I definitely was still like on the sidelines here because I was just happy with my day. But what I did here is once it started tanking, I shorted here. And I took a 20-point loss. And it stopped me out right up here. Came down, revenge traded long. Okay, another stop out. So right here was a short. Yeah, I mean, I'm just trying to show you. I'm not going to go through all these, but what I'm trying to say is I love this trade setup is because, okay, so I got some questions coming in here. So thank you, Vincent. Simon, I have my own trade copier that you're going to have the opportunity to purchase today at a big discount. So I would love for you to pick that out, man. Let's see. Losing day, do I get kicked out? I don't have rules for that yet, John. I'm trying to figure it out, man. So generally, I'm using a 20-point stop on the NASDAQ. And so the ideal trade here in hindsight was waiting until these had crossed. This is a 20 and a 50 EMA on the 1 minute chart. And then this blue cloud down here is the 20 and 50 EMA from a 5 minute chart. So it's not a Bollinger. I see that question. These are moving averages. And you see the one that jumps up and down is from a 5 minute chart. That's why it jumps every 5 minutes, because when the bar closes, it's making a big move. So anyways, and this is the VWAP, the green and the line that's switching from green to red here. So this was a short. The 20 EMA again delivered another short. And man, I just remember after these first, after this first winning trade back here, when I bought the pullback into this area, again, it was, a couple highs from pre-market pulling back to previous resistance becomes support, right? So when these cross, I like to sell the area, right? So we can just scroll through and look at every trade on that, right? So I remember after being down, guys, like I didn't take my profits, right? I took this trade when the 20 and the 50 crossed and it pulled back and clearly had an uptrend, but I didn't take my profit, right? I think I was up 20 points in this trade. I remember even buying, I thought I'm gonna buy like this pivot low, this little low right here, and did take my profits, didn't move it to break even. So just bad, piss poor trading, trying to get money back that I had lost in a couple trades here. Again, why did I short here? Because I saw this previous low. So I shorted and took a 20-point loss because I thought, man, this is a big move down. It's going to continue. And it just came up, kind of hit me. But let's see. So yeah, the crossover here, perfect touch of the 20 for a sell, and then take your money when it retests this low. Let's see, some more trades. Another crossover here, pull back into the blue, paid. Stretch this out a little bit here. All right. So yeah, the two main indicators are available that you're seeing on my charts are the key levels and the best moving average trend. So this moving average trend is what's filling these areas. And you can see when it crosses, it's a 1 minute chart. It crosses over, pulls back into the area, it's a buy. 20 MA is always a buy at your discretion, right? I mean, eventually, obviously, it turns and goes the other way. But so often I see these trades work and they work great, right? And here's another example in the afternoon when it starts moving. We get some bursts down, another high volume burst down, pull back right into this area, which is the VWAP and the red combined. Not an easy trade by any means. And I'm not here to point out trades after the fact, guys. That's why I'm showing you guys my Apex accounts, right? So I'm in the battle doing this every day. Again, not an easy trade, but you can see here, like it attempted and failed miserably to break up right here compared to this previous pivot at 241. Breakup failed, it moved down, right? Straight out of the 20 and 50 red area. You also have the 5 minute, even though the 5 minute is blue, meaning they're cross bullish, they're starting to go flat and decline. So moving into this area is a great short. So now we've just got market replay on. This is Friday. So Vincent, thanks for your comment, man. I'm not sure what you purchased, but I do appreciate your business. I see your question. I do not have any fully automated systems yet. Like, as you can see in the beginning of my presentation, not a huge believer in fully automated, but do want to get back into that as time allows, because I mean, that is a pretty neat thing if you can have a system that back tests and just consistently trades. So I'll be working on that, stay tuned. But nothing, I did the first touch indicator that I would look at. You can look at that on my website, but it's not exactly this trade setup that I'm talking about where moving averages cross and then you take the pullback in. It's more of a discretionary setup here. So again, key levels, you can see how this pivot point came into play, perfectly hit. We can scroll back and see this pivot point all day from yesterday. Played a role, right? We can see, where was yesterday's high or yesterday's low? I feel like at some point came into play. Let's look at the ES as well. Scroll back on the ES. So the ES also made a big move up on the open, and then it just tanked, right? And so this is tough to trade. I don't know what the answer is here. We did have yesterday's high right up here, so you knew this could be some resistance. But again, the crossover of the 20 and the 50, selling the pullback into that area, super low risk, and it's a short, obviously, trade. Let's see here. Crossover right here of the 20 and the 50, pull back into the area, it retests the high, crossover the 20 and the 50, sell, pull back to the 20. Again, any of these pullbacks sold, didn't quite hit the 20, but here it hit the 20 and made it to the low. These are tough. I mean, here you can get whipsawed. You're taking every trade. So again, that's where discretionary trading comes into play, right? You can see the red cloud up here, which is the 5-minute, is now bearish. And so you're cautious on is Moomoo a trading platform? Not sure what you're asking about there, Henry. So cross up, tap the VWAP. Again, I would watch VWAP if you guys don't. Just another one I would check out. So let's keep moving here. I want you guys to see some of my other tools before we wrap this up. I would really check out the key levels. There's a video on my website that covers the key levels. But again, pivot point on the ES. Look at this. The pivot point matters. So here it kind of chopped around a little bit. Nothing's perfect. You guys know this. I mean, but where was yesterday's high? Okay, we set up there in the middle. Yesterday's close, played a role all day long as well in this market. So Henry, I'm gonna have Rob put that link in the chat. It's gonna be affordableindicators.com/traders corner is gonna be the link for today. So Rob, you can go ahead and put that in the chat now for Henry and others, and we'll talk about the offers at the end of the presentation. So I want to show you guys some of my chart trading tools. So you also have the opportunity. I talked about the basic chart trader, which is right here. You see the buttons right here on the right side of this screen. Okay. Yeah, so let's look at something that offers a little bit more features, and we'll talk about risk. So essential chart trader tools, ATM strategy planning. You're seeing the ATM before you place the trade, the quick select buttons, the position sizing features. All right, that is the essential chart trader tools. Position sizing, planning. So let's take a look at that. I want to show you guys how I manage my risk on a trade by trade basis real quick. So if we look down here at the ATR, this is just one idea. I'm generally using a 20-point stop, but this can allow some tighter stops. So we see here the ATR, which is down here. This is also an indicator available on my website where you can just use the standard ATR indicator that's free with the NinjaTrader platform. So I usually have been taking this times 2. So 7.5 basically times 2 is about 15 points. On this trade, you'd want to risk around 15 points. So how does that get determined? So right here, you can actually set this. Do I not have this set up in here? Let me see. Yeah, right here. All right, so this, by setting initial exits to ATR, this is automatically going to set our target to 2x the ATR. So what does that mean? Down here, the ATR is reading 6.6, which means each bar is on average, and it's increasing right now, almost 7 points. So each bar is 7 points on average in size. So as I hit sell click, I'm able to manage my risk. I can see in this. Now this is applicable no matter how you trade. You're able to place it, or so let's say I want to sell right here on a pullback to the 50. I can pre-plan my risk. So you see I'm moving these around. So I'm moving my stop loss around, I'm moving my target around. So I'm pre-planning this entire trade. Now when this sell limit order gets filled, I'm gonna have a stop loss at 9.75 points and a target at 21.5 points. That's what I call the ATM strategy planning features. Thanks, Kevin. Yeah, there'll be a recording sent out. So that's the ATM strategy planning features. Position sizing features. Try and show you guys this real fast. There's so much in here. I mean, it's just, yeah, I need to record new YouTube videos or something. There's a lot to cover. But if I'm doing position sizing, all right, what I'm gonna do is show you this example trade. So this is on micros. So we have 10 micros, 200 bucks. So as I move this around, you can see the quantity is changing. There's 8 micros, 7 micros, 6 micros. What is this doing? So no matter the size of my stop loss in points, it's keeping the amount of micros in line with only risking $200. You guys see that? So I'm gonna keep moving around. Risk management. It's adjusting the number of micros so that every trade now I'm risking $200. So again, when I talk about risk management, I've got some great tools for you guys. I'm not using position sizing right now, but maybe I should, right? I'm using position sizing on a count basis on every trade I take. I know generally, like when I make a 3 micro trade and I lose 20 points or make 20 points, right? I know generally that's about 120 bucks. So I've got my risk in check. I can lose 5 trades and lose 600 bucks. I'm not gonna be blowing accounts, right? So that's the idea. You want to potentially risk a number of dollars per trade. And you can do that with this position sizing tool. So lastly, with the essential chart trader tools, the ATM strategy planning, where you're kind of seeing, see as I hover my mouse right here, I can see where my target and stops are going to be. ATM strategy planning, position sizing, here you can quickly toggle between ATMs. So rather than using the drop down, now you can pre-select, pre-configure your top 4 ATMs. Thank you, Joe. Bill bought the duplicate account actions and risk manager, helped me get 12 funded accounts. Thank you, Bill. Thanks, Joe. I hope you'll purchase. We got some of the best discounts ever offered today, even matching my Black Friday discount for you guys. So yeah, that is the essential chart trader tools. And then just in the effort of time, like, actually, I do want to show you guys, yeah, I'll show you some more of these. So you can enter on the bar close, right? How many of you guys trade where you get in when the bar closes? So let's say you want to get in when the bar closes, you would just initiate this button, and then as soon as the bar closes, you'll be long. Here you'd be short. You can change the direction of the bar, okay? A lot to cover. Moving on. Range bars. This is going to place an order at the known close. So we know if this bar closes down, it's going to close down here. So we already have our sell stop in place on a range bar entry. Same thing for Renko bars, advanced exit orders. If you guys use trailing stops, you can actually pre-configure your own trailing stops in this menu. Trail based on a fixed tick, ATR based on the high and low of a bar, trailing stop options, okay? And bracket. So you can place a bracket. So let's say I want to enter a bracket on the previous bar. I can do that with one click. Okay. You can place a bracket when the bar immediately or after the bar closes. So I'm just giving you a real high level overview. Thanks, Joe. Love it, man. I need to get more YouTube videos. It pumps me up. I don't have a YouTube video published on position sizing. In fact, my video is pretty outdated where I cover position sizing. So there is a video, but there's way more features built in since I recorded the video. So this is the chart trader, and I'm gonna jump into. I agree, Joe. I agree. I should be doing more of it. I'm just kind of doing a basic 20-point risk on the NASDAQ every time, which, as I proposed in the ATR, like when the market's moving faster, you need to have a bigger stop. And sometimes you might want to have a smaller stop. And then based on how big your stop is, adjusting the size of your position to risk the same amount of dollars per trade. Yes, there's a user manual, Joseph, and the accounts dashboard is a separate purchase. Roshan versus the chart trader. So I'm going to go through the offer here in a moment, and then we'll, by 3:50, we'll wrap up and answer some additional questions. So this dashboard, again, I want to show you guys what I'm going to do on Monday. So these accounts are going to be funded. What I'm going to do is I'm no longer going to trade minis, right? Because it's easy, as I did on Friday. Look, I did it Friday, right? 20-point loss, $400. 20-point loss, another $400. 20-point loss, another $400. Okay, and pretty quickly done, right? And so what am I going to do on Monday? 5 micros. All of these funded accounts are going to be 5 micros. So what does that mean? A 20-point win is now going to be $200. 20-point loss is going to be $200. So guys, if I can make 50 points a day, that's $500 a day, and I should have these accounts fairly quickly by February 1st when it comes time to draw, able to draw, able to request a payout on February 1st. Now, if I don't trade good, on the flip side, I'm still gonna be in the game, right? I'm not gonna be like having to start over on evals and different things, right? So all this stuff, like, it only matters if you can obviously make good decisions in trading, but there is an element of risk involved here. Like for instance, on this account 58, what did I do? I traded it up until it hit the level, and then I lowered the risk. So now I've kind of locked in a payout on this. Like, this payout really can't be taken from me. I'm gonna get a payout from this 58 account. So anyways, with this copier, you can easily, quickly adjust what you're doing. And like I said, these evals will be gone from this table to replace with PAs, but I'm gonna trade 5 micros. All right, I need to keep moving. Thanks, Kevin. 1 mini is the lead account. I do like to do that, Henry, and I probably still will, because here's the deal. If I lose 2 PAs, I really don't care, right? But if I lose, I don't want to lose all my PAs. I've already done that. I've already lost 10, 20 PAs in one roll. So not gonna be doing that. But if I can trade 1 or 2 of them on minis and I get it to 53, 54K-ish, then I'll just drop the risk, right? And I'll locked in at that point. So just some thoughts. But that's the advantage of Apex, is that you can trade this large size, and you're only risking what you paid to get to buy the PA account. It's really kind of insane. So anyways, let's wrap this up here. I'm going to kind of just give you guys a quick summary of everything I covered and what I'm offering today, and then we'll have a few questions, and by 3:55 we'll hit the next presenter. So the basic chart trader tools. Yep, Simon, Kevin, yep, agreed. Micros equals profit, no doubt. So basic chart trader tools is normally $195. Today you're gonna get my chart trader, again, that replaces the standard chart trader with all these features at 40% off. You want something a little bit more advanced. Well, okay, so this is the accounts dashboard. So yeah, first of all, we got the basic chart trader tools. All right, and we got the accounts dashboard. And don't worry, it's all on the website summarized for you. So don't worry about taking notes. I'm going to give you guys a link where you can see the offer and take advantage of it. All right, so accounts dashboard, this is my trade copiers. A bunch of you are asking about this. I call it duplicate account actions. And you also have the option to purchase account risk manager. Each of these products today are $175, normally $295. $175 with the 40% discount. I just showed you guys the essential chart trader tools, normally $995. So if you want to go a little bit more in with me on the chart trader, this is going to give you the ATM strategy planning, the position sizing, like Joe, you talked about, been looking for this for years. Position sizing, quick select buttons for the ATM strategy, the planning features, the one-click placement, 40% off, $595. Other features I showed you, bar close, bracket, advanced exit orders management, where you get the trailing stop, the Renko and range. Again, all of these things you can add. It's one indicator, one chart trader, multiple different products that you can purchase, okay? Each of these features is also, everything's 40% off. So you're looking at $295 for this. And then lastly, I think there's a few people in here that would want to go all in. And so I really believe, if you guys have seen my chart trader, maybe you've been in several presentations and you've seen me talk about this. What I want to offer you in this webinar for live attendees today is if you purchase my professional chart trader tools. This is normally $4,000. You're looking at $23.95 with the 40% discount. If you make this purchase, you're going to get every single feature that's built into the chart trader. So the basic chart trader tools, the enhanced with the position sizing, right? Then all the features, bar close, bracket, advanced exit orders management with the trailing stops. You're going to get the whole thing with this purchase, what I call the professional chart trader tools. And I'm going to throw in the key levels confluence indicator, which I showed you guys today, is what I'm using for, and that's a typo. I'm going to see if I can change that. There we go, 195. The key levels confluence indicator and the best MA's trend indicator. These are the two indicators mainly that I'm using to trade every single day in the charts I showed you guys. So I'm going to give you those indicators if you purchase the professional chart trader tools. All right, and make sure at the top of my website you check out the testimonials. Right here, very top of the website, you can see the green stars. Please look at that. Lots of great reviews about my trade copier, my other products lately. And then here's the offer. So Rob, if you could paste it in again with the link that hopefully is clickable. This is the offer page, 40% off everything. And again, guys, not sure, I don't like to do this, but not sure if I'm gonna always offer 40%, right? It's a big discount. I wanna save it. I've been using it at Traders Corner, but I really wanna save that discount for holidays and a few events throughout the year, right? So I'm giving you this opportunity here. Could be the last time for a while at 40% off the entire website. What I wanna do is offer like special, sorry, something happened there. I want to offer like special discounts in future webinars, like maybe certain products go on sale or something, but this here is 40% off everything. Henry, you're looking at the essential chart trader tools is going to be below. So let's look at this page. If you guys have went to this page, Rob put it in the chat. You can click the link here. I've laid it out everything, and I want to respect the next presenter coming in. I think it's Rory. Excited to hear from him. As always, excited to hear from him as well. But this is the page you guys are going to see. Henry, if you want to get started with something, any of you guys want to get started with something, you know, less costly, I guess you could say, always happy to upgrade you later for the difference, right? So this is what I would recommend if you want to go below professional, is the essential chart trader tools. Like we said, position sizing, ATM strategy planning and things. But it's all laid out. You can hit these more information links. Coupon code is going to be corner 40 on the cart page. Here's the features. Trade copier is right here. Duplicate account actions, account risk manager. Again, when you guys ask separate purchase from the chart trader, you've got these products. Lastly, like I said, I want to do this for the first 5 customers that buy my professional chart trader tools and go all in. I'm going to give you that key levels confluence indicator and the best MA's trend indicator. So Henry, I can, depending on what you purchase, help with the setup. I try not to. I built the website in a way that makes it so easy to download, put your machine ID and license on your own. But man, I want to serve you guys. And so if that's something that's important to you, I mean, I will do my best to be available to help. It's just me behind this screen, and I got a part-time website guy, and I'm trying to bring my dad on board right now, actually, which is super fun. But yeah, I would love to do that. That's something that's important to you, and you need that help to get it set up. So especially if you purchase like the professional chart trader tools, no doubt I will spend the time with you to set it up. So guys, that's a wrap. Man, what a cool opportunity we have in January just to continue this journey in futures trading, and just honored that you guys would give me your time and be here to hang out on a Saturday. Yeah, that's all I've got. So thank you. Thanks, guys.
Guys, if you want a recommendation, Joel did give me a super deal on his indicators as well, and I switched back to Ninja specifically to use them, and the ease of them to just point, click, have them preset, your stop predetermined, you know, the ability to drag your take profits a little further when there's momentum. They're a game changer, and over the course of time, they will absolutely pay you back with dividends for their purchase. But, ladies and gentlemen, Mr. Joel Wyse of Affordable Indicators. Sounds like you have a plan for 2024, Joel. Great presentation. Thank you so much for making such an incredible offer again to our audience today. It's amazing just how powerful your tools are. Ladies and gentlemen, if you'd like these, the most powerful tools in the game, trade copy or trade management tools available on Ninja, Mr. Joel Wyse of Affordable Indicators has given them to you at a tremendous discount. Now's the time to transform your Ninja into a super Ninja. Joel, it's always nice to have you on the show. Happy New Year to you, and we can't wait to have you back again.
All right. Thank you so much, Ron. I love when you say super ninja. And appreciate you giving me a little extra time. I know we're a little bit behind, but man, I'm excited to stick around for the next presenter as well. So thanks a lot, man.
Well, the fact that there's only one presenter after you, and he is a fan of yours as well, I didn't think he would mind.
Okay.
But
Yeah. Thanks, Jeff. I see you in the chat. Thanks, everybody.
be well. Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and our final presenter will absolutely not disappoint. I hope everyone is listening closely because he's a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader Self-Learning Technology is Mr. Rory Powers of Right Line Trading. Welcome back to Trader's Corner, Rory, and Happy New Year to you too, sir. Check your mute button, Roar. Rory, are you with us? Did you step away? Do I have to go on mute and send you an email or try calling you and get you back to the desk? Bear with us, everybody. I'm going to give Rory a little bit of a rouse and make sure he's available.
Hello? You can't hear me?
I got Rory. I confirmed he's having a little bit of an audio issue, but he's present. We're just waiting to hear him. And just to throw it out there, I hope everybody enjoyed all of the presentations today. I know I get to see them all multiple times, and I do tend to pick up something new every time I see a presentation again. Roar, we can see your mouse moving, but we can't hear you yet. Just to throw it out there, I usually log in from multiple devices. If you have to get in from a phone or an iPad as well as your computer to use one for audio and one for the presentation, that might be an idea. If anybody's old enough to know the song, I'm tempted to start singing Ground Control to Major Rory. We're still waiting to hear you, Rory. Do you got to log out and come back in? Should I hand control over to Brock? As a matter of fact, Ray, yes, he did, and somebody else remade it. I do like both versions.
Testing, testing.
Testing successful.
Oh, okay, great. Sorry about that. I had to dial in on my phone. Uh, my headset seems to have broken, so I really apologize. Thank you for sticking around. And man, that's a tough act to follow. Joe Wyse, Affordable Indicators, really a master at his craft. Thanks for sticking around. I'm going to try to make it worth your while, and I really think that I will, because we have a really exciting system that I'm going to be presenting today. It's called the AI Auto Trader, and something new and exciting is the self-learning technology component that's now being integrated into the trading system. So it does have we're actually implementing that self-learning technology now, and it is a system that is based on mathematical modeling. So let's go ahead and get started. I do apologize again for the technical issues. Very briefly, let's get the CFTC out of the way. We sure don't want any alphabets of the federal government knocking on our door. And I just want to take a moment to just mention that I am not a licensed trade advisor, that this is for demonstration and educational purposes only. If you're not familiar with the risks associated with trading, please consult a licensed financial advisor before taking any trades. With that being said, let's go ahead and get started. I'm not going to spend a lot of time, but I do want to recognize and acknowledge my team. As a team, our vision is to develop innovative trading strategies that help predict the future direction of price. And man, what valuable information that is. And we want to provide these trading signals to provide our clients with an edge when they're trading the markets. One of our mandates that we had in mind when we created our indicators was to follow in the flow of institutional money, to follow in the trend that they create. We've also, over the years, bright line trading has been around for 12 or 13 years now. It's also a goal to continue to build a community of traders who help collaborate and support one another along their trading journey, and all done with transparency and integrity, which is really qualities in this industry that, they're not very common. But listen, I'm not a mud thrower. There are very good, transparent, and have great values members in this niche. It is of great importance to us to be transparent and have the utmost integrity. With that being said, the trading signals, and I think what distinguishes right line trading from a number of our competitors is that we're actually on the right edge of the chart trading our system. I listened to Joel's presentation directly before me, and he's a trader himself. And I think that speaks volumes. To have a system and trade it on the market, where you're not just a marketer, is a big difference. Our inboxes are filled with Monday morning quarterbacks who told you how much money they made yesterday or last week, and they can tell you the trades that they took yesterday. But in real time, you never really do see that they actually took those trades. Well, I think that's what distinguishes us. We have David Kushner, David Wyse, Craig Emery, all professional traders. David's our prop trader. Craig's our futures trader. David Wyse, our options trader, all on the right edge of the market, on the right edge of the chart every morning for that opening bell. Behind the office, I'm joined by a very educated team. Mark Sachs, who's the founder of Bright Line Trading, has a master's degree from the University of Pennsylvania, a former professor. Sergio Luque Rodriguez has a master's degree in computer science. Charles Sider, been in the industry for 30 years in software development, optimization, and he is a true blue engineer, software engineer. He's a graduate of UCLA. He has his master's degree as well. Brock Miller, one of the newest members of our team, is getting his degree in computer science. I'm a graduate of Syracuse University. And Mark Miller, who is the leader of our team, he's the owner of Right Line Trading. He has his MBA from Cal State, and he is a military veteran. With that being said, let's keep the ball rolling because I've got some new information that I want to share with you. I always like to put a personal slide. I think it's important to know who's the guy that you hear the voice of. My name is Rory Powers. I live down in South Florida. And I've got a few of my favorite things up on the screen. I love to go saltwater fishing, and I love my two little girls. I've got a 5-year-old. Well, she'll be 5 in March. And my little one is going to be 1 in March as well. And you can see I found down it's a place called Stiltsville. It's in Key Biscayne, which is south Miami. I found this little honey hole for snappers, and we've been having a really great time fishing out there. So I'm a huge Miami Dolphins fan, and they're in the ice cold in Kansas, if you're an NFL or football fan, tonight at 8 o'clock. I'm kind of afraid what's going to happen with the fish up in the ice. It's going to be sub-zero temperatures. But let's get back to business. Listen, the genesis of why we created our AI auto trader is because if you've traded, you know that, listen, it's not as simple as those marketers or those emails tell us it's going to be that everybody sends us. We've all experienced problems with consistency and making money trading. A lot of us, including myself, suffer from emotional errors. You know, when we have money on the line and we get into a trade, we have a tendency to sabotage our own trading. So, listen, I'm one of these people that when I'm in a trade and it starts going in my direction and I see that green, that profit on the P&L turn green and start going up, I immediately want to move my stop and I want to lock in as much profit as possible without giving the trade room to breathe and mature. And I'll squeeze my stop. And at the same token, if the trade goes against me, I'm going to want to bail out. When that P&L turns red and I see I'm starting to lose money out of my account, I want to stop the bleeding quickly. Well, listen, those emotional bonehead errors that I made, I've talked to thousands of traders over the last decade. And let me tell you, these are issues that we all share. I heard a presentation on Traders Corner, and I always love coming on Traders Corner. It's a great event. But I heard a presenter, he mentioned that personality traits, that human beings have 12 or 15, I forget the exact number. They have 12 or 15 traits. And, if you have one of those, if your personality is one of those 12, then those just don't lend well to being a good, disciplined, emotion-free trader. Well, I can tell you for sure that I'm one of those 12. There's only 2 or maybe 3 of those personalities, a very small percentage of people, that they're predisposed. I don't know if it's genetics or not, but they're predisposed. They have the personality traits that lend well. They're disciplined. They're emotion-free. Maybe those are the engineers like Charles Sider. I don't know, but I'm not one of them. Okay, so I know that revenge trading, making impulsive decisions, trading with indicators that just don't work, lacking a proven trading methodology, whatever it may be, we've all suffered from inconsistency. I've quit trading, I can't tell you how many times, but I always come back because I always want to succeed, and I'm not a quitter. And this has been our commitment. This is really the genesis of why we made our commitment to bring this to an end, and the genesis of the AI Auto Trader. So that's the system that I'm going to go into, and I just want to give you just a little foundation of the AI Auto Trader. I think it's important that you know that this is a system that runs on NinjaTrader 8. NinjaTrader 8 is an extremely powerful futures trading platform, and it's a free platform. No longer do you have to pay to use NinjaTrader 8. NinjaTrader has their own brokerage. You can open an account with Ninja. Most of the prop firms that you can open an account with also support the NinjaTrader 8 platform. So this slide is, what it's saying is, when that opening bell rings, we really as traders have no clue which way that market is going to go. We can listen to the talking heads. We have our own biases and our own opinions. But when it really gets right down to it, what really tells us is really the technicals, the technical analysis. And our software, that's our goal, is to provide an edge on which way this market's going to go. So we've narrowed it down to two things that we feel create trading success. Number one, we have to have the proper tool set. I always like to use a little bit of biblical terms with David versus Goliath. David came to the fight with a slingshot against the giant. Well, listen, it worked out well for David, but it would be a little crazy to come into the live market without the proper tools to go up against other retail traders. We're not going against the hedge funds or the big banks and algorithms, institutional money. We're just trying to follow in their footsteps. We're trying to have an edge over the other retail traders. Ideally, we want software. I want software. I like to put it in the first person that can automatically get me in and out of trades. I had a lady I spoke to, I forget her name, but she was very interested in one of our discretionary systems, which is an excellent system. And she asked me, which one do you think would be better for me, the discretionary system or your AI auto? And, in all honesty, from the years that I've spoken with traders, my answer was pretty simple. I said, listen, I can tell you to go ahead, and I think the discretionary component would be great. But nine out of 10 people after a year or two come back only to buy the automated system because they just couldn't trade on a discretionary basis. And I'm one of those 9 out of 10. I fall into the majority. So ideally, if you're one of those people that is struggling to find consistency, that has these emotional trading errors, we have a solution for you. And it's a system that can automatically get you in and out of trades to maximize your profits. Now, the benefits from using our AI Auto Trader, it's going to eliminate that discretionary component. It's all going to be automated. The decisions are rule-based, and they're written, digitally in stone. They cannot be deviated from. The system doesn't make human errors. It doesn't have emotions. I kind of like to bring Michael Jordan the famous basketball player. In a fast-moving market, let's say on the NASDAQ, for example, and you're looking at the NASDAQ and you're trying to follow your rules-based system on a discretionary basis, you kind of have to be in the zone. You have to fade out all of those other things that are going on in your life, the kids in the background, the telephone ringing, and you have to be laser focused on making sure that you're going to follow each and every rule for your entry. Well, this eliminates that. The AI auto trader puts your system in the zone like Michael Jordan, who can perform in front of 30 or 40,000 screaming hostile or excited fans with the world championship on the line and the trophies and the MVPs, and he can hit shot after shot behind his back and through his legs like there is no tomorrow. I'm definitely not the Michael Jordan of trading, and it's been an expensive learning experience. So those are the benefits of having automation. It eliminates all of the human discretion, all of the emotion. It's going to put you in at the opportune times with optimized stops and profit targets. You're not going to cut your winners short. I'm not going to mismanage my trades, which, let's face it, we don't like to think about it. We kind of, I know I don't, but if I do think about it, over the last 10 years of cutting winners short and mismanaging my trades, it's become very expensive. These are expensive mistakes that have added up. So this AI auto trader eliminates all of that. So I want to briefly go over 3 of our top performing strategies. And then I want to tell you about the logic behind it. It's not a black box system. We're not going to ask you to enable an automated strategy and cross your fingers and toes and pray to the good Lord that it works. We want you to have a clear understanding of exactly what triggers a trade, the conditions that have to be met, and how the trades are managed. Okay? So our first strategy that I'd like to highlight is we refer to our cash register. We've named each one of our robots an endearing name. This one happens to be our cash register, and it runs on the S&P 500, either the micros or the E-minis, and it trades on a 5-minute data series. And the interesting backstory on the cash register is we collaborated with our options trader, David Wyse. David Wyse trades what they call the SPY super system. So he looks at the S&P 500 ETF. So he's very knowledgeable when it comes to the ES or the SPY. He's been watching it for years, 8 hours a day, 5 days a week. And in collaboration with David, we've set up some nice conditions that leverage the gear oscillator for momentum. We have rules that are based on the VWAP and market structure. It also looks at market internals in order to trigger a trade. And once all of the conditions are met, the system will automatically enter and it will manage the trades on your behalf. What kills, I just want to regress just for a minute, because I just mentioned trade management. And I think really one of the biggest things that hurts us as futures traders, and again, in the first person, has always hurt me as a futures trader. When I cut my winners short, okay, what it does, not only does it feel terrible to see it continue on and, I've left so much money on the table, it hurts, but it also hurts our risk to reward ratio. Our winners, ideally, we would like to have them bigger than our losers. I can't tell you how many times trading the futures, I've taken 2 or 3 trades and they became winners and I was feeling great. And I took a 3rd trade and it wiped out all of those winnings that I had just made on those previous 2 winners. So 1 loser wiped out 2 full winners. And that risk to reward ratio on this cash register is at a 3-to-1. We've recently changed the ATM, and I'm going to tell you how we did that. But the strategy now is we'll enter a trade with one profit target of 28 ticks. So it's going for 7 points, and it's risking just 10 ticks. Okay, 2.5 points. It's risking 2.5 points to make 28 ticks. And it's right about a 3-to-1 risk to reward ratio. And I'm going to get into how we came up with that. It's not just because it's a 3-to-1. It's based on the data and the current market conditions. So let me show you this is a recent comment. We have a great community of traders in Discord. If you do decide to become a member with us today, part of our trading family, you will become part of our Discord community of traders where we all share what's working, sometimes more important, what's not working. As a community, there's power in numbers. But the cash register now has, over the last several months, has become one of our most consistent and profitable strategies. And it's starting off the new year, really where it left off back in 2023. January 1st to January 12th, it's up about $1,741. And if I pull over a chart of the cash register, and we could take a look real quick of the indicators that the system leverages in order to trigger a trade. I'm sorry. And we can also see the entries that the system took this past week. So this past week, this one looks at, remember, what triggers a trade on this? You can see my Laguerre oscillator is this black, the RSI line is this black line within the Laguerre oscillator. When my Laguerre oscillator goes up beyond the 80% point and breaks down back through it to the downside, it's going to trigger a trade. It looks at market structure and market internals, but we know we have momentum headed down, and it also looks at the distance to this area of support or resistance. We have to have a clear path to our first target in order for this system to take a trade. So it took this entry at 11:45 approximately. It entered short. It went down and it hit our first profit target and came back and got stopped out on our second target. So you could see that trade succeeded down to the downside. Then the RSI line came back. It broke up over the 20% line, took this trade long, and came up and hit a full target of both targets for 2 targets. So this was 2 trades here where it hit a first target, and then it took a full winner. And I could scroll back and, pretty much show you, and I think it's important to know that these results that I'm sharing with you are not back-tested results. I've seen other presentations before, and listen, I'm guilty of it too. Back earlier last year in 23, NinjaTrader has what's called a strategy analyzer, where you can backtest your strategies. Well, we learned after a month or two that they're not reliable. They just don't take into consideration true market conditions, the variables that go along with it. So it skews the results. You can't rely on them. You can run a strategy in the strategy analyzer and get outstanding results, and then you'll enable it on a live market. Joel, I heard him say a little earlier, yeah, sure, if it's a strategy you could backtest and optimize, then yeah, but the strategy analyzer in Ninja is not reliable. So if you ever do see a webinar and they show the strategy analyzer and not a true trade performance, it's kind of a red flag. So with that being said, all of the trades that I'm highlighting here today are all taken on a live market. And I'm just going to scroll back just a little, just to show you some of the signals that the system does provide you. Again, all of the trades are not winners. Here we took a long trade. It broke out from the 20% line on the RSI line, took a long entry. And it looks like it did hit the target there, and it jumped back in short coming down, and it went on for a full winner here. So it did work out very well on that trade as well. So I don't want to take too much time on the ES because I have others. So it's a very conservative strategy. I've talked to a lot of traders. They've told me, hey, you know, I've used other automated systems and they just overtrade. They take too many trades. They're all over the place. This one averages probably 2 or 3 trades per day. If I pull over my, let me see. This is my performance here for this month on the ES, on the cash register. And you could see that this month it's taken 21 trades. So 21 trades this month, and it's up about $1,741. And this is a trade performance. This isn't a strategy analyzer. So let's keep the ball moving. It's a great strategy that we've been running for several months now. So let's keep the ball moving, and let's go to the haymaker. One of our more exciting strategies is our haymaker that runs on the NASDAQ 30 range. The 30 range NASDAQ, man, I like to kind of equate it to driving a Ferrari. If you've ever traded the NASDAQ, you know what I'm talking about. It can really run. Very volatile, very fast moving, very exciting to trade. But you could see in a fast moving market that this system, you could see the conditions that are dynamic when the market's open. All of the conditions are written at the top of my screen in this indicator here. Once all the conditions are met, you'll see on my chart a green cross that comes up. These green crosses mean that all of the conditions of my strategy have been met in order to fire a trade. If I do have the strategy enabled, it is going to fire the trade. However, if it's not enabled, I'm going to get this indicator give me an entry signal. And the entry signals on these are just really beautiful entry signals. I know we do have a number of traders that, they like to run automation and take some discretionary trades. And if you fall into that category, this system will suit both of those goals. So I could scroll back on this and just show you some of the entries that this system has taken. What's very interesting about the haymaker is it has a 4-to-1 risk to reward ratio. That's why we kind of call it the haymaker. The NASDAQ, we found statistically for the NASDAQ to move 100 ticks, it happens quite frequently. So it gives us the ability to have a risk to reward ratio of 4-to-1. We risk 26 ticks to make 100. Okay, 26 ticks of risk, which is going to be about 26 times 5 is, I believe, about $130. And we're going for 100 ticks, which is $500. So to risk 130 to make, what is it, 5 times 26? Yeah, 130. So it's it's about a 4-to-1 risk to reward ratio, between 4 and 5 to 1. And then wait until I show you. We've recently changed this to a 1 contract strategy. We have a lot of prop traders, and we have a lot of traders that trade this on a live account. Nobody likes to take drawdowns. So we have a 1 contract strategy. Once we're up and in the green, if you're trading a live account, you want to scale up. Within the strategy parameters, we can always add additional contracts. So you could see on this strategy the beautiful entries that it took all week. The NASDAQ was very volatile, and I'll show you the results. This new NASDAQ, that some of these entries, these signals for entries were just beautiful. And let me show you the performance. week on the NASDAQ, on our haymaker, on this new strategy, since we've implemented this new one contract strategy. The trade performance this week on the haymaker was $2,307. And that's the new haymaker that trades a one contract strategy. Okay, and that's on the NASDAQ on the 30 range. So $2,307 this past week. Just implemented our new self-learning technology. What we're doing is we're spoon feeding it. I'm going to go into that in just a minute. But we're using optimized settings based on our AI technology. And I'm going to explain how that works in just a minute. And let me tell you, it's really working. It's making a huge difference. So that's our NASDAQ 30 range. I want to throw a shout out to Leon. Leon is our old truck driver in Massachusetts. And this week he enabled the NASDAQ strategies. And it was almost accidental. He risked more contracts than he really thought he was risking. And he wound up taking these two winners on the NASDAQ that were, 100 tick targets, wound up making $3,000 in one session, really within an hour or two. It was a quick move down at 10, and then a quick move up at, I think, 10:30 or so. And he was up over $3,000. It's hard to see in this image, but it's in our Discord chat. So listen, we're trying to get old Leon out of that truck, and congratulations to you, sir. So $2,307 this week on the haymaker. And listen, we have a new strategy. I shouldn't say new. It's one that we've been testing and optimizing for several months. But I wanted to highlight it. Crude oil, one of the reasons why I really like crude oil, this is a strategy, we call it the black gold, kind of like the Beverly Hillbillies, they call it the black gold. Crude oil, this strategy also runs on a 15 range data series. And this is really where I think it's really important that you have a diversified portfolio. This is a very news-driven market that, this is a perfect example with crude oil. You know that there's political unrest in the Red Sea right now. Tankers are rerouting. There's volatile conditions in the crude oil market. And our AI auto trader sniffs it out, and it thrives in those market conditions. And man, has it gone to town on this crude oil market. We have two management strategies. We have one where you could trade one contract, and then we have another that we trade two. But remember, in the settings, we can always scale up. These are all adjustable settings. So the one that I'm going to show you the results of, the one that trades two contracts. It trades two contracts on the CL. That strategy risks 30 ticks to make 45. Okay, so about a 1.5 to 1 risk to reward ratio. And let's take a quick look at that chart. If we open up the crude oil chart, I had to call in with my phone. I'm kind of holding it with one hand and trying to work on the charts with the other hand. But you can see here that the entries that this strategy took, this isn't a back test. This is trades that the system took on a live market. Okay, all of these are the conditions that must be met. Now, I know what gets lost in this message, and I want to bring it up before I forget it. I've showed you the ES, the NASDAQ, and now I'm showing you crude oil. These are all strategies that are running simultaneously. Okay, they're all running together. So imagine if it was you or I trying to trade 2 or 3 different instruments at the same time, trying to calculate all of these conditions that define risk, that show us the optimal time to enter a trade where risk is at its lowest in a fast-moving market. Man, I mean, you would have to literally be a Michael Jordan, to have that ability. I only wish that I had that talent. But this system has it, and it has the power and ability to do it. And I'll show you. Right here yesterday, you could see at about 11:10 or 11:15 in the morning. Took some beautiful trades here. Took a short entry for a winner. Got stopped out on the second. Actually took two entries here. This is the first entry. This is the second entry. And these beautiful signals. This was, after hours. So our system is time optimized. It will only trade during the time periods that we've defined as being the optimal times. And that's the power of having a self-learning system that I'm going to cover in just a moment. I want to show you the entries that this system took because on crude oil. So let's go back here. Another short entry here for a winner. Here, caught this long move. Just winner after winner on this move up that it was able to get into. So crude oil has been, one of the best strategies lately with this volatility that's going on, created by, one of the reasons I believe is the unrest in the Red Sea. But you can see the signals that the system provides you. Even if you're outside of your trading hours and you see these red crosses, those are great entries. Some more short entries. So day after day, I can keep scrolling back and keep showing you the trades that it took. But I have a limited amount of time, and I know this has been a long presentation. So rather do that. Let me just show you the P&L. Let's go right to the numbers. This is not a strategy analyzer or hypotheticals. This is what happened on a live market. This month, the system is up $2,000. It has a very nice winning percentage. It took 28 trades. It's a two-contract strategy. My second profit target goes to break even once I hit my first. So I'm right about $2,000 for the month of January. So these are all strategies that are traded simultaneously within the NinjaTrader 8 platform. And January 1st to January 12th, I just showed you, it's up $1,963. And one of our more powerful strategies. How much capital is required to run these strategies on auto? That's a great question. If you're going to trade the micros, you can get away with probably an account size of $2,500. If you're going to trade the E-minis, we would recommend $7,500 to $10,000. Now, with these one contract strategies we're doing on the E-minis, you could probably get away with the former, but you don't want to underfund yourself out. I'm going to go over the self-learning right now. So let's do it. So our weekly results, what we do is every week in our Discord chat, we take it, our whole team is running the strategies. We have a number of servers as well, and we take an average. No two computers are going to get identical results. They'll be very similar, but listen, even a tick of slippage on one entry can cause a disparity between results on two computers. Okay, usually the results are very close and comparable. So what we do, to be fair, is just and not to take just the best results, is to give you an average of the system running on about 5 different machines. So every week in the Discord chat, we post the weekly results. These are the ones we posted this most recent week. And being in Discord, we also post the updates. And that's what I want to talk about now. I talked earlier about what distinguishes us from our competitors. First being is we're trading the system on a live market. The second being is 2024, we're in the process of integrating brand new machine learning, self-learning technology into the AI auto trader, which was always our vision from the beginning. And now it's actually coming to life. And let me just take a minute just to tell you what I mean by machine learning. The machine learning is we have what's called a closed loop system. And the aim of the system, of course, is to optimize the settings of the trading system based on the data analysis of the current market conditions. So this closed loop system streams the data continuously through the system, and the AI, the artificial intelligence component of it will dynamically adjust the parameters of our ATM strategy first, and then the components of our trading system, and adjust them based on the market conditions. Right now we're starting with the trade management parameters, which, let me tell you, they're so crucial you have no idea. I've really had the opportunity to work together alongside of a world-renowned AI lab. We collaborated in order to put this together. Very prestigious AI development lab. They've developed the closed loop system. It gathers the data from previous trades, and it gives the system the ability to constantly optimize our stops and profit targets. It looks at the MAE, the MFE. I don't want to go into too much depth, but it's an extremely intelligent system that nobody else has. Okay. As a result, the system looks at many possible input combinations. It finds the ones that result in the best performance. Okay. So this is advanced machine learning algorithm. It continuously optimizes the stops and targets. Now, what are the benefits of having a self-learning system? Well, the self-learning AI system, like I just mentioned, provides you with the ability to adapt to changing market conditions. Listen, that's been the biggest knock on automated strategies. I can't tell you how many people that I've spoken to, including myself, that had a strategy that worked for a week, that worked for a month, but market conditions change and it no longer works. It's stale. And let me tell you that 99% of the automated strategies that are out there, that becomes a major factor. And this is going to put that to an end. This is going to constantly adapt to the changing market conditions. What it does is it looks at real-time analytics, and it addresses the changing market conditions in split seconds. It's going to dynamically change your inputs. And the way that we're doing it, without disclosing some of our proprietary, technology, it's really, it's very impressive. It's very impressive. We kind of have a drone that, trades the market, with very wide parameters that sends information through this closed loop system that optimizes the actual system that's trading. It's just incredible. So it's able to handle an enormous amount of data at tremendous speeds and with very short reaction times. This is something as humans that we just have a hard time doing, unless you're a Michael Jordan. It's calculating an amazing amount of data, and it's making split-second decisions and dynamically moving your inputs. What does that mean? Well, it's going to, on every trade, it's going to lower your risk. It's going to improve your accuracy. And that is, the key advantages of this self-learning AI technology. The tremendous amount of data that it can run through its brain, so to speak, and dynamically change its inputs is a real game changer. And really pleased and proud to be part of a team that's, technologically really cutting edge technology that we're providing. So that's the self-learning component of the AI auto. As I mentioned, we're going to be starting it with the trade management, and it's going to be moving to all the inputs of our strategies. Now, let's keep moving. I want to go over the special offer. I know I've gone over, and I do apologize, Rob. I'm wrapping up right now. Part of the special offer, and we always do something special for Traders Corner, and today is no different. What we're going to do, if you decide to come aboard over the weekend, when you check out, you're going to get instant access to this. We have amazing tech support. We've got Charles, Sergio, myself. We're going to get on the screen. We're going to do a remote support session. We're going to set up an account, a SIM account to start for each one of our strategies, and we're going to make sure that it's running optimally on your computer. Okay, we're going to do the heavy lifting, and we're going to set it up for you. And you will have instant access this weekend. You will become part of our Discord trading community. I mentioned earlier, there's power in numbers to learn what other people are doing well with, and sometimes even more important, what they're not doing well with. So you can kind of sidestep those landmines. That's valuable information. You'll be part of our family of traders in the Discord chat group. You'll get a 2-module masterclass series on how to build your own strategies. We have very in-depth videos that we've gone over every single one of our parameters, so you have a deep understanding of how this system operates. It also provides you with the ability to create your own strategies on any instrument and any time frame. So the pricing, this is what we're going to offer. We're going to do both the discretionary and automated systems. Everything that I showed you, the chart templates, the strategy templates, the entire workspace is all going to come pre-formatted. If you want to enable your automation, it'll trade automatic. If you want to trade it on a discretionary basis, it's going to provide you signals that have been tested that are in optimal locations. You can do a monthly subscription right now by using coupon code SAVE$200 for $4.99 a month. For the quarterly subscription, it's kind of like a buy 2 months, get the third free on our quarterly. Use coupon code SAVE$500 and your quarterly subscription is going to be $333, breaks down to $333 a month. And our best value, and I'm going to escape out of here, our best value is going to be the annual membership. The annual membership is with the coupon code SAVE50%. We're going to actually, and this may be the last time that we offer this 50% discount. With this new technology, it is expensive to have it develop. If we take that $16.99, because that's what it comes down to, $16.99 for the year, and we divide it by 12. Okay, that's $141 per month over the course of a year. For $141 a month, to have the potential that this system provides you with, I'm telling you, it's the best investment that I know of on the internet today. Looking at old Leon on Friday, winning $3,000, in under an hour, this system can do it for you. And for $141 a month, you're going to get all of the updates that are coming. We're continuously updating the system. Our first one's coming February 1st, where everything will be dynamic. The system will self-optimize and learn based on the market conditions. That update is coming this February. Don't wait until then. I'm telling you, this price is going to go up. Get in now. February 1st, you'll have it. What we're doing is we're taking that data and we're using that optimization process to share with our members every week what those inputs should be for the coming week. So although you will have to put them in manually for the first few weeks, come February 1st, it's going to be done dynamically. Okay? So the annual option for $141 a month is going to give you the system for a year with all of the bonuses that I just mentioned. To check out, you could just very simply go to our website. Let me put it on speaker so I can type. And if I go to trading systems, I'm going to click on the AI Auto Trader, and you'll see the webinar replays. And to check out, we're just going to click on the annual, and I'm going to put in my coupon code at save 50% and apply that coupon. And what it's going to do is automatically bring your price down by 50%. Okay, so that coupon code is going to be good through the end of the weekend, through Sunday night at midnight. How many contracts does it trade on the NASDAQ? Right now, we have a one contract strategy. However, those inputs are totally adjustable based on your risk tolerance. Once you, what I do is, once I have some of their money in my account, that's when I start scaling. Okay? Listen, I've taken a lot of time. If I haven't gotten to your question, please put your name and your number in the chat box. Put your name and number in the chat box, and I'm going to give you a call. If not this evening, I'll try to call you today, or I can call you on Monday. Listen, this weekend we have a great holiday, one of the greatest orders in the history of our country, Dr. Martin Luther King Jr. We're celebrating his birthday, and every time I hear one of his speeches, man, I tell you, it brings goosebumps. God bless him, and I hope everybody enjoys